Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now onto the show.
All right. Hello, everybody. Welcome back to probably the biggest stream of the month. Today is CPI. We have a bond auction. We have the Bank of Canada. And last but not least, we have the meeting minutes today. What we're about to get, guys, in about 15 minutes is probably some of the most important market data that we've had in months. And I know it feels like I say that often, but genuinely, this is a really important inflation point. And I'm going to show you all that. I'm going to basically, today's stream is going to be going on nonstop all day long for the next, well, let's see, like 6 hours. We are going to be streaming all day long, whether it be me or we rotate in other hosts to help take over the show for a little bit. We are going to be streaming for a long time. It's going to be a lot of fun. So stick around. I just want to say, as we start this out, there's 500 of you guys. Can you guys do me a big favor? I would love to break a live stream record in terms of the number of likes that we get on a stream. So I want to ask a favor from you. Can you help us kick it off today? We're going to be live for 6 hours, so I feel like a lot of people will rotate in and maybe they can help us with the like count. But do me a quick favor as we start out the stream, smash that thumbs up button as we get started here. Again, it really does help out the channel. So if you're a fan here, if you're trying to support us, that's a free way to do it. Just hit that thumbs up button on the stream. With that said, guys, today's number is so important because, well, inflation in the United States has been stubborn, to say the least. I want to show you something. I'm going to show you the European region versus the U.S. region. The United States. Okay, look at this. So inflation, let's do U.S. first, has come down. And this is going back, by the way, I'm looking at April of last year until now. So it came down and then it spiked back up and then it rotated back down. And now it's kind of staying flat. Today is a huge question mark. Because if today, I've said this all over on my Twitter and on my Instagram and stuff. Look, if you get a hotter than expected inflation read today, it's 3 in a row that have been higher than what forecasts were calling for. And if that happens, guys, we are talking about potentially, I don't want to overhype it because maybe it won't be, but I'm thinking it might be like Armageddon in the markets. Because if you get 3 inflation reads that are hotter than expected, you can pretty much rule out that it's just some sort of blip in the data or some sort of seasonal, oh, well, it's the beginning of the year, you know, it's a hot time. If you take all of that out, after 3 months, you can't really make any more excuses. At that point, you just have stubborn inflation. So are we going to get a hotter than expected read today? And is that going to scare the markets into selling off? Or is the inflation data going to cause the markets to cheer and celebrate? Is it going to come in cooler than expected? Right now, forecasts are calling for 3.4% on year over year inflation. If this number goes up, not good for markets. Great for the dollar, but everything else will struggle. At the same time, if you get 3.2 or 3.3, the market will likely cheer that number and it will probably rally. So it's such a pivotal moment here in the financial markets as the whole world waits for this inflation print. Now, again, as I just said, we're going to be taking a look at several charts here to prepare for this event. But let me just say, as we've got 840 people here, don't leave right at the spike. That's what everybody does. Everybody waits for the spike like a bunch of junkies. And then as soon as the spike comes out, whoop, they're gone. Let me tell you that most of the trading here that I will actually be doing today is going to happen after the spike. On this channel, we are fundamentalists. We talk about macro events that are actually causing the market to move. CPI is not just a spike for the heck of it. It's a spike because stuff that comes out on CPI matters. It tells us about market direction potentially for the coming weeks and months. So very important that you stick around after the spike. That's where a lot of the trading will begin. Hey, thank you very much for the $2.99. I appreciate that. Watching from the slums of India. Well, I hope that your weather is at least nice. I've never been to India, but I would love to go someday. I've heard that it's a really cool country to visit. Garrett, what's up, man? Good to see you. I saw you today. And Daniel's in the house. What's up, guys? Thank you for being here. Yeah, macro is king. Absolutely, it is. We're talking inflation data today. It's so key. If you have in terms of, you're looking at Europe, as I mentioned earlier. So I've compared Europe to the US. If you want to talk currencies for a second, it does seem like Europe's got its inflation struggle a little bit more under control. Now, you could also argue that that's because the European economy is weaker and maybe going into a recession. And the reason that the US is stubbornly keeping its inflation higher is because the economy in the US is outperforming. That's a valid point. In fact, does that make a good claim for staying bullish dollar relative to the euro? I would actually say so. In fact, in terms of dollar perspective, I'm actually relatively bullish the dollar. If you're asking me, of the major currencies, which one do you want to bet on? I would bet on the dollar right now. Now, will that change today? Possibly. If you lose the inflation story, like if inflation just comes in really cool today, yeah, that's not going to be great for the dollar bullish thesis. But, we've got ourselves in this range here. If you're looking at the dollar index on a daily chart, you can see we've had resistance here, support here, support here, support here. It's ranging. What I think gives you that next leg higher, sorry about that. We've got our ad block. Does TradingView have ads on it? I have the premium version. That's weird. Anyways, so if you want to see a key breakout here for the dollar index, which is going to move everything, right? If the dollar index rallies really hard, probably what happens is the equities are falling. And at that point, maybe gold cracks too. But for us to get that, you probably need like a 3.5% read on inflation year over year. I'm talking headline. If you were to get something like that, it could change the story. It could make the dollar look really, really strong relative to its peers. And not only that, you'd probably get a risk-off move across the market today. So if it doesn't, though, I have to say this. If inflation comes in cool, I've got this 4-hour chart drawn up, but it doesn't even matter, right? Remember that technicals are important, especially if you're an active trader, but they bow down to fundamentals. That's just the truth. If you get today a CPI print that is really cool, it's probably going to take out the lows. And from that point, we just look bearish in the dollar, in my personal opinion. So that's my approach on the dollar here. Again, we could take a look at gold. Here's the thing on gold, though, guys. If you think the economy is going to keep slowing, a hot inflation read is not all that terrible for gold. Let me kind of break that down because I know that can kind of be confusing. A lot of you guys will say, well, if inflation is hot today, this might be confusing at first, but stick with me. If inflation is hot today, it's going to mean the dollar goes up. Why? If there's lots of inflation, shouldn't the dollar go down? That's a common question on my channel. The reason is because if inflation is hot, the Fed will continue to need to tighten and do the opposite of money printing in order to get inflation under control, which leads to the supply of dollars that's in existence looking more attractive, and the dollar will be strong. That, however, should move the gold market down, right? But what if at the same time we get inflation numbers higher, but the economy is showing signs of slowing. Now, that's not as prevalent of a case as it maybe it was a few weeks ago. Why? Because jobs were incredibly impressive out of the United States. In fact, let me show you that. So I'll go ahead and devil's advocate myself here. If inflation's hot, it actually might bring gold down. I'll tell you why. One of the best indicators of the jobs of the economy is the jobs market, and the jobs market was incredibly strong. So I actually take back the idea of potentially a stagflation event for now. If you see the economy cooling but inflation stays hot, that's a very bullish environment for gold. I think part of the reason gold is up so much recently is simply because of geopolitical tensions. There's a mountain of debt that the U.S. has to figure out how to finance. Inflation is still a concern overall. And if you get the economy slowing, but inflation staying hot, that environment could be incredibly bullish for gold. I still have a trade open on gold. I'm not looking to open anymore, but I've got 2 trades open on gold since, late February. So I've been in these trades for some time, late February, and I also took one mid-April. So I'm sorry, mid-March. So I'm in 2 trades on gold. I'll show you the GLD P&L just to see what that's at. I will be holding this trade going into the event. I'm up just shy of $20,000 on gold. And we'll take a look at oil as well. Oil is another trade. It looks like I might survive this oil move again, which is going to be remarkable. Several times you can see my stop loss has been challenged, basically coming down to this support level. But this support level, again, another key thing for the oil traders out there, let's watch this support level. If that breaks, that's got to mean something, because again, this level has held me in the trade several times. This will be the 1, 2, 3, 4th time that I've stayed. If this moves higher here, that'll be the 4th time that my stop loss has been averted because of this support zone level, which is great. So yeah. So anyways, we'll take a look at this and keep an eye on where we're at with oil here just a bit. Just wanted to update my positioning here a little bit, but I am still long gold and oil. I do also have a dollar position open. I am long USD CHF, which hasn't moved very much, but I do have $1 position open. That being said, though, I'm kind of hedged because I also have a bullish position on TLT, which is trading in the pre-market at 92.49. So my strike price, I sold puts at 93, but I collected $1.07. So I'm actually above my break-even price, if you know what that means. If you don't worry about it. Really basic point here is I am bullish on TLT as well. I wouldn't mind if this thing ripped. And if it doesn't, then I'll have to buy the shares based on my options contract that I sold. Regardless, again, we've got a couple minutes here to go. We're getting very, very close. And we'll have live coverage on the inflation data as it comes out. I'm gonna actually go ahead and just set up my screens. We haven't talked about the indices. The indices had a very impressive. I saw so many things yesterday, guys, about like people talking about who leaked CPI, on this drop, and then at the same time the market popped towards the end of the day, and other people said, "Oh, Goldman Sachs has information that it's going to be a cool inflation read." Who knows who's got what? Jamie Dimon also talking about potentially seeing interest rates go up to 8% and that they're prepared for that. I don't know what is real and what's not. We're going to get the data here today in just a little bit to see what that inflation read is about. I just want to say, if you're watching indices, the Russell will be probably the most volatile. The NASDAQ will also probably be very volatile in this upcoming event. Why Russell? Russell is smaller companies. Smaller companies are more sensitive to interest rates, okay? So the Russell will likely move a lot here today. Same thing with gold. Gold very sensitive to interest rates. Yeah, we've got about a minute and a half, guys. I just want to say we've got 1,550 people watching. Remarkable. Thank you very much for spending your time with me. I hope I can give you some good coverage on this stuff. And if I'm doing an okay job and you would like to support my channel, do me a huge favor. Hit that thumbs up button. We are going to be live for 6 hours today, rotating in hosts from all over the world. We've got people from South Africa, people from Norway, people from the United States. We got people from all over coming over to hang out on the stream today. So if you're supporting our work here, if this is helpful to you in any way as a trader, hit that thumbs up button on the stream. So guys, we are about 50 seconds to go here until we get our beloved CPI data. Let me just say For those of you guys who are, trying to trade the spike, please be very careful. It is a painful lesson to learn if you're trying to put buy stops and sell stops on CPI. I know somebody out there is listening to me and they're about to do that. I'm telling you, it's incredibly risky. And if it might work for you here and there, but eventually it will blow your account. So be very careful. We're going to cover it here, guys. We've got about 20 seconds to go before CPI, but don't go anywhere. We're streaming all day long because we have so much market data to go through, and CPI is just getting it started. So breaking news coming in right after this. All right, let's see what we get. All right, and inflation data just came out. We have the dollar index shooting up here. S&P down to 5204, gold down, oil not moving, pound dollar, euro dollar, NASDAQ, S&P. Okay, so that would tell you something might have just come out hot. Let's take a look and see what we've got here on the CPI data, hot data. That is to be assured here, Daniel, just from the response from the market. We've got 3.5%, guys. We've got 3.5%. Core was higher than expected. CPI was okay. We've got something exciting here to talk about today, guys. What does this do for the story? Well, it throws hot and cold water, like boiling water and freezing cold water getting thrown on you while you're sleeping. That's what's happening right in front of you. Okay. What does this mean for financial markets? Well, a third inflation statistic, I'm going to stick to my thesis here. A third hotter than expected inflation statistic tells you this wasn't a fluke. Inflation is hot and it's problematic. And the Fed's going to hate that because people who are thinking, well, at the beginning of this year, people thought 6 rate cuts were coming. I was never in that camp. I leaned more towards, I think we're going to cut for the first time in the second half of this year. I still think so. But with this data, are we going to cut in June? I kind of doubt it. I think we might cut in July, maybe beyond that. But again, this is a stubborn inflation data. And the Fed has been in recent years consistently saying that they're trying to be data dependent. They made a mistake in 2020. They tried to be ahead of inflation, saying, oh, it's transitory instead of being data dependent. They've stepped back, and Jerome Powell really, talked about that. They want to be data dependent now. Data dependent means you wait for inflation to start coming down before you cut rates, right? Several Fed officials pushed back against what Jerome Powell's recent dovishness was. And so now we're seeing that being proven. I mean, look at these candles, guys. These are insane moves on the market. I mean, that is a drop on the S&P 500 of 1.25%. You've got the dollar index jumping by 0.5%, which of course currencies don't move all that much. So that's pretty impressive moves there. And there we go at session lows for the Dow, for the NASDAQ, for the S&P, euro dollar, pound dollar selling off here, gold taking a nosedive here. Let me check in on my position. Of course, I probably just gave back several thousands of dollars in the trade, but hey, you know what? That's what you get with trailing stops sometimes. Let's see. Am I going to get taken out of my trade here today? Let's see. Possibly. Still, for those of you guys who are watching gold, so I am long gold as of a month ago, and a second time, less than a month ago. Talked about it earlier, but with this current pullback, in terms of my position, we were up 20,000. We're up 18.5 now, so we gave back like $1,500 on this trade. That being said, if we break support, it's time to take profits on this move. And if that happens, I'm not complaining. I've had a wonderful move in gold, and if it bounces off support, I'm also, of course, not complaining. Let's see how this market reacts here in the following minutes. Usually, when you get these big inflation spikes, if they hold their gains one way or the other, at least from what I've seen, it's usually because it's a market shape-shifting event. Whereas if you get a big spike and then it just reverses, the market almost ignores it. But right now, so far, guys, this is a move that's following through. Let's take a look at the NASDAQ here. NASDAQ coming down here, SPX 500. Let's take a look at that. The S&P 500 slightly off of its lows here. Here's your 5-minute chart. Big drop there on the S&P. I got to check what yields are doing. Probably yields are flying here. This is not good for my trade. I'll tell you that right now. TLT probably underwater for me now. So I've got a couple trades going poorly. However, I am long dollar Swiss. So dollar Swiss probably looking great. Boom. boom, bam, pow. That's wonderful to see. A nice push on dollar Swiss. For those of you guys who are watching the dollar index or dollar currencies with me, I'm watching for this. Let's see if we can break this high. If we close above it, that would be very nice for my trade. Stops at some point will also need to be trailed. We're currently floating a 1-to-1 risk reward on this trade. So I've got a couple, honestly, CPI, it's not great for my gold position. It's not great for, well, it's not terrible, not great for my oil position. Hot inflation is generally not bad for like oil and commodities in general. It's not great for gold though, because it tells you they might not cut rates as soon, and the gold market's going to hate that. So is silver. Silver's down 1.17%, which is really quite the move there. Guys, don't go anywhere. Like I said, we've got a stream going all day long. This is going to be a fun day, to say the least. Let me just list off what we've got today. We've got CPI. We just had it, right? We're still going to trade that for a little bit here. We're going to talk about it. CPI. We got Bank of Canada later on today. We've got a treasury bond auction that is highly anticipated, which could also move markets. And then to end out the day, we have meeting minutes. So I just want to say, if you're hanging out with me here live, grab yourself a coffee, a tea, whatever you drink, and stick around with me, because we've got so much market stuff to talk about today. If you're gonna put in some work on the markets, today is the day to do it. We got so much stuff to talk about. So okay, with gold, again, for me personally, with my position, as long as we hold this support, I'm staying in the trade. But I can't say that I love this situation in terms of hotter than expected inflation, but I'm also not totally bearish on it either. Let's take a look at the VIX. I know Dan, you're long in the VIX. That's awesome. Very nice move. I saw Dan's comment here. I saw his Instagram post as well. The VIX is making a move higher, 6% on the day. Really impressive push here in the last few days, and I love this, Dan. I'm a option seller, as you may know. So when the VIX is up, I'm absolutely loving it. Gives me a chance to sell some options on things that I would like to build positions in longer term. Up 7%. There's the S&P dropping hard. I have sold puts on VOO. This is probably another trade. It's not going amazing for me, but my strike price is all the way at 460, and I actually would love to see the stock market drop down to 460 on VOO. Then I could get assigned and build a position on a longer term S&P hold. That would be fine by me. The NASDAQ, look at this, guys. We're just near structure lows here. Keep an eye on this. That'll be really important to watch out for. But again, you have a story here playing out that the market's currently not going to love. You got strong jobs data. You got high inflation rates. So the economy is just roaring, at least in terms of the prints that we see here. The economy looks strong. Now, let me just say, I know a lot of people, they immediately roll their eyes when they hear that the economy is rolling, because they're like, doesn't feel like it's rolling because everything's $1 million at the grocery store. That is true. But in terms of people are employed, is the average person poorer than they used to be? Yes, that is true. But the economy itself is buzzing, which is weird, and it feels wrong. But again, we've got an election cycle coming up, so I'll leave that to you guys in terms of what you think. But the election year here is also throwing in some interesting stuff across the board for financial markets, because when you look at this stock market, it's been having a really great run. Is that going to continue? Well, again, for this to continue, what got us to this level, what got us so high on the NASDAQ and the S&P? Rate cuts, right? That was the theory, rate cuts and earnings growth. We are coming into earnings season by the end of this week. We've got banks reporting their earnings. It's going to be a really important start to the earnings season here. But at this point, if everything comes down to earnings, and the Fed is not necessarily going to be cutting rates anytime soon, if you keep getting inflation reads, guys, do you realize that the talks of rate hikes are not completely out of the picture? Though the Fed has said that they think that they're done, the Fed is also trying to stay, as I mentioned, data dependent. Possible rate hikes could be talked about. It's not what I think is going to happen. I think probably they just are going to hold it for longer at this level. And that's going to equate to, again, the stock market not loving it because some more interest rate sensitive areas might perform poorly. For example, the Dow doesn't love this. Why does the Dow not love higher inflation? Well, it's because if inflation is higher, The alternative to a lot of Dow and dividend stocks is to go into treasuries. And treasuries today are suddenly looking pretty dang attractive. Look at the 2-year yield. It's up 3.5% on the day, 3% on the 10-year, and 2.28% on the 20-year. So what you're seeing here is that if you're somebody who is, trading dividend stocks, here's SCHD. SCHD is going to have a rough day today because suddenly the appeal of dividend stocks is suddenly less attractive, because why go into dividends and take risk on those stocks when I could just get risk-free by buying treasury bonds, right? That's the idea. So anyways, there is some competition here on the story there. The VIX is up 8%, guys. The S&P 500 down 1.5%. Here's the thing, though. You have to start to wonder, is this now still a pullback, or are we officially breaking the unbeatable upward trend? It's looking a lot more like the latter, because we've seen this S&P 500 just continue to rip. But if you see a close underneath this support level, it signals to me that we are probably going to see some further downside. We'll have to watch for this break, though. Watch how this daily candle closes if you're watching the S&P 500. In terms of my gold position, we've bounced slightly. I'm still in the trade. Oil, I'm still long. I'll show you guys current P&L. We were up 20,000 at the beginning of the stream. Now up 19.1 on gold, up 10.5 on oil. Is oil coming back to life, man? I mean, both of these trades, I'm not gonna lie, they've become like my cousins. I've been on for so long, right? That sounded wrong, but let's not clip that. The gold market and the oil market, the commodities market in general, absolutely just been on a tear to the upside. Here's platinum coming down here on the day, and wow, just look at that yield, guys. That's insane. So yeah, did Nick get a haircut? No haircuts for me. I did get product, though. Got some product in my hair, which helps me to not have it falling in my face. Yeah, channeling my inner Mississippi. You guys are wild. Why'd I have to say that when there's 1,600 people watching me? It's okay. I've said worse things on accident. Sometimes I've said worse things on purpose. All right, guys, let's take a look. I haven't even looked at the top setups here. Let's make sure we get the latest data here. So USD CAD staying very bullish. NASDAQ is getting a bullish reading. I'll have to go look at that NASDAQ again, but I'd like to see how this price reacts. Bitcoin bullish, Aussie CAD bullish, dollar Swish bullish. This is why, by the way, I am currently in a long position on these two assets. Edgefinder helped me spot those trades, so we'll see how those play out. But dollar strength seems to be the prevailing story right now. Here's euro dollar, pound Aussie, euro Aussie, all getting bearish readings. So there's your current bearish readings. There's your current bullish readings. In terms of the latest commitment of traders data, let's check this out too while we're at it, guys. So gold and oil, again, you wonder why I'm most long in these positions. It's because I'm using the commitment of traders data in combination with the rest of the Edgefinder's economic scans. So the Edgefinder, what it does, it pulls all this data in, and then it actually helps to interpret what the data is telling us, or perhaps even suggesting about where markets could go. Of course, the Edgefinder is not always right in what it predicts. It's not a holy grail system by any means, but it helps you source a ton of data in one spot. So currently, what we've got here is S&P did get some buys going on, which is interesting, but oil got a lot. So oil got a lot of buys. Gold slightly sold. Dollar sold. The US 30 here sold heavily. So NASDAQ sold, bought very slightly. But this data by now is a couple days old. So, I like to look at it when it's a couple days old. I like to look at this section just to see generally where institutional money is going. Is it long? Is it short certain assets? So something to think about currently is that gold and oil continue to be up here. Silver, same thing. Platinum also slightly positive. So a lot of commodities on the top side of this range, something to consider. Also, I should mention that if you have not already heard, we are currently doing a 45% off discount. But because it is CPI, I've got a special kind of announcement for you guys. So here's something to think about. The Edgefinder is a remarkable tool for traders who are looking to use fundamental analysis. If you hear me talking fundamentals all day long and you're wondering how are you able to keep up with all that stuff, it is because we've built software to help us do that. So the Edgefinder right now, I'm going to do something for you guys. If you are watching with us live, we are going to do, instead of 45% off, we're going to do, just because it is CPI day, something extra special. Instead of 45, we are going to, just for now, do 50% off right now only, just because it's CPI. If you've been thinking about getting a copy, this is literally like a 1 hour opportunity. If you've been thinking about it, send us a direct message using this link. If you chat with us right now, I'll show you what happens. When you click that link, you'll be connected to someone on my staff. We're a software company in Atlanta, Georgia. We build tools for traders. And if you'd like to get a copy of what we offer, check it out. We got thousands of people all over the planet using our stuff for good reason. It's a remarkable tool, and it helps you find better opportunities and use fundamentals. Click this link. If you hit this message and just start a chat, you'll be connected with a person on my staff. Just let them know that you saw the CPI 50% off discount, and we will honor that offer for you to give you 50% off right now only. This is an on-stream thing only. After the stream ends, it's over. Okay? So there you go. Just a special offer for people who are watching with us live. Thank you for being here. We very much appreciate the support. Okay. With that said, guys, let's see what else we can find. So in terms of top setups, USO, USD CAD, USD JPY, NAS 100, NZD CAD, USD Swiss. These things getting some nice bullish reads overall. But here's the thing with the NASDAQ. What's concerning me with the NASDAQ is, well, look at the yields. The NASDAQ is hating this, right? But let's watch how support is treated. So we have support levels on the NASDAQ. If this support gets hit and it bounces, obviously that could just mean we stay in this range for some time. But if you get a closure outside of this, I'm very much curious how this candle closes. If it closes underneath, that's just, to me, short-term bearish. If it closes where it's, it's got some support on it, like it bounces with a bit of a wick, that could lead to a bit of a recovery in the NASDAQ. It would be, we've seen crazier things recently where the NASDAQ drops heavily and then by the next day it's back up. Like, look at these two candles. These are daily chart candles. Boom and bam, right? It bounced back so aggressively. So yeah, Edgefinder is great. I've had it since early on. Thank you for your continued support. And for, those of you guys who have had the Edgefinder for some time, I imagine you've probably seen it morph into a better product every month, just like I have. It's been very cool to watch. So CPI came in hot, guys, and the Russell, again, as I mentioned, came down hard on this data, 2.72% here on the day. That is an aggressive sell. And really, as I mentioned, this is going to be the more volatile of the indices on CPI. That being said, we also have gold recovering some of its losses. This is just showing the resiliency of this gold upward trend right now. I'm continuing to stay in the trend, but I actually think I need to probably trail stops on this. In fact, I'm going to do that right now. With CPI coming in, I would rather it not, I'd rather get taken out of the trade if we do, in fact, see a break of that structure. So we're 75.75% below current price. So let's go ahead and do that. Okay, I'm going to trail stops to 215.09. Okay, guys, so I'm going to trail my stop loss here on gold. Okay, stops trailed basically below the low of days. If we take out the low of days on gold, I'm going to take profits on the trade on gold. Let me just update this for members. I'm going to pull up gold. Okay, gold is there. And let me just get this set up. Okay, commodities. Okay. Bear with me, guys. So I'm just trailing a stop loss on my current position. 215.09. This is like I feel like this is like the seventh or eighth time I've trailed on gold. 23, 24, 13. Okay. Stop loss trailed. Placing my trailing stop, just trailed stop just below the low low of day following CPI print. If this is taken out, I will take profits on the trades. Okay. And I'm also just going to share a screenshot here of my trade. Look at that. Gold is just refusing to go down. I imagine that if you're on the other side of that trade, that's very, very frustrating. Like if you're shorting gold, it's probably been one of the most frustrating things ever to watch. But I have to say, being on the right side of this move and just trailing it it's been my best trade this year so far. All right. Okay, so just updated that. So for those of you who are on the Discord, under the commodities trade section, I just updated my gold position, trailed it. The initial entry was 2,026 an ounce. We're at currently in the 2,300. So that move has continued to rip higher, and we'll see where that goes. Again, look at the dollar just dominating here today. Euro, pound down, dollar, yen broke. Ooh, look at this, guys. I know Ivan is coming on the stream later. He's going to talk about this, I bet you. Dollar yen is currently trading above this previous high, which we talked about this a lot. Dollar yen rejected 150, 152, this region very, very strongly in previous times. But with today's hotter than expected print, is this the trigger to see dollar yen finally break free of that and continue its move up? Euro USD completely failed out, sold off here. Pound dollar sold off here. Dollar Swiss continues to push higher. I mean, this is a really solid dollar move here today, and off of good basis. I mean, this is why the Edgefinder's been, pushing for dollar bullishness overall. But this adds more fuel to the fire. I imagine that of the major currency pairs, we're probably going to see, yeah, there it is, pretty much exclusively dollar bullishness. So dollar CAD, dollar yen, dollar Swiss, pound dollar, euro dollar, all favoring the US dollar. We can see that in some of the commitment of traders data, but we can really see it in the economic data, which is pointing very strongly towards the USD. So something to mention is when all of the signals on the Edgefinder are pointing one direction for the most part, it's a very, very difficult trade to go against it in my experience. Obviously, this is why we built the algorithm the way we did. We're looking for things that are all lining up in one way. So if you've been looking at, pound dollar bearishness or euro dollar bearishness, it's taken some time here, but it is following through now with today's CPI print. TLT, again, down 1.23%, obviously going the wrong way for my position as I sold puts at 93. So I could potentially be forced to buy the shares with my options contract. Here's the S&P 500 sitting at support. We are testing the waters here, guys. This is very, very key stuff. With the S&P, if you're looking at this and we break through the lows, right? That would give you some confirmation, in my view, that we could see some lower price action. But if we hold today, it's possible that we're just going sideways for a little while. Like before we get ultra perma bearish on this stuff, you also have to kind of recognize that the S&P 500's had a great run. It could correct by time-wise, like it just could go sideways and correct sideways, if you will. So anyways, something to think about. Again, I mentioned it earlier, guys. Just a reminder, if you're watching with us live, if you click this link that's just been dropped in the chat, you can currently get 50% off the Edgefinder. We're doing a CPI sale. So 50% off if you send us a direct message right now while we're speaking on the line. We'll get you set up with that. Again, just click this link, chat with us directly, and we'll go from there. The Dow slightly bouncing back, NASDAQ slightly bouncing back. You can see the other stock markets around the world also selling off on this data. Here's the Hang Seng. You have the DAX coming down. You have the Nikkei coming down. The VIX was up about 8%, now up about 6%, giving back a little bit of that. Dollar index continues to rip higher. The question is, though, same thing with the S&P and the NASDAQ to the downside. Is the dollar breakout here or is this going to reject and are we going to stay sideways? That is now the question for the remainder of the day, right? So if you're watching, the dollar or currency crosses, let's see how this how the dollar interacts with this level again. Now that we're back up here, it's had a lot of confirmation here. You had jobs and you had inflation. Both of these are pointing dollar bullish, at least on the Edgefinder and in, common thought of fundamental analysis. NASDAQ up or down. I don't have any trades on. I'm waiting, as I mentioned, to see how this candle interacts with this level of support. Is it going to bounce or is it going to fail out? That's what I'd like to see on the NASDAQ. Gold-wise, keep coming back to it. We just got to check in. I'm still in the trade. I've trailed my stop just below this market structure here. If price breaks these lows of the day, I will be taking profits on the trade that I'm in. Oil up here today slightly. That actually makes sense. Again, we have in our calculations for the Edgefinder, when you're looking at oil, that hot inflation is actually bullish for oil, right? Inflation is generally strong for commodities. Higher inflation, rising prices, right? So for oil, this is actually going to continue to keep me in my trade most likely. Amazing that you can hold a trade for over a month. I could never. My anxiety wouldn't allow me to sleep. So Tracy, here's the thing, right? As much as it is something to get used to, there's no question. Holding swing trades, I actually feel the same way about day trades. I feel like the pressure of being, hyper focused on a position, even for just an hour, and just like putting a huge amount of risk on just like a short term, I feel way more confident on higher time frame moves than I do on like a 15-minute chart. 15-minute chart to me is way harder to trade than the daily. And I think most people would actually, just from a moves perspective, they would agree that the daily chart typically moves a little bit cleaner. And if you're a fundamentalist, the daily chart, the 4-hour chart, the 1-hour chart typically move a little bit more in line with the way we view the market. So if you're fundamentals, I find it really hard to trade like the 5-minute chart with that, because again, 5-minute charts are so messy, they're so noisy and all over the place, that fundamental data, your bias might be right, but you might just get whipped out of trades like crazy. So I actually feel more confident putting on a trade and holding it for some time. That being said, the other thing is, if you're ever having trouble sleeping while you're in a trade, likely it is because your position is too big. That's a tip that I learned a long time ago from somebody I really looked up to in the trading world. If you can't sleep because of a position, it's because the position's too big. A single trade should not make or break you. Now this gold and oil trades that I'm in, obviously they're doing really well for my account, but they didn't start out as massive risks on my account. This trade, I kid you not, is a 24-1 right now, which is absolutely insane. Actually, I said that wrong. Hold on. It's currently floating at about a 19-1 in terms of risk reward. But these are so rare for me to find these sorts of trades. But the initial risk was way smaller than the profit that's currently floating. So my risk wasn't like something that was going to keep me up at night. If I was risking $200,000 on a trade overnight, I would not sleep either. It doesn't matter how experienced you are. It just tells you that if you can't sleep because of a trade, it's because the trade's too big. Okay, a single trade shouldn't impact you that much. Trading is about 1,000 trades, not just this one trade. Nick's gold stop hunt missed. Yeah, we missed it by a long shot. My stop loss was below here before CPI. I only recently added it up to this point on stream just like 10 minutes ago. I've just trailed it just below the previous wick low. Imagine the profit if I risked 200K. Yeah, that's true, but that game gets you into a lot of trouble. I shoulda, coulda, woulda just put my entire life savings on this gold trade, but that thinking is dangerous. Okay, so let's check back on some things. The S&P 500 sitting at support. We'll see how it interacts with it. NASDAQ, same thing, came down to its previous low here and is now waiting on it. The US 30 here trading near the lows. The Russell sold off, took out the lows. This is very impressive here, but also sitting at support around 2016. So, yep. UK 100, the DAX, Hang Seng, indices around the world seem to be selling off on this. Oil continuing to stay strong. Let's take a look at some currencies. The euro dollar, look at the euro dollar just selling straight off. Really quite a move here. Dollar strength seems to be back for now. Pound USD, here's dollar yen breaking through that level. Dollar Swiss, very impressive there. Insane stuff, guys. And again, I'm going to stick with the Edgefinder call outs on USD stuff. Staying bullish USD. Today's inflation read is going to be incredibly helpful to bulls on the Edgefinder. So if you're watching the Edgefinder, probably everything is going to say bullish on USD, right? So euro dollar bearish, that would still favor the dollar, right? We're selling euro, buying dollar. That in that situation, when you take a trade on the sell side, so very bullish overall for dollar. We'll continue to stay in those trades that I'm in. I'm long dollar Swiss, and should be fun. Well, we'll see. I'm in my dollar Swiss trade. I'll update you guys where I'm at with that. So dollar Swiss, nice move here so far. I do not have a take profit on this trade. I'm just using it to track the trade. My stop loss, however, is fixed at 89.80. So I do probably need to trail a stop at some point on this move. We've broken out of some structure. I may do that here shortly. If I update that trade, you guys will see it inside of the Discord channel. I do also want to say, just a reminder, if you're watching here live, if you just tuned in, the Edgefinder, currently we are doing a 50% off sale just for today's CPI stream. So if you'd like 50% off, this is the biggest discount we've ever done here, 50%. Click this link, send us a message directly. You'll be able to chat with someone on our staff about getting a copy while that discount lasts. Again, a real person from my team will help you out if you have any questions or if you'd like to take advantage of that. Today, we have so much news and we have so many different guests who are going to be rotating in and adding some value. And in just a moment, we're going to hear from our very first guest of the day. We got Miko coming in. So before that, we're just going to take a quick break, set up the stream here for you. It'll be 30 seconds or so. And then you guys will be in with Miko for some analysis. I'll give him the floor. And I just want to say, as we make this transition, we're going to be dropping the link to Miko's channel in the chat for you guys to check out. So make sure to support our guests here today. It would be huge. And again, here comes some more technical focused analysis with Miko just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
What is up, ladies and gentlemen? Hope everyone's doing good. Excuse me for one moment because I'm taking a position on pound NZD at the moment in time. So I just need to place in this trade, but I will share the analysis behind the trade. It's a bit of an awkward moment because as soon as I come into the stream, I'm taking a position, but I don't decide when I take my trades. But I will go through the analysis because we're seeing a lot of movement across the boards, across different markets here. So I'm excited to see what can happen for the following price action going to the rest of the week and going into next week as well. Okay, so if you want me to take a look at certain markets, feel free to drop it down in the comment and I'll take a look. But I have just taken a long position here on pound NZD, a pair which I have been looking at quite a lot. I did take a trade on this one on Tuesday, excuse me, on Tuesday, or was it Monday? Tuesday, Monday, I took a trade here. It did end up in a loss. I got into the trade a little bit early around this area here and it didn't hold. Price did break further to the downside. But now we've got this significant reaction, of course, based upon the news we've just had, and it's given me a nice shift in momentum. So I hopped into a trade there. I will be trading stops on this position. So I don't have a target in place. I'll just trail the stop loss, see how far I can go. I do have some targets in mind of where we could head towards, but overall it'll be up to the trading stop loss to take me out of the position. But yeah, going on to some dollar pairs, because that's kind of the talk of the town, really. Because yeah, I've been quite neutral with the dollar. I've been leaning towards the bearish side of things, which hasn't mapped out. Market has been very, very bullish off the back of CPI. But in all honesty, price action hasn't been really clear from a technical perspective. The way I look to position myself in the market is normally following structure, following trends. And the DXY hasn't really been printing clear-cut structure, clear-cut trends. So I have been reluctant to trade the dollar pairs. And I know we're seeing a lot of bullish momentum right now, but again, it's nothing that I'm getting too excited for. If price can start taking out some of these highs here, then yeah, I would start being a little bit more excited, because now we've got a confident bullish trend, which is starting to show some life again. We do have some resistance, which the market is kind of just failing at a little bit, which is kind of why I've been a bit more neutral. So if we're going to start breaking through that, show a bit more conviction to the upside, a bit more of a bullish trend, then of course I'll be expecting the dollar pairs to be trending down. Well, apart from like dollar Swiss and dollar CAD, but Euro USD, Pound USD, you expect them to be the inverse of that. So yeah, strong move today, very strong. You can see the candle still kind of holding that momentum as well, which is a key detail to note, because sometimes when we do see this momentum, sometimes the candle slowly just pulls back and leaves a big wick, which is a sign that momentum is died out and potentially is a bit of a fake move, but we're sustaining that momentum so far. So if we can continue this, take up the high there, then I'll be very much a dollar bull. So if I take that information into pairs like Euro USD, if we sustain that, price starts sprinting to the downside, takes out this low here, then yeah, I'll be looking to sell Euro USD. Again, the clear concept for me is trend, clear market structure. Those are the opportunities I'm looking to get involved. Euro USD has been very difficult to trade, in my opinion. The price action has been all over the place, so I haven't been very optimistic to trade this pair. But if we do start seeing structure break, then yeah, I'll rethink things and maybe look to trade it in a bit more detail. However, I do like gold and silver. I will take some requests in a moment. But I do like gold and silver, because for me, they're still very, very bullish. I still do expect more upside for silver and gold in general. Of course, gold's at all-time high, so there's not necessarily a target I have which I would be expecting price to get towards. But silver, on the other hand, I do have a target, which is 29.15. That's what I'm expecting price to get to. If I get to the weekly chart, see a little bit clearer. But essentially, this resistance here, a lot of rejection there. I do think silver is on a one-way ticket to that level. I do think we can potentially break through, but we'll play it level by level for now. So I'm actually hoping we can get some pullbacks for silver. Since dollar has been very bullish, I'm kind of expecting silver to take a bit of a dip there, but we haven't really seen that happen. So it's a waiting game, but hopefully we do retrace, and then I will be looking at some of these areas to long on simple break and retest, waiting for momentum to shift, and then that's when I'll look to execute my trades. But I like both of these levels here. If we have a slightly deeper retracement, although I don't think we will retrace that far, but if we do, I'll be ready to take some positions. But I like this level here at 27.32, so potential longs from those areas. Bringing it onto its more popular market, I think gold is the exact same thing. We could see some retracement. Of course, dollar's been very, very strong. We're seeing a dip in gold at the moment. Nothing crazy though, since DXY is giving us a humongous candle. DXY gold is only slightly bearish, so not really seeing that move in proportion. But nonetheless, I do think gold still has more upside. but I do think we are going to have a retracement first. You can see the way the market's moving, very, very corrective. This is not really sustainable price action. This normally does mean the market's going to take a dive at some point. How big of a dive? Yeah, that's up to the market overlords. I would know that, but I would expect more upside in the short to medium term for gold. So I'll be looking at buying opportunities. I'm looking at some of these areas, 2304. I'm looking at 2266, and I'm looking at 2222. These are the kind of areas I'm looking at. But yeah, in terms of the bias, still definitely bullish with gold. So I do think we can see more upside there. But I do like silver and gold because they're trending clear, directions clear. So pullbacks do look good. I like silver a little bit more because gold is at all-time highs, silver not there yet. And I do think we can eventually make up that ground. So I do like buying silver a little bit more than gold, but conditions are pretty clear. And like I said, for the other USD pairs, I need a little bit more. But yeah, price is looking very, very bearish at the moment in time. Very solid candle closure down the 4H time frame. Minimal wick to the downside there. So yeah, I mean, the key thing, like I said, is if we can take out some lows. If we can take out some lows, then that shows me, okay, structure's breaking. That's important. That shows us that, okay, the sellers are not joking, and we're actually probably going to see more downside after that. So then my plan next would just be waiting for pullbacks, then looking to short the market after that. Same thing for like pound USD as well. Same thing for Aussie dollar. Again, price action, the Aussie dollar has been not great. Being reluctant to trade this one as well. As long as we stay in this range, I'm not really so enthusiastic about taking any positions. So yeah, hopefully we can break the low. And by low, I mean this low here. That will tell me, okay, we're back bearish again. And then I'll be looking at pullbacks and shorts. And again, the way I look at the chart, I'm a swing trader, so I'll be looking at positions over the next kind of week or two, maybe even longer potentially. So that's kind of how I develop my bias and my trading span for. But in the short, medium term, of course, everything is very bearish. But of course, if you're not really in a position, I wouldn't look to be doing anything in terms of jumping into sells or trying to jump into some buy to call the bottom here. I think both will be quite impulsive and quite a difficult spot to be in because there's no logical place to put your stop loss either. But in terms of the yen pairs have seen a bit of a dip as well, but nothing as aggressive as the dollar pairs, of course, but still a notable dip, but doesn't change anything in terms of my overall bias. Again, still looking at the overall market structure, still seeing higher highs and higher lows. This is pound yen. Still very, very confident with the bullish bias here, as we can see. So nothing's changed for me. Still expecting price to reach the highs if structure is going to continue, of course. Aussie yen likewise, New Zealand yen likewise, CAD yen likewise. Dollar yen, big break of the high. Again, dollar yen is just in a very sensitive area, which is why I'm a little bit skeptical of doing anything with dollar yen at these prices. Reason being, we've always got the possibility of Bank of Japan stepping into the market, intervening, and we could see the yen gain a lot of strength and push price down. And the fact that we've taken out this level could just be a big fake out. I'm not quite sold yet. It's a big breakout. And price is going to fly to the upside. It could do, but it's just a very, very sensitive area in the market. So I want to see us really commit higher, possible retest, and show me that the trend is established. And then I'll probably look for pullbacks afterwards. But it's a big break for dollar yen. Of course, it's the only yen pair which is up at the moment, and we have dollar to thank for that. But I wouldn't do anything with that. So my main focus in terms of my personal trading, of course, pound NZD, which I've just hopped into. I'm going to see how that trade plays out. I'll be looking to trail stop loss. It's a pretty big stop loss. I'm looking at about 100 and something pips, 118 pips. And of course, I mean, pound NZD has a lot of pips in it. But the news gave me a big candle. And as a trader who looks to enter on candlestick closures, my stop loss size will vary. It could be 40 pips, it could be 100 pips, could be 118 pips, which is this trade here. It depends on the size of the candle. But yeah, we'll see how that trade plays out. So I'll be focusing on pound NZD, managing that position. Like I said, I'll be keeping an eye on silver and gold, but mostly on silver, because I do like this level here. Hopefully we can see a bit of momentum pick up to 27.3. Looks like a really nice area. And then hopefully I can find some opportunities there. So yeah, that's kind of where I'm at mostly. I mean, the dollar pairs could look good for next week, maybe, or maybe even tomorrow. It depends how much this momentum continues. Depends how this momentum continues. But the key thing really is if we can break structure. If the DXY starts taking out highs, then yeah, I can be more confident about the bullish bias. But yeah, that is a huge candle. A huge candle. I haven't seen a candle that big and since these candles here. So, and it's still got an hour and 44 minutes before it closes. So yeah, if we can take out the highs, things do get interesting. Let me read some of the comments. A lot of Kenyans in the chat. Hope everyone is well. Okay, I'll go in a bit more detail about the pound NZD position. Someone asked to explain that one in a bit more detail, so I will. Where will gold go? Wherever gold wants to go. I mean, I'm very bullish on gold, but like I said, we're at all-time highs with gold. So there isn't a specific level I would expect gold to reach because there is no target above us. I mean, you can use psychological levels like 2,400, 2,500, 3,000. So there is some sense there. But in terms of a level we can use in terms of market structure, technicals, there isn't that. So gold can go how far gold wants to go. But in terms of my pound NZD position, I am looking at a continuation of this bullish structure on the daily chart. So low, high, low, high. I'm now anticipating the next higher low. So in comparison to these previous lows there, for the next higher high. If I expand to the higher time frames, we do have somewhat of an uptrend on our hands here. The market did clear some highs here, now retesting as support. So I do think there's a good possibility we can come back to the high over here at 2.15. And we do have this inverse head and shoulder pattern here with the left, the head, the right shoulder. And of course, we've snapped through the neckline. So now I'm anticipating a retest of that neckline here, which is this area here, for the market to then head higher. So that's the plan. That's the thought process with pound NZD. Simply looking to try and catch that next higher low and then ride it for the next higher high or however far it takes me. But hopefully the next higher low. But that is the thought process for the trade. And then in terms of the entries, I'm just looking for momentum really. Shift in momentum, and that's kind of what I got coming back onto this area. Came back for the retest. We just missed the retest over here, so now we finally got it. Strong rejection there, entered on that candle, stop loss a few pips below the low, and like I said, I will be trading stop loss behind. So I don't have a definitive target, but I would just be trading and managing the trade from that perspective. Advice on NASDAQ. Okay, I will take a look at NASDAQ. I don't personally trade indices, but I do like keeping an eye on them because they are quite interesting, especially when a lot of news is about. And I do go over indices quite a lot on my channel as well. But yeah, US 100, of course, we're trading at new highs here. So naturally speaking, from a top-down analysis, I do think we can have that bigger retracement. Dollar is quite bullish, so we might be seeing that retracement slowly come into fruition. If dollar is going to remain strong, maybe we could see that speed up the process of a retracement. But in all honesty, I'm looking at US 100 as just a big range. I mean, overall, yes, uptrend, but for the past 2-3 weeks, since late February, so like 4 weeks, we've just been ranging. So if you're looking for trend continuation opportunities, for me, it's a no-brainer. I'll just wait for price to break through the high and then look for opportunities on the retest of that. Because if you want to follow the trend, you need to see signs that the trend is likely to continue. This price action is not really a strong sign that price is suddenly going to shoot to the moon. If you can see price actually break structure and take out highs aggressively, then that's a sign that, okay, the bulls are back in the market, things are looking strong. So pullbacks will make sense, retest of this area, and then continuation. So a pullback and a retest, this will be a nice smart trade. Worst case scenario is a fake out. We close back inside the range. We take a loss, but as long as you manage your risks, there is no harm in that. And same to the downside as well. If we can break support here, I wouldn't get too excited about the shorts. I'll still be a little bit more conservative with them because for me, again, higher time frames are still bullish. So a break and retest of that short to me is more of a counter trend opportunity rather than anything else really. It's still counter trend. But again, it's a really nice support level. If you do see a strong break, this could be a nice retest, some targets back down to the lows. That to me makes a lot of sense. But yeah, in summary, Nasdaq's still bullish, but it's been consolidating. So we need to see evidence that we're going to remain bullish, which is basically a break of the high. Then we can look at some pullbacks after that. But comparing Nasdaq to some other indices, US 30 looks a lot more bearish. S&P, I would imagine so. Well, not really, but yeah, for me, the indices are still overly bullish, but yeah, I wouldn't be so eager to jump into them right now, especially US 30 as well. If you can see Nas take out the high, things look good again. I'll touch on BTC. We normally do touch on BTC when we come onto the stream. Again, I don't really trade Bitcoin, but from the price action, I would be bullish. We're still seeing consistent higher highs and higher lows. And I would expect us to reach the highs again. In terms of a good setup to long, I would be looking at these prior lows here. Even potentially this low here too. But the market has been very consistent with the high lows, hasn't taken out one yet. So yeah, although Bitcoin is really struggling at the highs, although it's struggling at the resistance, I would still expect price to at least tap the high again, 73, 74K. Then we might fall off. But it's not healthy price action for Bitcoin, I must say. The fact that we've hit the all-time high and rejected it and struggling quite a lot at the high, it's a bit of a red flag. We may take a bigger retracement for Bitcoin before trying to push up again. But again, I don't really look to trade Bitcoin, but I would still be bullish, primarily based on the market structure. Low, high, low, high. So now expecting a higher low, or at least market not breaking through that support. And then I'll be expecting price to reach back at the high for potentially a higher high after that as well. BTC price action is toxic. Yeah, it's quite something. Definitely compared to normal FX pairs. But yeah, I mean, the key thing for me is to see what happens today with the news and see if that momentum sustains. So far, the momentum is sustaining. So it looks like we could be seeing a bullish dollar for a while now. The key thing is still the break of the high. If you do break of the high, then that really does tell me that, yeah, probably for the next couple of weeks, I'll be looking at attacking dollar long opportunities, which fit my plan, of course. I mean, I'll still be looking for long on silver and gold, despite the bullishness on the DXY. I'll still be looking to buy that. But in terms of opportunities like Aussie dollar, I'd wait for the consolidation to break. Euro USD, I'd wait for the lows here to break. Pound USD, yeah, for me to short pound USD, I need to see price break out of this ascending channel, which has been in for quite a while, as we can see. So higher highs, higher lows. If we can break out this channel, then I'll be happy to short. But as long as price stays within this channel here, it's definitely difficult to say I'm going to short pound USD as we approach major support. So it would make too much sense to me to sell pound USD, even though, yes, dollar's looking very strong. We're seeing a lot of bullish momentum right now for dollar. Pound USD is crashing down hard. It's just, it just wouldn't make too much sense there, at least from a swing perspective. Even the lower time frames, you can probably get away with it. But yeah, if you can break the support, then things look interesting. And there's a long way to go as well for pound USD. This is our last kind of major level of support. If you break through this, you could see price trend back down to the lows there. So the opportunities will come, but for me, for the dollar pairs, I still have to be a bit patient. There's a lot of momentum present. I know people tend to get excited when momentum's in the market, when we're seeing volatile moves. And I fully understand why. I do as well, because it normally means opportunities are knocking on the door, but we have to kind of be careful and make sure we don't jump the gun and force anything that's not really there, but we just kind of feel like we're having like we're missing out on stuff just because we're not in a trade and the market's flying or falling. And dollar CAD as well, be moving in this ascending channel very, very correctively, and it's still obeying the channel. Looks like we're pushing back to the high of it there as well. So yeah, dollar CAD is the same thing. I need price to break out the channel before I do anything. Stays in the channel, not interested. I like trading free flowing markets, not necessarily free flowing, but at least a clear trend. It doesn't have to be anything crazy. FX normally doesn't give you anything too crazy, at least not for long anyway. So yeah, I mean, with my focus, I'll see what happens with the dollar pairs coming to the end of the week. Excuse me. USD JPY targets 155, nothing less. 155 will put us around here. I mean, if it is going to be a significant break of that high, then yeah, 155 is definitely on the cards, because who knows how far this momentum can take us. But again, for me, I'll be a little bit careful. Bank of Japan intervening does scare me a little bit at these prices. But it's a very good, from a technical standpoint, it's a very good level of resistance. Now going to be turned support, of course. If you can see some solid rejection there, from a technical standpoint, that looks like a really good opportunity. Momentum is in your favor. You got high time frames in your favor, monthly, weekly, daily. All the major time frames are pointing up. Now we just broken through a solid level of resistance, strong candle closure. If you can see a nice healthy pullback into this area, retest that structure. That is a very nice technical setup, I must say. As long as it's not a big fake out, then yeah. Yeah, that's very true. It is temporary as well, because all we have to do is look at the prior price action for the past year or two. Every time we do see that happen, price just literally bounces straight back again. So it doesn't necessarily start a whole reversal. It can do, but so far it hasn't started a major reversal. The market has been trending quite confidently to the upside for a while and has been very consistent with the higher lows. So that is definitely a valid point there. But yeah, I would never just buy it straight away. I would have to wait for a pullback, a retest to then long the market. So yeah, I mean, across the board for the yen pairs, I am bullish. Pound yen bullish, Aussie yen bullish. Not seeing a technical setup to enter them, but my bias in terms of what I'm looking to do in the market, it's still buy. So yeah, I'm kind of scanning through them to see. But because the way I trade, the setups I trade are quite in your face. It's not like I'm doing surgery or anything. So I can pretty much spot if there's an opportunity for myself looking at the market for 10, 20 seconds. And then if there is nothing there, then I kind of just move on. But what I do like is silver and gold. And of course, pound NZD, which is what I'm trading at the moment.
Hey, Miko, how's it going, man?
What is up, Nick?
Thanks for taking over the stream there for a little bit. I was listening to your thoughts on metals and stuff like that. And what a crazy CPI day today. Everything seems to be moving. I heard you talking a little bit about the dollar before we relieve you of coming on the stream. Do you think that the dollar has flipped bullish? Is it sticking around, do you think?
I think so. I think so. I mean, I like how candles are closing because it looks like, I mean, the 4H hasn't closed yet on the DXY, but the hourly closed very, very strongly bullish. So if it can continue and maybe take out this high here at 105, 100, then I'll be sold on that bullish bias.
Yeah, that's kind of what I'm thinking too. I've got $1 position on. I bought dollar Swiss, but that's kind of where I'm at too. Like if I'm gonna trail stops and really kind of trust the move, I'd like to see 105 breakout. So yeah, we'll see what happens there. Miko, I want to thank you for coming on the stream. Thanks for helping us out with our mega stream. We're going from 8 a.m. guys till 2:30 in terms of U.S. Eastern time. So we're on air for a long time, and of course, Miko helping us out to kick it off here today. Before we let you go, Miko, I just want to say to everybody who's listening, do us all a quick favor. The A1 trading staff, my team, Miko, everybody who comes on the stream, make sure go subscribe to Miko. If you enjoyed that session, a lot of you guys hung out and stuck around with Miko during this time. Please make sure to go do that. His content is great value, totally free stuff over there, just like on our channel. So if you want more from Miko, make sure to go subscribe to his channel. Miko, thank you very much for coming on, man.
Thank you. See ya.
See you next time.
Take care.
And yeah, guys, it totally is. It's a group effort, man, to get through a stream like this. Today is a huge day. And, we have several news events. We have CPI, not to mention we have the Bank of Canada coming up here pretty soon. We're going to hear from them, another central bank. Watch gold during that, of course. That will also be market impacting there. Not to mention we also have a bond auction happening this afternoon, probably the less talked about event today, but also very, very important. And finally, we have meeting minutes, FOMC, at the end of the day. So it is a huge mega day in markets. And, the dollar index right around 105 here. We'll see if it can break out today. With that said, what we're going to do here is we're going to transition again to our next guest, who is going to be Marco. You guys know Miko and Marco usually come on Thursdays. They're doing independent shows here today, which is always fun to get their thoughts for a little bit. So taking us on to our next guest is going to be Marco. So real quick, we're going to thank our sponsors here. Roll this little break. That'll give us a second to set up the stream, and we'll be right back with Marco just after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below. All right, guys. And again, a special thanks to our sponsors who make these shows possible. Today, we are, as I mentioned, running from 8 a.m. till 2:30 p.m. Eastern time. That's about 6 hours, which is just a crazy long stream. And to help us get there, we just had Miko. Next up, we've got Marco. Hey, Marco, how's it going, man?
Hello. I'm good. How are you?
I'm good, and it's good to have you back on the show. Of course, Marco, you're a regular to the stream, but doing things a little bit differently today just because we've got so much time to go through the markets. I'm sure a lot of people are excited to hear from you. I just want to preface as we get started in this segment here, guys. Marco is a technical trader. He's very big on psychology, risk management, approaching the markets with a practical, approach. No Lambos, no Lamborghinis, any of that stuff, but really just practical trading stuff. So he focuses a lot on momentum trading, which is exciting. He trades the hourly chart mostly, and he has a select scope that he's looking at in terms of the markets. I think specializing is a very wise thing in the financial markets, and Marco is definitely an advocate for that as well. So with that said, Marco, I'm going to give you the floor here to share everything that you'd like to share here today. So before I step out, though, let me just also remind everybody, we're going to drop the link to Marco's channel as well here in the chat. So if you like his work and you'd like to see more of it, please help us out by supporting our guests who come on to make this show what it is. So Marco, you've got the floor. Thanks for taking over for a little bit, and I'll check back with you soon.
Sure. Thank you. See you soon. Hello, guys. How's it going? So if anyone has any questions or requests for the charts, just put them in the chat. And let me get started with my 6 currency pairs. So a little bit about my trading style. I only trade 6 currency pairs. These are the ones on the watch list, okay? And I only trade on the 1-hour chart. So I don't go lower, I don't go higher. Keep it simple. Check the charts 1 minute before the hourly close. So that makes it very easy for me to trade during the day. Tim, what's up? Gold, oil. Okay, sure. Google. Okay, you want to do the stock? Google the stock. Okay. Yep. We'll do all of the requests, but let's first start with the 6 basic ones that I have. So first we have the euro and the US dollar. So for this one, I am seeing nothing much in the price action. Okay, so I focus on the last 3 to 5 trading days of price action. That would be around here. And I'm seeing mostly corrective range-bound price action. What I do like currently is this large drop to the downside. Right here, this large candle going down. This is clearly a news candle. Now, I don't really look at news. I only look at non-farm payroll, so NFP. But just by visually looking at this candle, this is clearly going to be a news candle. So for me, it's very important to see, is this momentum going to continue? So usually when you get a news candle, in most cases, price can just basically range around like this, right? So this usually happens. What I want to see is I want to see price clearly continue down. It's doing that now. We're starting to print a large bearish candle. So if this closes with a clean close, I will definitely be interested to look for sell setups. I would take a flag formation, very simple stuff. So flags, break and retest trades, they have been used for like decades now in trading, basically looking for a small pullback to get in on the down trend. If it prints a large wick, for example, if it just prints a huge wick like this, that will be a lot more patient. So now my forecast for the euro and US dollar is just to see what will happen with this candle. Will the momentum actually continue after the news candle, or will it kind of fizzle out and continue or start ranging around? Okay, so let's see the chat. What's up? To think that I watch these streams, trade and business, I might say, Nick, props to you, bro. Awesome stuff. Yeah, these streams are definitely awesome. Where would you specifically enter, Marco? So I would enter on a flag formation. So let me give you an example. So here is a trade that I took last week. It was a buy setup. This is a buy setup, but basically we can flip it around, okay? It's the same. Buying, selling, same thing, just different direction. So we got the impulse, right? We got the impulse right here, but I still need an entry pattern. So I still need an entry pattern, which is going to be this right here. This is the flag. This is what I'm looking for. A small pullback, first high, first low, second high, second low. Blue candle is the entry candle. I go in with the market execution, 12 pip stop loss, fixed stop loss size, and then I just wait to see if the markets will either take me out or go in my direction. In this case, it ended up going in my direction, and then I just follow the trade with my trade management rule, basically. Okay, I have a fixed trailing stop loss rule. So on the euro and US dollar, how I would enter, or where I would enter, is I would enter right here on the bottom of this push. Okay, I would look for that exact same flag that you just saw on the Aussie US dollar, like this, basically to the downside, or you can flip it around. See, same sort of thing. First high, first low, second high, second low, and then I need the entry candle confirming the whole flag formation. So very simple stuff. 30 minutes chart, no, I only stick to the 1 hour. Regarding DXY, can you explain if the dollar will continue to be strong? Yeah, sure, we'll go over that definitely. Aussie US dollar, yeah, that one is on the list as well. Why those 6 forex pairs? Well, I just found they give me the best sort of diversity. Again, you have the euro US dollar, your Japanese yen, you have the Aussie in here, you have the pound is really good, you have the New Zealand Japanese yen as well. So it just gives me a diversity of many currencies and many, let's say, so you have many sessions, right? You have the New York session, London session, Asia session. So European session or London session is euro US dollar. New York session can be, let's say, I think the Aussie US dollar does tend to move, and the euro US dollar tends to move in the New York session. You have, of course, the Asia session. That's, of course, Aussie Japanese yen, Aussie US dollar, Euro Japanese yen, so stuff like that, or pairs like that. Yeah, the flipping is so cool. If you want to flip the charts, it's Alt and I. Okay, that's the command on Trading View. Okay, let's now take requests. So we're gonna do oil, we're gonna do gold, we're gonna do NAS 100, and we're gonna do the Aussie US dollar. So let's do gold first. For me, on this 1 hour chart, it's basically looking very corrective to the upside. So it's kind of forming a larger ascending channel. Now, I don't trade gold personally. I don't live trade it. So I'm gonna switch timeframes to make it just a bit more interesting. So on this 4 hour chart, I think it looks a bit better. I'm seeing an ascending channel. Okay. Usually after an ascending channel, what happens, in my experience at least, is price tends to reverse down. So if price is struggling to go up, there sooner or later it's going to drop. It's going to create a downtrend, and my goal is to just exploit the downtrend. So that would be the plan on gold. I would expect for something like this to happen. Okay, and then just get in on my simple flag sell setups, or we can maybe continue ascending up a little bit more and then drop. Right? Get a flag, drop, get a flag. So that would be the forecast for gold. Would I expect more upside? Well, I'm seeing prices kind of struggling on this 4 hour chart. Again, I still need the confirmation. So I would not just blindly sell here. I would need the large impulse going down as the confirmation that the momentum to the upside has been exhausted. So that's the forecast for gold. Let's do oil. Let's see. So give me a ticker for oil if you want me to do oil. Let's do NAS 100. Okay, NASDAQ. Let's go on the 4 hour. It's a bit more interesting. Yeah, super choppy. So I really focus on the forex currency pairs, right? So this looks very, very choppy to me. I think we can go to the daily even. Overall, forming an ascending channel. So according to my methodology, it's struggling to go up. But to be honest, I have seen S&P and NASDAQ as well. They can just trend for days or for months or for weeks. So basically they can keep doing this, going up in this very ascending, very corrective fashion. It is just a characteristic of these indexes, correct? So I would not be surprised if this one actually has more upside. It's just the way it trends. I would say the direction for this is to go up, further up. Okay. Should I trade the news or trade after the price action? So to be honest, my advice is definitely stay out of major news events. Definitely don't try to place a trade 1 minute or like 30 seconds before a news event. My goal in trading is to get the news events. Again, news events push the markets. They create some very nice trends. You only need to look at the euro and the US dollar. See, this is some major news, and this may spark a really strong downtrend. So you see, you wait after the news, you see what happens, you see if a direction is picked. That's what I'm doing right now. I'm seeing if the markets will pick a clear direction, and then you buy or sell. Okay, so then you actually look for trades. Don't gamble. Don't blindly go in, buy or sell 1 minute before the news, but actually wait for the news to pass, wait for the markets to settle down, wait for a clear direction to be picked, and then execute a buy or sell setup that, of course, fits your plan and that you have thoroughly backtested. That's my advice for trading news. I have seen a lot of traders blow up, especially if they're doing some funded accounts, FTMO, stuff like that. They want to gamble, they want to trade the news, they want to pass as soon as possible. Never ends well. Even if you pass phase 1, pass phase 2, you're going to crush the funded stage, or you're just going to blow up in the stage 1 right away. So backtest, execute the plan, don't gamble the news. Okay, Alt-I is a super nice tip. Yeah, it's awesome. That function is really good. US 30, trade news full margin, the only way to make good money. Well, yeah, if you want to gamble, you do not have to go to a casino. You can just find a nice news event, buy or sell, max out the margin. It's going to be fun. But again, it's not the way to consistently make money. Okay, so you're more of a swing trader? Yeah, definitely more of a swing trader. So my statistics are 1 to 3 trades per week and around 4 to 12 trades per month on average. Okay, so let's do the Aussie US dollar. I did mention we're going to cover the Aussie US dollar. I do trade this one live, and I really like the Aussie US dollar. It's one of my favorite, if not the favorite pair. To be honest, my analysis is going to be the same as the Euro US dollar. Basically, price action, you could make a case for an ascending channel. So it kind of makes sense that the price dropped to the downside because you had this ascending channel right here, after which we expect the price to reverse down, right? But now, because this is so large, I'm mostly focused on the actual impulse. So what I'm looking for, remember I covered this setup, this buy setup right here. I'm looking for this sort of an entry. This is looking really nice. This candle looks like it's going to close solid as well, which is a great sign. Okay, so when you see wicks, it's a warning sign. When you see a clean close, it's a very good sign. Usually the markets continue from a clean close. That's something I have experienced a lot of the time in the live markets. So my game plan on the Aussie US dollar is to look for a sell setup. Nice, tight, small flag like this, or a nice small pullback, break of the low with momentum, nice clean close, retest of the low, and basically I get in on a sell setup that way. Okay, so the break and retest is a pending sell limit, but a flag is just a simple market execution sell. Okay, so here would be a flag. I would sell, fixed stop loss. I always go in with a fixed predetermined stop loss. Currently, it is 12 pips according to the volatility. So 12 pips for the Aussie and the US dollar. That's it, 1% of the capital. So I risk 1% for every single trade. Okay, let's see some more comments. USD Japanese yen. Sure, USD Japanese yen is interesting. Let's see that. I don't trade it live, but it does look very interesting, and it does look very volatile as well. I do like volatility. Okay, so for the US dollar Japanese yen on this 1 hour chart, it looks absolutely great. Okay, it looks really good. Pair price action, again, not the best, coming from kind of a flat range. You could make a case for a sort of a V reversal in a range, which is the same thing basically as a cup and a handle, right? A very popular technical pattern. Or you could, some people may even see left shoulder, head, right shoulder. So we're definitely expecting a push up after this. All right, we got the push up. So now that we got the confirmation, we got the signature, we got the momentum, now I'm looking for buy setups. Again, it all depends how this candle closes, because this was clearly a news candle. If this closes solid, I will definitely be looking for buy setups. I'll look for a nice flag. Okay, so same thing as here. This, I would look on the US dollar Japanese yen, right? And it's looking like it has a lot of momentum and a lot of potential. Either a quick, simple flag with a 12 pip stop loss, or a small pullback, no selling pressure, break of the high. I place a pending buy limit order, fixed 12 pip stop loss, wait for the price to hit my level, and we're in. That's it. That's the game plan for the US dollar Japanese yen. Okay. Are these 30-minute charts? No, 1 hour. Yeah. So yeah, Nick made a comment. Basically, I trade only on the 1 hour chart. I don't go down, I don't go up. Your trading style is so simple and clean, just an impulse and slight pullback, casual continuation. Yeah. Basically, I try to keep it as simple as possible. No news events, only NFP. I do not trade NFP because it's extremely volatile and the spreads go up drastically. So NFP Friday, I don't trade. Any other news, I just basically trade through. I ignore it and try to keep it as simple as possible. Okay, took some of my profits. We'll be adding more on pullbacks. Iggy, which pair are you in? So which trade are you in? How do you trade 1 hour? Well, basically, okay, and you guys want to see gold again. I already did gold, but I know you want to see it again, so let me just quickly cover it. My analysis is that it's going to reverse sooner or later, okay? For me, it's struggling to go up. It's showing weakness, so I would expect this to actually go down. I'm still waiting for a signature. I'm still waiting for a confirmation, still waiting for a large bearish impulse to go down, but I'm not seeing much more upside potential on gold. Is it advisable to place sell stop on 4 hour if you have an edge of the market to fall? Well, it's all about your plan. How much backtesting data do you have? Okay, I recommend you have at least 3 years, at least the last 3 years. So 21, 22, and 23 of backtesting data. And then you use a strategy, you use a fixed parameter strategy. You test that strategy on the last 3 years of backtesting data, and you see, does it make money or does it not make money? If you just take a simple trading concept and you execute it in the live market, so let's say you place a sell stop on the 4 hour, let's say we go back to gold, and let's say I expect this to drop, okay? I don't, because I still need the signature, but let's say I expect this to drop, and I just place a pending order, a sell order like this, blindly. Well, I have zero data backing up this trade. I have zero data backing up this claim. So this is a pure gamble, okay? If you don't have any data on your trading edge, then you're just gambling in the markets. So use this concept, use the concept of an ascending channel and then a sell stop, let's say on gold. Go back, test the last 3 years. See if your strategy makes money or doesn't make money. Okay, gold coming down. Well, I'm not sure. Again, we need the confirmation. The dollar strength. Sure, let me cover the pound US dollar. I do trade the pound US dollar live. So this will give you also an indication of what I think of the dollar strength. Again, we covered the euro US dollar. My bias is for this to go down. We covered the Aussie US dollar. My bias is the same. This should go, it should not go down, but I am forecasting a move down. Let's do the pound as well. And to be honest, it looks very similar to the euro US dollar and to the Aussie US dollar. So we have like a small ascending channel, not the cleanest one. So I have seen them being much more clean and clear than this, but still it's technically an ascending channel. So I expect the price to reverse down, right? And then we have the confirmation. We have the signature right here. Look at this bearish momentum. And it's just, there's no sign of stopping right now. I don't see any bullish pressure. It all depends on how this candle closes, but for now it's looking very, very good. It has a lot of potential to go to the downside. So my bias is, of course, for dollar strength, right? This is the DXY, dollar index. Let's go on the 4-hour. Let's see it clear these highs, okay? So this level may be some resistance. Price can easily hit this level and reject. Again, you have 2 points right here, very strong points. This is the major high. If we go on the daily, it all depends on how we cross this level, right? So that is something I would pay attention to. Can the price push into here and actually continue? That would be the question. My current bias is for more dollar strength, 100%. Again, all of the pairs that I'm looking at, that I'm trading live, are dropping like crazy. So that's a really good sign of dollar strength. Okay, I'm new to trading. How should I go about learning? It's pretty hard to trust Instagram and YouTube dudes selling courses. Well, look online and look for some reliable mentorships, I would say, right? Definitely do your research, do your due diligence, speak to other traders as well, and definitely see what Trader Nick has to offer. But I know it's hard to find a reliable mentor, but there are reliable mentors out there. So just do your research, try some of them out, and then see how you get on. Anyone that tells you that you do not need to backtest at least the last 3 years is a liar, okay? So you need to be backtesting at least the last 3 years of data, and you cannot get rich quickly in trading. Anyone that tells you that you can get rich quickly in trading is a liar and a pure marketer. So those are the 2 main warning signs. If someone tells you do not have to backtest, he's a liar. If someone tells you can get rich quickly with trading, he's a liar as well. You should run away. So that's about it for that. Rising wedge broken on pound. Okay, I don't really look at the rising wedges and those kind of patterns. I mostly look at momentum. I'm purely a momentum trader with some patterns in between, okay? What if all your pairs got the same aggressive movement? Does it mean you will going to have multiple entries? Yeah, okay. If all 6 pairs that I trade, all 6 of these, if they form an entry at the same time, I'm gonna take it, okay? It all depends on my personal account leverage. I have 1 to 30, and if I risk 1%, that's 3 positions that I can have open at one time, okay? So I'll have to pick and choose, but if I had 1 to 100 leverage, I would take all 6 entries that formed at the same time. Hey Marco, are you from the EU by any chance? Can you recommend any brokers? Okay, yeah, I'm from Europe and I use IC Markets, okay? So I have found, for me personally, IC Markets has been the best, never had an issue with withdrawals or anything. Yeah, I like IC Markets. Dollar strength is here for some time. Euro US dollar weekly made a triangle. It's not time to go up. Okay, I'm not looking at the weekly. I'm only gauging the momentum on the 1-hour chart. Okay, so USA prop firm on YouTube, people are saying are collapsing. Is it good to invest in prop firms again this year? Just a short answer. Well, yeah, for US clients, you should stick to, I think, futures prop firms. Those are regulated, those are legal, or maybe Darwinex zero program, something like that. I would stick to futures prop firms if you are from the US. Okay. Let's see if we have some more requests. Let's do the last one, and we can do. Let's do the Euro Aussie US dollar. Okay, Euro AUD. Let's do this one. Okay, this is going to be the last one for today. What am I seeing on this 1 hour chart? Well, basically, I'm seeing overall a descending channel. Not the cleanest one. When I say I want to see a clean descending channel, it usually looks like this, meaning only the lows are being broken very correctively. This is a bit all over the place. So the highs are being broken. See the dotted lines. The high is broken here. Okay, that's normal. But here the high is broken, here the high is broken, and here as well. So not the cleanest, but still technically a descending channel nevertheless. And I expect the price to reverse to the upside from a descending channel. That's exactly what is happening right now, right? What I don't like is wicks. I really don't like to see any wicks on candles. Wicks, for me, indicate weakness, and they indicate a corrective range-bound market. So I would prefer to see a nice clean close, no wick, okay? This, to me, is not looking good. This is a huge wick. Really, really big. If I measure it, it's like 28.8 pips. Compare the size of the wick to all of the candles in the price action. Definitely you can see it's really, really big. So I would be a bit more patient. I would not take a buy setup right here. Again, I would be more patient. I would see if the next candle can actually continue with the momentum, show me a nice clean close. All right. So that is my forecast for the Euro Aussie. Being more patient because of the huge wick. This now looks great. See, this candle closed. I'm 100% looking for a sell setup. This looks absolutely awesome. EJ, same thing. Huge wick on the bottom. That indicates weakness. Aussie US dollar, a bit of a wick. Again, look at this one. The wick is not that big. All right. So the wick is not that big. So if we get a bit of a range inside of the flag, I would still be interested to look for a sell setup. For me, it's all about the size of the wick. If it's absolutely huge, I will stay out. If it's kind of big but not huge, I will still look for a setup if all other confluences line up for me. Okay. Which indicator are you using? This is basically let me show you, GT recent high-low by Bong Hyun. That's the indicator. It's free on TradingView. So yeah, that would be about it, I believe.
Hey, Mark, how's it going? Good to listen in on some of your thoughts there. I like your that move on the Australian dollar. All the dollar crosses are just going crazy today. Dollar Swiss, I have a long position. Did you say that you're in a trade at all on Aussie dollar?
No, I'm definitely looking for a sell setup.
Okay, yeah. Very cool. Yeah, I just all of the dollar crosses, at least on my side, are just going crazy. The euro dollar's down 1% on the day. That's quite wild. But thank you very much, Marco, for coming in, hanging out here for a little bit. I just want to say to the audience who just spent some time with you, if you guys are not already following Marco on his own social medias, he has a YouTube channel, he's got Twitter, he's got all the sort of different places you could find him. Make sure to go find him. We're going to drop a link here in the chat to Marco's YouTube channel. That way you guys can go follow him, go subscribe, do us that favor. If you're watching here with us live, it helps us out to support our guests so they keep coming back and share value with the community and can help themselves grow in terms of followers and audience. So there it is. Click that link. Make sure to go subscribe to Marco. And Marco, thank you very much for helping us on our marathon stream today.
Sure. Thank you very much, and good luck with the rest of the stream.
Thank you, man. We'll chat with you soon next time we see you.
See you tomorrow. Yeah.
See ya. Yeah.
Goodbye.
All right, guys. So we're going to keep going here. So as I mentioned earlier, stream is going from 8 a.m. to like 2:30. So I've got my, there we go. Got my chart on the screen here. So I was mentioning just a second ago, the euro is down against the dollar just about 1% on the day. That is an incredibly volatile move for currencies. And of course, Marco, who you just listened to for a little bit, he's specializing on currencies. Look at this move. I mean, this is just a remarkable and rare kind of move that you don't usually see in currencies. What I mean by that is, a lot of times you get a lot of ranges, you get a lot of back and forth, but right now you are seeing some decisive price action. And in my personal view, fundamentally, technically, I think that this move is set to continue. I don't think that this is just a blip, because let's go through this for a second. In fact, why not use a software to do so? Let me see if I can. Actually, you know what? Let's do something really quick. Let's go to what do I want to do? I'll do indices. All right. So I wanted to just show you guys really quick some of this data. Marco in the chat says, thank you for having me on the live stream, Nick. Really like the volatility we're getting today. Absolutely. And again, big shout out to Marco and his channel. Make sure, guys, go support our guests. It really does help out. Also, can I just ask you guys a favor as we pick up this next segment of the show? You guys are stuck with me for a little bit. Let me ask you guys a big favor. If you're enjoying our efforts here, we are going hard today in terms of stream planning and being here to give you guys coverage. If you are appreciating this stuff, do us a quick favor. It's free to do. Hit the thumbs up button on the stream. Last time I checked, we were at like 500 likes on my channel. We're streaming to different places, but if you guys could help us blow up the like button today, we're trying to break a record in terms of most liked stream ever. And you guys can help us do that. Drop your like, contribute to the community in your small way just by hitting the thumbs up. All right, so I wanted to walk through some of the stuff that we've got here. We have recently, I want to just, of course, talk about CPI, but also talk about NFP. Okay, so jobs data came out hot. Okay, we had a jump in jobs data, which of course is strong for the dollar, right? NFP came out 303,000 jobs created. That's compared to the previous. I mean, the labor market is heating up. And what I mean, or what I'm trying to call attention to is that people have been thinking that interest rates are going to come down in 2024. And I'm one of them. Admittedly, I'm not going to change my opinion just because it's convenient. I think that interest rate cuts are coming. But just like the market, we've continuously seen strong economic data prints that are pushing back on how soon those rate cuts are really going to happen. When you get strong jobs data, if everyone is getting jobs and employed, obviously that's a good thing. But if you're somebody who wants to see interest rate cuts coming into the picture, that's not a great thing, because jobs are inflationary. And not only that, if the economy is doing really well, the labor market's doing okay, the Fed might be less inclined to cut interest rates to stimulate the economy. If the economy is doing great, why do they need to cut rates? Not only that, why do they need to rate cut when the latest round of inflation came in higher than expected? 3.5%. Guys, previously we were at 3.2. We are jumping in inflation, and at the same time, we've got hot jobs data. This is kind of remarkable, to say the least. I really think that what we've now got in front of us is a scenario in which case we might not see rate cuts this year. If we keep seeing this data come in like this, do not be surprised if the tone changes to we're comfortable pausing. And if they say we're comfortable pausing, the stock market's probably not going to love that. You know who is going to love that? The dollar. The dollar is on fire today. And to help me guide through this, I think we might have a special guest. I met him in person just the other day. We've got Chris Pulver on the line. Chris, if you're good, give me a thumbs up to join. If you're not ready yet, give me a thumbs down. Okay, he's good. All right, we're bringing him in. Hey, Chris, how's it going, man?
Hey, Nick. Happy Wednesday, man.
Hey, so you're in a different setting today. Where are you tuning in from? I know where it is, but tell
Yeah,
us.
I'm tuning in from North Augusta right now.
Yep. We're in the same state, which is a rare occurrence. Does it feel different? Because usually you're over on the west side. It's earlier in the morning. Does it feel a little more lax to wake up at this time?
It feels like I have all the time in the world. I'm waking up with like a 3 hour, delay, and all of a sudden it's like, hey, opening bell, and I've got a full night's sleep.
Yeah, that's
First
kind of
time.
nice. Yeah, I felt, I've been on the West Coast and traded on the West Coast, and I kind of liked the idea, like you said when we were talking together in person. Like I liked the idea of being done at 1 or 2 p.m.
Yes.
But it's also really nice that you can wake up and kind of like get right into the action without waiting a bunch of hours before stuff starts. So I can see both sides. Chris, we had Nasdaq and S&P down 1% today. Inflation did it again. It
Yep.
came out hotter than expected following Friday's hot jobs data. What is your takeaway from this? What do we think about, the dollar index, the indices? Is this are these moves gonna last, or is this temporary?
Well, I did a video this week for my Discord channel, my YouTube channel, and my followers, and I really think price action is ultimately what we have to follow, because the news seems a little heavy for the stock market. This heavy top, this kind of rolling top, this could certainly do some really crazy damage to the downside. All the inflation numbers were higher, right? Month over month, core CPI and year over year, all higher. I just jumped in the stream and you said this could mean that there's a pause this year. So the June rate cut. Nick, do you have the expectations for the CME watch tool? Because I do wonder if it's changing right now as we're going through it. Or if this is something that, maybe after today's close or after Friday's close, if it looks a little bit different. But, the probability was around 65%. We would see no cut, or I'm sorry, we'd see a cut in June. And so I'm curious right now, it's still showing June at 80. Nope, that's actually switched. So there's a pause expected for June now.
Wow.
Okay.
Wow. That is, as you mentioned, that is a big swing. So an 80% expected hold in June. I'm curious about July, Chris. So here's July. July is actually leaning to hold as well.
Yep.
I mean,
Okay.
but what can you expect when you have hot jobs and hot inflation? The Fed has Jerome Powell in his last go around, he was talking about how, there's risks to not cutting soon enough to the jobs market, but the jobs market is like red hot at the same time as inflation for a third month in a row has been higher than expected. I don't know. I feel like there's, especially with other members of the Fed coming out and basically leaning in on, we don't need to cut rates. We've heard some of that from Kashkari. Some of the other Fed members are pushing back on that. I don't know. This looks kind of bleak if you're somebody who's just really hoping for rate cuts coming quickly. Here's September is I guess the first where we're starting to see rate cuts, but that's getting pushed back gradually since the beginning of the year, Chris. I mean, at the end of 2023, you had yields in free fall, which was, of course, great for the story, but then it's just continuously creeped higher. And here we are near a high of year for the 10-year yield, for the 2-year yield, obviously just flying high, pushing back on the idea that rate cuts are coming. So, bit of a change in pace.
Yeah, it's been, I wasn't surprised to see the data this morning and see large gaps to the downside. If I can share my chart, this is what I thought is the most important thing to watch. Technically speaking, we finally drifted on the right-hand side of the trend line. We had that huge sell-off last Thursday. When I came into the markets this week, I know there's news with CPI. We have PPI on Thursday. Highs and lows. It's pretty clear on the SPX where the ceiling is, where the floor is. If this floor gives out, look back at the NVIDIA gaps from late February. That's probably the likely spot we can see. We're kind of maintaining right now. It's like the market's not pushing any lower from a big aggressive, 55, 60 point gap lower. The SPY, same type of thing. You can see the ceiling on top, floor. And, there could be noise in this, but if we break, similar to what we had last Thursday, if we break this floor on the SPY right around 513, there's probably another 10 to 13 points of the downside that could all happen in 1 or 2 days. So if the bears do take control, expect it to be fast. And technically I'm still in the camp of, I think the market's eager to buy some dips. I know the Fed might douse this rally for right now. But I still go back to the historical significance of an election year. It's usually very steady, and I don't see a crash necessarily. I do think the Fed, the Fed's been very lucky to have this soft landing / no landing. The market's been, the sentiment out there is really bullish, and typically that gets to the point where take the momentum much higher, significantly higher. So, again, SPY, SPX. Here's the DIA. The DIA probably the most vulnerable as far as breaking the floor recently, and I'm kind of surprised that the Dow is the one that's breaking the fastest compared to, the NASDAQ isn't breaking, right? The NASDAQ hasn't even broken the structure I have in my chart. So NASDAQ, to me, the Qs have to break 432. Hasn't happened yet. Dow is price weighted, not market cap weighted. So what is it about the Dow with only 30 companies that makes it so rough right now, where it's underperforming? And it's actually the kind of the laggard of the indexes.
And that's the thing, Chris. I think, a couple of weeks ago, we were talking about Dow versus NASDAQ. And I have to kind of take a step back and think for a moment here, because when you look at the Dow versus the NASDAQ, my thesis was, yields are dropping. Looks like the economy is going to finally start cooling. That was my theory. So maybe you go more Dow centric, because in an event where we actually start to see rate cuts, the Dow should be doing okay relative to the others. The issue now, I think, is that you've got yields jumping. That threatens the attractiveness of dividend stocks, which of course a lot of Dow names are big dividend players. And so you've got that kind of under threat. And not to mention, we saw 2023, there's some lessons there where 2023 was a monster year for the NASDAQ, because it's not that if we see the idea that rate hikes are back on the table, NASDAQ stays so far away from it because it probably drops like off of a bridge. But if we're probably still going to rate cut at some point, but we just don't know when. I actually think the NASDAQ looks attractive there, because that's what we learned in 2023. The market loves growing stability. The obvious picks in the market like Meta, Alphabet, Amazon, Apple, these companies that have a lot of growth, and regardless of rate cuts or not, they'll still do fine. That's a strong area of the market to be in. If you think that, and if you're right, that the market is going to cut rates, but it'll be a while. If you're in that area, that's probably where you want to be more of a NASDAQ bull. And I think that that's why you're not seeing the NASDAQ down 2% while the S&P and Dow are down. The NASDAQ is doing just fine. It's hanging in there. Usually on a big bearish day, you'd probably think the NASDAQ would be down way more than the others. But again, perhaps there's a little bit of an appetite, Chris, still for, as we go into earnings seasons, the place where there is the most growth, there is the most opportunity, if we do in fact see interest rates eventually come down, but off of a strong economy overall. And that's the reason we're going to not cut yet. I think that that's still kind of a bullish case for the NASDAQ. So that's my opinion. I would like a dip. As you know, I've been saying that for weeks now. We haven't gone anywhere in weeks now, Chris. You've been right about that for the most part. Yes, we're down on the day, but we haven't really broken this range on the NASDAQ recently. If we do break out again, as you mentioned, we probably have room to slide lower, but I'll probably be a dip buyer if we do start to see this level kind of break lower and then form some sort of bottom. So that's my opinion, but I kind of have to take back my thought on the Dow until it becomes more obvious that we're going to cut rates. If we have a better idea of when cuts are coming, I'll look at the Dow again. But for now, that's my opinion on the NASDAQ. I'm not a NASDAQ hater right now either. So what do you think? Am I on or off base with that?
No, you're on point. And I'm going to try to keep, my outlook as simple as possible. It's clean charts, clean floor and ceiling. We break below that. I've got fib levels from the swing from the October bottom last year. I would be patient because there's two big levels, right? The NVIDIA gaps right here. If they fill, that's a pretty sizable, 3, 4, 5% correction on a lot of the indexes. They fill, that's a healthy bull market pullback. They pull back even deeper. We're talking previously testing the 2021 all-time highs. Now we're talking 30 to 38% retracement levels, probably a 5 to 7% haircut off the all-time highs. Again, in a bull market, those are pretty healthy cycles. And I do think that for easily the last 3 months, all I've seen is, good macro, good technical traders waiting for corrections. So we're in that uncertainty window of like, this feels like a correction is about to happen. This feels like the lows will break here for a little bit. But like I said, I'm with you. I'm buying the dips. I'm just trying to not buy too early. I'm trying to wait and see if I have a little bit more of a technical level get filled, as opposed to, well, we're going sideways. But understand, I mean, this sideways move in a pretty bullish market, we still have about a 2.25% pullback. And like you showed last week, this market on the way up has only had less than 2% pullbacks. So we're right in that wheelhouse where we could go up, we could pause, we could go up higher. We could still blow the highs off and then correct later. One thing that's going to be interesting with looking at that watch tool is if this gets, I mean, right now we're still in this kind of bullish period. I mean, April, May seasonality wise, the markets are expected to continue to rally. If they find a way to just keep the footing as is, maybe just barely eke out these higher highs, maybe it's the sell and may go away. Maybe it's the anticipation there's going to be a pause in June, and then September, maybe things get uglier. Maybe the Fed goes back to the old school ways, which is something breaks and then they react, as opposed to them kind of getting what they want, which is they're talking the market down-ish, kind of. They're talking expectations down, but the market doesn't seem to care. So, I mean, I think now it's the market. Last month, we're just acknowledging that the market doesn't care about inflation data. Now I think it does. Commodities are up. Things are more expensive.
The Fed is usually late. Like they're usually late. So that's the thing where, here we go again. They're wrong often, not because they're just dumb, but because financial markets are incredibly hard to control from a committee around a chair, even with the abilities that they have. The financial market's just incredibly difficult to control. How can nobody knows the future. And if this AI thing is really big, how are you going to control that, right? That's going to have so many inflationary events. It could cause massive spikes in unemployment. You can't control all that, right? So I'm kind of with you. I think you just kind of trade the market you're in. And in my opinion, I have stuck through, even though I'll point out a controversy of mine in just a second. I've stuck through overall that I don't think we need a bunch of rate cuts in order for the market to keep doing its thing. I think that technology will continue to lead overall. That's what I'm personally positioned for in some of the puts that I've been selling. I want to be exposed to those areas. Is there a possibility of greater drawdown in those areas? Absolutely. Now, where I am controversial to myself is that I've got this TLT position, which is kind of the exact opposite. I'm thinking, basically I'm betting on rate cuts by proxy there. That being said, here's my current position on TLT. So I'm down on this one. I've sold puts, but it's not as bad. I was mentioning this to Frank earlier, Chris, that the current situation with my TLT trade is that it's gone down in open P&L, but a lot of the implied volatility, as you'll know, has been soaked out of this since CPI is now behind us, right? So even though I'm down, I collected $1.07 on this one. And so if I get assigned, I'm fine with it. I'll kind of deal with the position. But things have changed since my initial thesis on this trade, right? At the time, I was thinking, yields are going to keep dropping. Now I'm not so sure. And I'm also not sure that they have to in order to continue to sustain a stock market rally. I think yields could stay where they're at. And this is actually a long-term, historically normal area for yields, as much as it might sound very high. If you go back for long periods of time, this is not like an unheard of range at 4.5% for the 10-year. Now, I have heard a lot of people kind of point out, though, that if yields continue to chug along and they get closer to that 5%, now you've got a problem, because now you're probably back to interest rate hike scenarios. Is that what you're thinking too?
Yeah, I mean, arguably, if you look at where the I believe it was the 10-year. If you look at the 10-year yield, that thing hit 5%, and that was the top. We break that. I think the market's going to have a lot more issues ahead, because the U.S. has fueled growth with debt. That's the biggest difference right now between China and the U.S. is the U.S. has been fueling and backstopping with debt, with printing endlessly. And, that's in the background. That's the big argument is the Fed's going to break something. The Fed's going to fuel a debt bubble, and it's going to be, come to pay the piper at some point. And that we don't know. It's like, I mean, Japan has a 225% debt to GDP ratio. We're at 120 in the US. Arguably, they've looked at all these, empires for thousands of years. And what happens? They usually default. And that's, again, the threat. But it's like, you're just talking about the dollar this morning. The dollar's not stopping. The dollar's probably getting stronger in the near term. It's the cleanest dirty shirt in the laundry, so to speak. I was surprised this week that, BOC is keeping rates on hold, if I'm not mistaken, right?
B of BOE. I haven't even looked.
BOC, so Bank of Canada.
BOC, Bank of Canada. Yeah.
Yeah. So rates on hold, RBNZ rates on hold. Tomorrow is ECB. I would be surprised if all central banks continue to pause, waiting for the Fed to finally cut. I think the Fed has stretched those central banks long enough. We saw the Swiss National Bank finally flinch, and they cut rates, but their inflation data hasn't been hotter. It's been actually trending lower. But I think that Bank of Canada is in a rougher spot. The Canadian economy is in a rougher spot. Euro, I mean, the DAX is making all-time highs. The Euro runs are looking pretty solid. So I don't know. I mean, honestly, like I said, clean price action for me. Looking at some China plays, I'm watching Baidu and Baba really closely. I know you have positions in FXI, as do I. I didn't mean to make that rhyme like Dr. Seuss style, but
I'm thinking about, Chris, my expiration date is the 12th on the call that I sold. So I'm probably going to just sell calls again, lower my cost basis after this. Also, while you're just to draw a visual to what you were just pointing out with Europe, here's a bull case for the dollar. I think the bull case is kind of hard to ignore right now. Jobs data, super strong. And this is what I was saying right as you joined the stream here. Jobs data was super strong. Inflation data today surprised again. And where does that leave us? Well, it leaves us with inflation in Europe. As you mentioned, they don't have the same, if they're trying to wait on the Fed to cut, there's going to be a point where they have to decouple with what the Fed's doing. If their inflation's coming down, their economy is slowing, and the US economy is just not, there's going to be a point where you see this divergence. And Chris, is that where you just stay long the dollar? I mean, I've got $1 position open right now. It's a weird scenario because it's not the same as, interest rate hikes are going to, go into oblivion and the dollar just looks so strong. It's that story of the other ones, as you're just pointing out, the other ones might be forced to cut rates. The dollar may not.
Yeah. And think about this. This is a good way to tie this together. Look at the dollar index right now. And we're potentially ripping up above this little, I mean, it's been very choppy I go back to, January 15th, the dollar index has been a very hard read. We're just trading right in the middle of this broadening pattern. If we break above this 105 handle, there's room to hit 105 and change. I think that this broadening pattern high gets us to 107, 107.50. That's the story of the dollar just getting a little bit stronger because it's likely looking like the central bank that'll continue to hold, continue to pause, and the cuts will come later. Other central banks may not be in the same situation. Now, here's the big trade. The carry trade is still king. What's the dollar yen doing?
I knew we were going to talk about dollar yen. We had to.
Dollar yen breaking highs. I mean, we've had nothing happening in the currency world for dollar yen since the end of March. And here we are 65 pips higher than the intervention levels that we had multiple times in 2022. So the carry trade is happening, which means the dollar's going to look attractive from that sense. You hold dollar right now, it's the highest yield of all the majors, right? I mean, New Zealand's at RBNZ is 5.5, but it's a commodity pair. It's a risk on pair. And if we have some risk off flows in the currency land, you're not paying anything to hold New Zealand dollar short. You're getting paid actually to hold dollar against everything else. And dollar yen, again, breaking these highs. It's painful for the traders that are trying to technically short these highs and seeing this as resistance. I still don't think there's any reason to short the dollar yen. I don't think there's any reason to be shorting dollar Swiss. I don't think there's any reason to be looking for this unraveling or unwinding of the carry trade. And I still think, even though with the sell-off today, I mean, we're sitting at 51.64, looking at the VIX, I don't see the VIX spiking above 20 anytime soon either. It's a very contained volatility market. Everyone's talking about this vol suppression. I think a lot of that has to do with structured instruments as well as zero DTE. There's a lot more liquidity and active hedging going on day to day. So even a move like today that gaps lower in the major indexes, it's pretty contained because there's proper hedging going on, and you can hedge with the same instrument. You can do it 0 days. So, I mean, with your SPY, with your Qs, with your SPX, single day expirations. I mean, if you were already going in today as short, great. You got paid an instantly an opening bell, but now the market's not pushing anywhere further. It's kind of pulling back and looking like we might try to have some type of semblance of a gap fill. But anyway, stuff to watch. Dollar index looks good. Dollar yen breaking new highs. The carry trade is still very alive and well. And I think that's something that traders don't want to fight. And I don't think that this is the year that it unravels. I think this is the year where Nikkei is at all-time highs, U.S. markets back with bullish sentiment, and you just carry that momentum. That becomes irrational, becomes extreme. 2025 to me is, you know, a better time to get more sustainably bearish. Right now, it's going to be like sprints and pauses. If the market breaks down, it's going to be quick, like aggressive gaps lower, and then we'll find our footing and wave back up. So like we talked about early in the session, if we have good technical levels in some of these pullbacks, I will be looking to buy dips.
Yep.
So trying to keep it simple.
I'm kind of on that wavelength as well. You know, I think you mentioned the VIX. The only thing that gets us, in my view, above like a 20 sustainably on the VIX is if rate cuts are off the table and rate hikes are reintroduced. If that's the only thing I can think of. Yeah. Because then you're probably talking 25, 28 VIX, which, you know, we saw that was what happened in 2022. Obviously, you had the massive blip in 2020, but that's different. I think a real, you know, spike in the VIX that was just traditional market volatility was rate hikes. How far is it going to go? And we just had that big question. As you mentioned, you know, for the carry trade and for the market to continue, you need relatively a lower VIX. Like a high VIX is usually preceded by uncertainty about what's going on in the world. How far are they going to hike rates? How bad is this recession going to be? If you're talking like 2008, right? All these events where there's a big question mark. But right now, I don't see a huge question mark other than when are they going to cut rates? But that's not devastatingly terrifying, right? The story of like, well, when are they going to cut rates is not like going, in my view, to crash the market. What's going to crash the market, if you're going to see a crash, is going to be, oh my gosh, they didn't get inflation done, and now they got to go back to hiking. How far is that going to go? That's going to be more of a market crash scenario, but not my base case. And I don't think most people think that's going to happen. It's just that's the I guess the black swan potential on that front. So
yeah,
Chris,
you're right.
Real quick, don't mean to cut you off. I'm just going to say this.
Sure.
For those of you guys who are watching with us live, I just want to drop really quick a link to Chris's YouTube channel. If you guys aren't following Chris, he has a Discord channel. He's got a YouTube channel. He does all sorts of big stuff. He's been in the trading industry for a long time. I just wanted to bring attention to that. We will drop the link to his YouTube channel right now. Make sure to go follow that. And Chris, if you don't mind, we're going to do a quick break, and then Frank is going to take my spot. I'm going to go drink some water. I've been on stream for a little bit, so I'm going to take a quick break and give you over to Frank for a bit. Is that cool?
Sounds good. Thanks.
Okay, we'll be right back just after this. Check it out.
It's our Edgefinder anniversary sale. If you want 40% off the Edgefinder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our smart money indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edgefinder anniversary by grabbing yourself a copy today on our website, a1trading.com.
Hey Chris, how's it going?
Frank, what's up, man? How are you?
Pretty good. How's Augusta?
It's good. It's going to be a swampy day out there. It's going to be 80 and muggy, so I'll be ready to get my sweat on and be there all day for the par 3 contest.
Nice.
Yeah, it'll be fun. I'm going to head to Top Golf here in a little bit and get some reps in, see if I can test the waters, see some ball flight with a broken arm. We'll see what that's like, and then I'll head to the par 3 around noon today.
You say broken arm?
Yeah. We did talk about that. Yeah, I've had a broken arm for like 8 weeks, and it's not fully flexed, and it's a problem. I'm working through it, but thanks to some competitive basketball in my 40s, it's not a good situation. So,
dang.
Anyway,
I did not know that.
Hey, what do you want to chat about today?
I was gonna ask you what you think about like what's going on right now. So hotter CPI, just higher than expected across the board. I don't really have a longer term perspective right now. So I was going to ask you, what do you think is happening or that is going to happen today with the market? Like we saw today's sell-off pre-market once it opened, starting to come back. Is it going to keep continuing, or do you think it's
I mean, that's the multi-trillion-dollar question, whatever's happened in the markets today. I will say this though, just judging by the data, I do think that this is finally getting traders' attention and investors' attention, because now, here's what I'll say. Yesterday was a pretty wild day, by the way. I mean, we had an aggressive sell-off in the morning. We pulled back, and then that late push, late in the day to get the close at 52.09. Like you and I had messaged, I mean, we're right back in the middle, right? We had this ceiling above around 52.67 and the floor below, and it was literally sitting right in the middle at the close yesterday. So coming into today's trading, what's the market doing? Pushing back down again to retest those lows at 51.45, but failing to break. So today, if things are contained, then perhaps the market, closed here yesterday, opens here today, pulls back and fills the gap. But then it just stays right around that 5,200 handle. And what's the rest of the week look like? Chop, right? I mean, again, we're all the way back down to the lows, all the way to the highs. Market can do either one. So I do have a position on this morning. I took a trade at I did a 5,200 by 5,205 by 5,215. So I did a broken wing butterfly on my end, collected about 55 cents. And I'm actually looking for this. If I was just thinking pure price action today, the news is enough to be a little bit worrisome. We had a close yesterday. We had a gap lower. I'd like to see the market do something like this, pull back into some structure, but fail to fill the gap and then come back down and retest the lows of the day. We retest the lows of the day. I keep my credit on the butterfly. We break the lows. This is where things get interesting to me. If we contain this week with data that should arguably disappoint the market, I mean, we're looking at yields going higher. Market should be a little on edge with, it's clearly higher than expected inflation, and it just continues to trickle higher. But if we can't break 51.45, then this is just chop. And I would be very careful on strangles. I'd be very careful on trying to call the range, because at some point that range breaks and it's going to be ugly. So I don't want to be caught on really either side of it. I like to be, prepared for it. So for me, I'm picking my battles with those broken wing butterflies and trying to get the credits. Yesterday was a good example where, I took the trade for, I told you, like 80 cents, and it ended up paying close to $2 extra, because it was late in the day, around that 3:15, 3:30 in the afternoon, right before closing bell. And it was right back to my pin levels around 5,200. And that was an impressive opportunity. I didn't take nearly that much profit. I still grabbed another 20% extra on top of my full credit, which I'm totally happy with. But to see how much more profitable it became late in the day, if I'm able to sit down and watch stuff all day, every day, I mean, for especially those trades, if you happen to get close to those pin prices, it's pretty solid. So my thoughts today, we tested the floor. We didn't break the floor. I could see the market, failing to come all the way back and fill the gap. But we have to do this. We have to break below 51.44. If we don't, this is SPX, which would be on the SPY side. That'd be the equivalent of, I've got the floor here on my charts. It's probably around 512, 513. Yep. So there's my floor at 513. We're failing to break lower. But if we have gap lower, pull back and fade, and all of a sudden, this is where they say amateurs open and pros close. If the pros / bigger pockets, right, deeper money, pushes this back down to lows, that to me is a sign of, okay, there's some pressure coming back into the markets. If we push back down near the lows of the day and we gap lower tomorrow, I would say I'm way more interested in a correctional move to the downside. Even if I just took this conservatively, I've got all these fib levels and all these things from the October dip last year. But like I told Nick earlier in the stream, if we break below this floor to the downside, I'm looking at the NVIDIA gap first level. So we fall from 513 down to 503, or maybe the 498 zone. We pull back into some 30%, 38% levels. These are some good technicals to me. If I look at this chart, the NVIDIA gap, if we fill that, or the 30 to 30% or 30 to 38% level, I'm certainly interested to see. I don't know if we have a V bottom necessarily, but it wouldn't surprise me, because if the market's eager to come back and retest, what would that correction be, and what would that that catch up be? If we let's say this, Frank, let's say we come back to the all-time highs, which would be around 480. Come back to the all-time highs, and if you were just long the SPY there, and we come back and retest the highs, That's a 9.5% move. Now, the entire market, the entire index is only up 9% for the entire year. If you could match that in one retest of the highs without having to break all-time highs, that's a pretty good chunk to be invested in an index, in my opinion. So anyway, I mean, a lot of stuff can happen. I'm watching this price. We're at 51.77. The trade that I'm in right now, I'll show you my position here. So I just have one position open on the butterfly spread. I sold the 5,200. I bought the 51.95, and I skipped out to the 52.15. So right now, I'm down about $80 on the trade. But with 0 DTE, this expires today. So
it's going to move a lot.
Yeah, like as long as we're heading back up, so it's gonna somewhat threaten. But again, I mean, I looked at it from a. Let me see if I can pull this chart over here. Let me undock this. That's SPX. Let me float this out.
I mean, despite these giant moves we see intraday, overall price is still very range bound. There's really there's a lot of volatility, but in a fixed amount of space, which is kind of like there are definitely buyers in this market that are keeping this thing from going anywhere. And even if we do see like harsher concerns on higher inflation and maybe the Fed decides we're going to have to cut back on the amount of cuts we want to do this year, or we're going to hold back till later in the year, or we're even going to think about hiking, that trend might not even spark some giant sell-off. It might just be a gradual choppiness to the downside.
I agree. And it's always tough. It's always tough to be a seller because we can have, and if anybody's experienced, I mean, 2022 is a good example. If you traded through 2022's correction, that would be back in here. If I go to the daily, I got to go back a little bit further. So 2022's correction, we had a lot of gap lowers, fill the gaps, fade lower. And it was very difficult because you'd have the market gap lower, rally for the entire day that it gapped lower. So the bears really don't get a chance to see much follow through. And we could have the same thing here. We can gap lower like this, fade back, gap lower tomorrow, or like the bigger moves are pre-market, post-market. And it's very challenging. So like I said, if I'm going to be more eager to buy, I'm just going to wait and see if the market offers those pullbacks. I still think technically a pullback is due. Like Nick said earlier, I mean, the real bearish catalyst where this market probably dumps to the downside would be the Fed would have to be vocal about saying, we really are considering rate hikes. I don't think they're going to say that. They're trying to talk out of both sides of the mouth like they always do. But if it looks more like the Fed watch tool, for example, is looking like cuts are back on the table for whatever reason, and it could just be, well, here we go with inflation again, round two. That's probably the biggest bearish catalyst in my mind is a more vocal Fed on rate hikes are more likely than rate cuts. So pausing doesn't really change the mood out there. Cuts are expected. They're just being delayed. Rate hikes, on the other hand, I think that's what the market would hate to see is we didn't tame it. Fed acted too dovish too early. They pivoted too hard too early. And now we're paying the consequences by, essentially seeing that inflation has not gone away. And we're a long ways away from 2%. They can say 2% all they want. We're at 3.5 right now year over year. It's a long ways away. 9% down to 3.5 is a great improvement, but to say 2% on everything, they're not adjusting the target. They're talking about getting it back down to 2%. Let's pivot into something else here, Frank. What do we think about, do you know, or have you been following anything on the Bitcoin halving? From what I read yesterday, there's only 1.7 million Bitcoin left of the 21 million in circulation. We're holding pretty steady considering there's some risk off flows, but there's a big wedge right here. I do think that if we have a breakout to the upside, I think 100K just on sheer, speculation momentum looks pretty positive. So I want to say the halving's probably coming up here in the news. No,
yeah, it'll be this month, I think. I don't have an opinion on the halving because if it's anything like stocks, it's not going to change its value.
Right.
But I have noticed, I've read up on, the history of Bitcoin halvings and that they tend to perform better afterwards.
Mm-hmm.
So that could be something. I am still bullish on Bitcoin. I'm bullish on gold as well, just because it sort of acts as a hedge against the dollar, which I do think is weak or going to be weak this year because of the Fed's sort of narrative of if we're not going to change anything yet, we're just going to see how the data keeps rolling out for inflation and labor and whatever, then they might change their mind. But right now they're not in a terrible situation because they're looking at higher jobs numbers. We saw PMI recently, both expansion in services and manufacturing. And that as a result, especially with oil rising as well, with geopolitical tensions, inflation is going to go up as well too. So it's not too far out of their control. If we saw a giant leap in year over year or core this morning, it would have been very concerning. But I think core stayed the same. It just beat expectations of going lower. So as long as we sort of maintain this sort of course while the economy is doing well, it's still, not a bullish sign for the dollar, but also it would either be a neutral or bearish in my opinion. So Bitcoin, I think, is going to be good. And the halving, of course, when it happens, it'll probably, if history repeats itself, it'll do the same thing and perform well. But I want to look at a longer term position on Bitcoin instead of, trading week to week.
For sure. Yeah, I mean, I'm long term, and looking at the weekly chart right here, we're just showing 4 or 5 weeks of indecision. The daily shows a bit of a wedge forming. I was kind of hoping we'd have a bit more of a pullback. I'm long, and I've been long. My cost basis is like 17,000 and change. I mean, I've been in Bitcoin since like 4K. So I've had some nice runs as a trader. I'm not a hodler, not a diamond hander. I'm a trader, so I get 8, 9, 10x returns. I'm taking profit, reestablishing positions. I'm in the same situation right now. So I look at this, potential wedge, and I'm always careful about wedges because if we do see like an equal low, I don't take that as a bearish sign. I take that as looking for an equal low or looking for a pullback. So from this low to this high, we pull back, let's say, again, look at some simple levels, come back and retest this like 59,000. I've been saying now for a month, if we get between 60,000 and 50,000, I'm just going to look for opportunities to buy dips. If we break and go higher, that's fine too. I don't know if I'm going to really add on fresh breakouts. I'd like to see something where we can at least try to tap 60,000 again. But longer term, I like the upside. And I think if we're talking about Bitcoin, we got to talk about, we got to talk gold and silver as well. Gold is having a pullback today with the dollar on the rise. And
I think gold's coming back though.
It's coming back. I was just going to say, I looked at this literally within the last 45 minutes and it was a big fat red candle. It's not anymore. So there's clearly some eager gold buying out there. My measured move on gold, now that we broke through target one for me at 2270, my next move on gold is 2470. So I am still interested to buy dips. I'm in gold futures. I'm in GLD. I took a nice chunk of profit here at that halfway point. And then it also gets us ready for, here's XAG. And we're well above that 26 breakout. So I'm long silver. I'm long gold. The nice thing for me is we're not at all-time highs on silver. This is my measured move just based on symmetry. Let's just talk percentages. Gold can certainly keep going and keep running, but I mean, I've got a measured move on silver at 25% higher than current price. Any dips, any pullbacks, I like silver a lot. I'm in SLV with some contracts. I'm in gold or silver futures as well. And if I go to SLV, we're trading at 26. I've got a sell position against this at 30. And hopefully that's not too aggressive or too in the way. So if I go to my, let me go to a silver position here. So SLV numbers might be small, but this is up about $2,300 in this account across the board. It's up around 12 grand. Let me see if I can show that with everything here. So SLV across the board.
What kind of trade was it? Did you say
it was a diagonal spread. So I bought the $20 long calls out to January of 2025, and then I'm selling against it the $30 calls in July. So I'm up about 15K right now in SLV, and I've rolled it once already. I rolled it up from like $26.50 to $30. I will consider rolling it again, not for a debit, trying to get some credits because I'll buy myself some more time. So if I go up further in price and out further in time, like I said, I'm just looking to see if I'm looking to roll this, ideally I'd roll this up to like 32.50 if they've got a strike available. And by the way, this is just my one target. So this is my halfway point right here. This is my halfway point to my profit target. This is ideally where I'd like to take silver and ride this thing as long as possible. That'd be up to $44. So out to January, if this thing wants to rip, you know, and again, I'm not going to be stubborn and say like, I'm taking zero profit. If I hit this level and it's in my best interest, just get it called away, I can always reestablish and still go after the longer term. And what I might end up doing is take the profit on the calls that I have and get that extra. I mean, my call positions, I'm trying to think, Frank, I might be in my SLV positions for about $3.85. And let's just talk that as from like debit credit perspective. So a $30 minus 20, so $10 minus 3.85. I make $6.15 on a 385. I mean, that's 160% in a position that's maybe going to go 20%. So it's a lot better for me in the option side to put up less capital, make 160% on my investment, as opposed to I buy the shares at $24, $25 and take it up for that, you know, 15, 20%. Right. So for me, I mean, I'll probably take profit on the call options and I'll reestablish maybe with own shares. I'll see if it has room to rip. And I mean, that's still another 18 to 20% to the upside. We get to that profit target. That's another 35%. So I'll take it. And to me, with silver not at all-time highs, with looking great for room to run this breakout, I've been patiently waiting for months and months and months. Honestly, probably one of my favorite trades is silver long, measured moves to the upside. It's very technical. We're in a good environment where gold is outperforming, silver's outperforming. We're getting directional moves for the first time in a long time. And, you know, whether the dollar drifts higher or not, whether the stock market is going anywhere, going sideways, I still think that right now gold and silver are great trades to be in, favoring the long side.
Hey, Chris, I got to step in here because we have our next guest in the back end waiting. We have Kenzo. Okay. So we really appreciate you coming on today. Thank you for making time for us. I know that you've got a busy week ahead of you, very fun week ahead of you, but we really appreciate you stopping by. As always, Frank, you too. Thanks for stopping by. I'm sure we'll see a little bit more of Frank later. But for now, we're going to Kenzo. Can you give me a thumbs up if you are ready to go? Let's see, Kenzo is ready to go. All right. So, Chris, thank you so much again. We will see you later.
All right. Thanks, James. Thanks, Frank. Take care, guys.
Thanks.
Bye-bye. See you.
Frank, same with you. See you later. And I'm going to bring in Kenzo now. Oh, let's see. Here we go. Kenzo, how you doing?
I'm doing great. Thanks, and you, man?
I'm doing good. Nick is recording his podcast right now with Owanda, so he may jump in maybe towards the end of your session, but we have this long 6-hour stream because of all of the fundamental news going on. Did you catch any of that CPI or Bank of Canada news today?
No, I was watching on CPI, but I was not actually on a trade, so I just jumped in after.
Sure. Okay. Well, Kenzo, you are a Friday regular. You know how this goes, so I will leave you to it. We really appreciate you coming on and helping out today, and we're here in the back end watching, so feel free to go as long as you like. Like I said, I think Nick might hop in with you towards the end of your set, but whenever you're about ready to wrap it up, again, we're watching, so feel free to go ahead and wrap it up and we can take it over. But we appreciate you coming on, and have a good stream.
Thank you very much, man.
All right, see ya.
Okay, thanks. So good evening, everyone. I hope you are doing great. We just received the news, CPI news, which was not really that surprising. Quite the same as last month. Yes, maybe some are actually surprised why maybe NASDAQ and US status, or maybe other markets, actually stock market, reversing, not actually following CPI. It's because, yes, it's positive, which means it's better than what they were expecting, but it's just the same as last month. So which means, yes, inflation is still high, but not actually going up or aggressively going up like before. So which means it's not really that bad. It's not really good, but it's not really that bad. And later on, around 8, I think maybe 3 hours and few minutes, we are going to have a meeting from FOMC. So that is going to that might change the way we see the movements now. But what we have now, we are on DXY. We are on DXY. So what's really happening is, as this is actually a dollar, we see it going up because the news were positive. So we had this support area around this level, but from this area you can see that already the market was going higher. But at the same time, we also have this resistance. The market is there at the moment. So will the market break out of that resistance or keep going up? We don't really know, but it seems like that. It seems like the market is ready to break out of this area, or maybe the market might just play around that area because FOMC can also be aggressive. So things might change. Things might change, and it's not really safe to trade around this time. But beside the fundamentals, you can see that around this area is where actually I placed my resistance, because it's been an area where the market used to respect. So on a daily time frame, you can see that we have something like that, and I think we might see something happening. You can see around this area, it started around that. We also have another one, and here is double. So the question is, will the market respect this and go down, or maybe are we going to break out? It seems confusing for now because this area seems to be strong, but even the news were very strong. So there is a chance that the market can still break this level. But looking from the previous moments or previous moves, it seems like the market might end up reversing around this level. So we need to be extra careful. Yes, other pairs, they might be buying or selling in favor of the dollar, but things might change. Things might change very quick. So, or on the other pairs, you can just let me know what pairs do you want me to check on the comment section. I will be going straight to that, and I will actually check that, right? So yeah, you can tell me which pairs to check, but for now, I will be going on the usuals, the ones that I usually go through. So firstly, I will start with S&P 500 and then going down. So from there, I will be continuing from the pairs that you want me to check. Nasdaq, I see Nasdaq, AUD, Euro USD, hi Kenzo, USD, CKF. How are you, man? I hope you're doing great. So I will be checking that. But for now, let me go on this structure. So we are on S&P 500. Let's see what's really happening. On a 4-hour time frame, I think this is going to be much better. Yeah, so we have something like this. We saw that the market already, it was on a very nice uptrend. We were having a very nice uptrend going further, or like for quite some time, since November, last year, November, the market has been going up for quite some time. So what we have now, as we have the news, we had the news even previously, but for now, we're going to focus on this area and see what's really happening or what might happen for the rest of the week. So we can easily see that, yes, the market is still going up, but on top there, we have a proper resistance. And during the news, you can see that we had this resistance here, and it's that time of NFP. Last week, Friday, we had an aggressive sell. After that, we saw the market reversing. Today, which did not really, it moved, but not really the same as NFP. We can see the market also selling because CPI was positive. This move is because actually it gives investors panic that, okay, maybe they might not really cut the rate maybe around June. So which means it's not really good when we see inflation going up or still sticky. But on my side, I don't think it's really that aggressive. Yes, it's up, but not really that aggressive. Comparing it to NFP, because NFP last week, it was crazy high. So we were expecting higher CPI, because there are so many people who are working. If NFP is going up, it means people are getting some jobs, so which means spending is gonna go higher. Retail sales should be going up, CPI should be going up, PPI should be going up, because NFP is also aggressively going up, right? So since we had CPI, we can easily see that the market did reverse, but we had a nice diagonal support area, and we can say we also had a nice support area. So if you don't really want to study it here, you can study it around these levels and maybe around this level. You see that? So that is where the market did touch and the market started to reverse. So from here, it's where you can see you can actually, I can say it's where I can start to scalp this movement going up, because I think CPI effect is going to stay around maybe for a few hours. So I'm expecting to see the market continuing going up. I like the fact that the market did touch these levels here. Just because now we don't really have the news, don't expect the market to reverse the same way the time the market was just dropping, you see. So the market might take time to go or to reach our resistance area. So I see you say GBP USD. Can I request to check USD CAD? Yes, I will check that. I will check that. Yeah, I will be checking that. Don't worry, guys. Breta, how are you, man? I hope you're doing great. So let's go straight to NASDAQ and see what's really happening. On NASDAQ, we also have quite similar structure to S&P 500. You can see that we had this trend for quite some time and it's been evolving. You can see it's been going up like this, now like that. So we have to adjust the trend because it is still continuing. So what we have now, I think it's also straightforward. We can easily see that the market, before we even think about the news, if you did not really know much about the news, you were just going to say, no, we are on a very nice trend and I think we're going to continue going up. And that's what I see from now. We are on NASDAQ. You can see on the bottom side, as we already know that we are on a very nice uptrend, but we see that we are on this horizontal structure. We have this nice support area. So you can see that candlestick from NFP, the other one from CPI. So obviously, I'm expecting to see what? To see another reversal. Even here, I'm expecting to see another reversal, as we are already on an uptrend. Remember, guys, so sometimes the market, mostly what the market does is it can, people actually look at what might happen next. We might have CPI, which is very negative now, or maybe positive now, but investors are looking maybe 6 months ahead. So, which means at the moment, it might be a very good time to do what? To buy. Because as long as FOMC, they are talking about cutting the rates, that will never go. Even if maybe they postpone cutting the rates, but one way or another, they are still going to cut them. So, which means if you are an investor, obviously, whatever around these levels is going to be the lowest, maybe in 6 months or 7 months, something like that, you see. So what we have here is we have a nice horizontal support and also a diagonal structure. So yes, CPI was positive, but I think that momentum is no longer, it's fading slowly. I think we're going to see the market trying to continue going up again. And this is just a complement towards the same trend that we had for a quite long. Do you see that? We have that for quite long. So the market will just continue like that. We will even forget that we had CPI this week. So let's push to the next one, which is actually US, sorry, not S&P. We have to go on US 30. So on US 30, we also have something like this, a quite straightforward uptrend. Let me remove that because that was there just to scalp. So we have something like this. You can easily see that the market has been going up for quite some time. So what we had there, it's a very nice trend, but we have this breakout there. Do you see that? So after the market breaks out, we don't really just have to jump on this sell immediately, because sometimes the market can just adjust the structure and then continues going up. At the end of the day, you will say, oh, it was a fake breakout. No, it's not really a fake breakout. Sometimes the market breaks these structures just to continue, just to adjust. Sometimes the market can be going aggressively on this bullish move. So the market has to correct that movement before continuing again. You see, so that's something that happens in the market. So after we broken out of that structure, let me remove this. I will draw it again. So after we did break out of this nice support area, which has been there for quite some time, we can see that we had this area that we can use as our potential support coming, or maybe let's say previous support that we had, and also this level, you see. So this is what we have. We marked that level, and if the market breaks out of that, to me that it was a confirmation to say we are now on a downtrend. But it seems like the market is struggling to break out of that. You see, the market is struggling to break out of that support. But if the market breaks, I will say now it's time for me to look for a downtrend. But for now, I'm still on this nice uptrend. So this might be a very nice adjustment if the market continues to go up. So when I say adjustment, I mean once this trend evolves, it means we're going to change this trend, maybe draw it like that, something like that. Because once it goes up, there are other structures which are not going to connect with the previous structures. So we are just waiting around this level, waiting for these two options, whether we're buying or we're selling, you see. So on that, let's see. I will be going on your comments, guys. Let me just finish with this. So now we are on gold. What's really happening on gold? We can easily see that gold has been going up, guys. It's been flying for quite some time. So this is what we have. You can see that the market has been going up. So now at least the market is giving us a very nice uptrend. You can see we have nice reversals, something like that. And on top here, we also have a nice resistance. So I'm expecting to see a market continue like that. We know very well that gold is very, very, very sensitive to economic news. But it seems like this time gold just ignores everything. And you can easily see that, yes, we are still on this uptrend. I thought maybe we're going to have a breakout. I saw the market selling. I thought maybe now it's time for us to look for that sell, but it seems like no, the market is not really, gold is not really on that. It's not really on the sell. So it's like everyone is on the buy momentum. Everyone is still buying. So that's why we don't really see any aggressive sell as the dollar is gaining that momentum again. You see, we have geopolitical news all over the place, and we have economies which are not performing very well, like China and other ones. So most likely they buy gold and like in big numbers. You see, so this is what we have. So if maybe you missed it here, you can just wait for another reversal, or maybe it will break this level and you can continue buying above that resistance. But for now, we are still on that a nice uptrend. You see, so let's push to the next one. I will be going on your comments, then we will see what we can have. So what's really happening? So we can easily see that now we are on GBP USD. Yes, we had a smaller nice uptrend. The market was going up. Guess what? The market broke out. I think I've been talking about this area, that the market did give us this nice retest several times. So actually, we can say the market was just ranging between this support and resistance. The market has been playing around that. So that, I think, is the order that we sent. This order was sent like 2 days ago, I think. Then now at least the market did move very nice. So another structure might be that because we see things different in the market, or we use different approach to the market, I also see something like this. You can see something like that. That also makes sense. You see that? That also makes sense. But even this one of a breakout here, it still makes sense, because if we break out like that, it means we're going to continue going down. So as long as we are on the same downtrend, yes, we can still achieve the same results or same approach, because we just get the same results. If you were looking for a sell in a different method, that is also good. So that's what I see. So I'm not going to draw this one here. I will just continue with this breakout and going down and like that. So which means you can easily see that the dollar on the currency pair, not on the stocks, stocks I'm talking, or indices I'm talking about, Nasdaq. So on the forex market, yes, dollar is way too stronger. So which means any pair that is going with the dollar for now, we might see this aggressive sell or downtrend momentum at the moment. So quite similar to Euro USD. What's really happening? Quite straightforward structure. Yes, we had a proper, quite quick or smaller uptrend, but you can easily see that even if we don't really place that, you can see that this area is been going down. The market has been showing us that it's going down very nice. So at the end of the day, it seems like the market or the fundamentals were just looking at the structure, because it makes sense. It means if maybe you were on this downtrend, it means you were going to just understand, you were just going to sell, you were not going to look for any buy. And at the same time, you were still going to make some cash because you were just taking the right decisions, even though maybe you did not really know that the market were, or maybe we had the news. So which means even if you don't really know much about economic news, which is something that you're supposed to know, but sometimes if you follow proper technical analysis, most likely you're gonna be on the right side of the market. I hope you understand that. So yes, I will be going on whatever that you're telling me to go there. Okay, now we are on DXY again, which means I will be going on the stuff that you say I should go. DXY seems to be breaking out of this resistant area. That it's, you can see there. I think this means the dollar is way too stronger. That is not really nice for other pairs, obviously. So let me go on your comment section. I will try to follow every pair that you say I should check, and we can take it from there. So yeah, I see Nasdaq is now also reversing. It's fine. So let me see. I will start with the one here. Kenzo, I disagree with gold along at this stage. I'm currently holding a short position. Okay, so yeah, that's I think when it comes to the market, guys, we have different approach on the market. You see, so just because maybe you holding a short position or a sell, it doesn't really make me wrong, you see. So we can still do the same things here, and we can still disagree. I really appreciate that, by the way, but there are reasons that makes gold to go higher, not actually about CPI, but there are so many reasons why gold is still going up. There's geopolitical news all over the place. If maybe you do check the news, we have Israel, which we can say Israel and Palestine. Now, Israel, Iran, and other countries around in those Middle East countries, they are actually going in conflict. So obviously every country have some investors and stuff like that. They have businesses, they have stock markets. Obviously, once you start to hear stuff like that, most likely they will be buying some stuff like gold or bonds from different countries, mostly like US, but most likely these days it's mostly on gold, because on the US side they are afraid of what the term, this they I forgot the term, but they are afraid of higher interest rates and other measures that are used to be taken by the US mostly. So which means the safe haven these days is actually gold. But still, yes, we can disagree, we can agree to disagree, it's fine. We have different approach to the market, which is something that we need to actually do, because I might be wrong also. So that's actually not really bad. So it's fine, man. So okay, Hola Kenzo. Oh, okay, subscribe to your channel immediately after hearing your voice. Thank you, my brother. So some interest. Okay, let me. I'm checking your comments now. So not stepping you. Okay, not stopping you down. Some interesting insight. All good then. Okay, so US oil. I will check US oil, guys. I'll check US oil. Silver. I never checked silver, but maybe I will try. But if I go there, I think I don't really have to lie to you. I never checked it before, but I will see what I can do. So I don't see S&P 500 buying. I don't know. They are still going long, including NAS 100. At the moment, they are just reversing. At the moment, they are reversing. Remember, the news are still CPI news still very fresh. Still very fresh. So we'll be also going on that, right? We'll still go on Nasdaq, US, S&P 500, and US data and see how they are doing at the moment. What if they raise rates again, like other Feds? Kashkari said they don't need to cut the rates this year, but raise them. Will this not cause confusion in the market? No, I think you're right. I think on that statement of raising the rates, you are actually right because when we check, inflation is still very high. They say they want to reach 2%, but it seems like slowly starting to go a little bit higher. But again, they need to actually cut the rate. Let's say they might not really cut the rate as quick as we think, but at the end of the day, they will cut the rate. So the thing is, slowly, just because we have 8 interest rate cuts per year, so which means there are something that they're gonna say. Remember, actually rate cuts is something good, but the most important thing is their conference. What do they expect? They can say, okay, this year we're not gonna cut, right? Which is actually bad. But what if they say after that, they say, okay, this year we're not gonna cut the rate, but maybe in 2025, we're gonna cut maybe 6 times. You see, if they say we're gonna cut 6 times, obviously this is good news, but actually after a long time. But remember, investors actually they have to hold their positions or their shares for a very long time. So if they say we're gonna cut the rate 6 times maybe next year, but as we see, maybe this year is not really good, it's gonna be bad for a while, but it's still gonna continue. I think it's still going to continue going up. So I think I don't really see the market aggressively selling. I think, yes, we can still see maybe some breakouts, but I don't really expect that crazy sell like what we saw maybe a few years ago. A sell, it's fine. If we see the market breaking out, that is going to be good. So we're not going to get confused because we will see that, okay, the market is breaking our support area. Remember, if you follow the trend, as long as the market is breaking, you don't really have to know if maybe they're cutting the rates or not. But you will see that the market is breaking out of my structure. It means we're changing the trend. Now we are going on a downtrend until the time when the market breaks another trend. Then we're going to say, okay, now the market is going up and we're just going to follow like that, you see. So, yeah, that is a good question. That is a good question. Thank you. Let me see. Let me see who's that. Oh, it's Nicole. It's Nicole. Oh, it's not Nicole. It's Simon. Okay. So let's see. Why do you think the S&P 500 is still gonna push to the upside? Because we are on an uptrend. Can you please look at silver? I will try to check that. Please leave a like. Okay. Hi, Kenzo. Washington Tlomani, how are you, man? Hi, Kenzo. Okay, I thought maybe you. Oh, also USD CAD, GBP. Okay, let me now go on the pairs that you want me to check. So sometimes, guys, when you see the market not reacting to what's really happening now, it's not really about today. It's about what will happen tomorrow. What are we expecting tomorrow? So if you have a business now, obviously things might not really go very well today, but what will happen maybe in 3 years? You see, so if things are going to be good in 3 years, that's good, mostly. You see, so that's why sometimes we had a very aggressive NFP last week, but the market just reversed after 3 hours. Even now, within an hour, the market was already reversing almost halfway of that candlestick. You can see that the market reached this level, so there is a chance for the market to continue going up. So USD, let me see the pairs that you want me to check. You can give me the pairs. I will start with USD CAD. USD CAD and what? Let's see, USD JPY. Okay, I think I don't really have USD CAD here, so but I'll add that. So on USD JPY, we can easily see that the market is now going to the upside. But on this one, I think it was quite straightforward. The market has been like quite slow around this area. But beside that, or before we go here, you can easily see that the market was on an uptrend. The market was going on this uptrend. But for this past 2 weeks, the market was just consolidating around this level because we never had any aggressive news. And we also had NFP around this level, but the market did not really move that much. Now, with CPR, it's where we start to see the market going to the upside, which is good. And I think it can still continue going up, as we know that JPY, their interest rates, it's very, very, very small. So that it's coming from negative to now 0.10, which means let's say 0.10 or 10 basis points, which is very small. So obviously the dollar is going to be quite stronger against JPY. So on this one, I see a very proper buy. I think the market is just continuing with this trend. Remember, currency pairs and stocks are quite different, so it's not really the same thing. So USD Canada, USD CHF, I will check that. USD CHF, and then I will go on Canada. USD CHF. Okay, I think I had a structure here. So let me use a daily time frame because the structure here is quite aggressive. So this is what we have on USD CHF. On my side, CHF was quite stronger for quite long. We can see that the market has been actually going down for quite long. You can see that since last year, the market has been going down. This was our resistance going down. So we were expecting the market to continue selling. But now, just because the dollar is quite stronger and the market was around this level, we can easily see that now the market is trying to break out of that resistant area, which to me, it seems to be obvious because this was a very stronger resistance. Maybe you can just push this a little bit lower and something like that. Already we're breaking out of that, so which means we might end up having something like that. So you can place your notifications. If the market keeps going up, that is going to be a very good one. If maybe you're going to buy, I think it's going to be a very long position. You can just use this as a swing because this will be the start of a new trend. But don't just jump here because the market can change. Remember, even though we had CPI, we still have the meeting, FOMC meeting, around 8 o'clock. So on my time, I can say in less than 3 hours. So which means things might change. If they say something, Powell is going to say something, obviously. So it might be positive, it might be negative. So we don't really know, you see. So I think that makes sense. So USD Canada, let's go on USD CAD. USD CAD, I don't think I have Canada. USD Canada, because I actually add what I trade, guys. I don't really add everything. I will take only from Rwanda. So USD CAD. What? USD CAD. Let's add that. So on USD CAD, what's really happening? We can easily see, whoa, yeah, the market is flying. The market is flying. So what's really happening here, I think, is quite straightforward. The market has been slowly going to the upside. So this is a daily time frame. So this is a proper uptrend, especially CAD or Canada. They did pause with the rates. So that is not really a good thing because especially on the other side of the dollar, the interest rate, CPI, it was aggressively positive. So obviously we can easily see that this is going to continue going up. So, but I think the best way is to go on a 4 hours time frame and see what's really happening. So this year, guys, the news are going to be very, very important. but most likely they're not going to react the way you expect. They might be positive, but the market might take a different direction. So which means they are not looking exactly on the news only. They are looking 3 months coming, 6 months coming, what will happen next? Because if they say we're gonna increase the rates now, it's good. It's bad. But if they say in 6 months we're gonna change that, so that is actually some good news. So on USD Canada, you can see that we are coming from a nice downtrend structure until we had this breakout. So this breakout obviously shows us that we're changing the trend, but the market was just moving quite slower. The trend was not really that aggressive. We used to those trends which moves like that, you see. But this one was like, no, I'm not really ready to move. So similar to this, let me just draw something like this. I think if I draw a resistance here, you can see that the market was moving around these levels. So, but slowly trying to go up. So at the moment, I can say, yeah, the market is now breaking out, but yes, it's been trying to go up, but it was struggling. So something like this can also be fine. You can use something like that and say, since my resistance is broken, I will then use something like that and say above that area, it's where maybe you can say you can look for a buy. Please just go on you can use your entry strategies to do your trades there. But this is what I see. I'm expecting it to continuing going up. But with this type of a structure, I think if it breaks, it will be a very new structure. So it's not like we're going to continue with this. It might be creating another structure going further, because this one here is a slightly consolidation structure, but slowly going up, you see. So that to me is a bit confusing. So we rather have clear structure. If maybe we buy, and if we do that, it means the market has to be around this support area. But the market at the moment, it's not really there. It's breaking out, which shows that Canada is quite weak. So let me see, what do you want me to check? Euro 80% buy. Okay, let me check something. USD CAD, I checked that. Please leave a like. Okay. Let me try silver. Okay, US oil. Sorry, I forgot US oil. Let me go on US oil. Or on US oil. I think I was on US oil. So on US oil, guys, this has been going up for quite some time, but there are reasons behind that, and I don't think that is going to go down anytime soon. We saw Russia and Ukraine. I think they did bomb some of Russian refineries, petroleum refineries. And we know that Russia is also one of the biggest producers of oil. So OPEC countries, I think they actually trying to cut the production at the moment because things don't go the way they want. So which means oil is going to go up. The demand is going to fly. So which means quite similar to gold. So I'm expecting a nice retest here before the market continues going up. That's what I'm expecting on US oil. But besides that, you can easily see that the market has been going up for quite some time. We've been having this trend going up. You can see that the market has been actually trying to push to the upside, which is actually good if you follow the trend, because to you it was going to be quite simple. Or another thing, or another method that you can use here on oil, it might be something like this. Let's try copy and paste this. You can see these areas. It's where the market was just trying to create resistance, support, stuff, something like that. So you can also use that type of a method. You can see this area was the same as that. So it means you were not going to miss any if you trade oil. I don't really trade oil that much. Or let's say I don't really trade it, not that much. So we have something like this. So obviously these are the supports, or you can call them support resistance. So once the market bounces back around this area, you can see that the market was actually trying to push up. Even here, it means we have clue, or we have actually evidence that the market can actually move like that, higher high, higher low. So even here, the market can do what? Can continue going to the upside. Simple as that. We don't really have to complicate things, right? So let's see the comment section. What should I check? Silver. I don't even know the abbreviation of silver here, but let's check. Maybe we'll get it. I never checked it before. So it's better to learn. It's better to learn. So I'm learning something. It's not forex. Let's see. Let me just go on all. Silver. Which should I check here? I'm trying to check the best broker. Okay, they have. Oh, it's silver. I added that. Let's see if maybe we can do something on silver. Whoa, I did check this before. Okay, I did go through this before. So let's see what's really happening on silver because someone just requested that. So I'll just go firstly, when you're not trading something that much, go on a bigger time frame and just to understand the trend, where the market is going at the moment, or what is the current trend. So before I do anything, you can easily see that we see something like this. You see these areas. If we try to connect them, they might make sense. I think you can see the line. Obviously, the market was moving like that. So even here, the market was moving like that. On the bottom side, the market was moving like that. So which means this is a proper breakout. So which means the market is now trying to do what? Trying to go to the upside. So let's do that. Let's go there. Now let's do the proper lines, right? Let's draw the downtrend thing. I don't think it's going to be quite visible very nicely. Let's see. I think this is going to be fine. I don't really want to force this to suit what I want, because sometimes that can be a trap. You just force things to, just because I said it's a downtrend, it doesn't really mean that I just need to force it to be a downtrend. If it doesn't really make sense, it doesn't really make sense. We don't really have to force. So this is what I have as a downtrend. You can see that. So now you can use your horizontal lines just to see where the market was respecting. You can see this area. And also this. On my side, this, without wasting time on this, we can see that the market was going down. Very nice downtrend structure. This is a proper breakout. So if I was trading this above this resistance, I was just going to jump in. Or maybe you can wait for a nice retest and see what's really happening, and then you can continue with that uptrend, because the market is getting out of this downtrend, right? So which means now we are trying to go on an uptrend. So when we have this geopolitical news, some of these commodities are very, very, very important, because in wars, some of the metals or materials are being used, so they stockpile them, you see. So you should understand stuff like that. So, but it's not really valuable like gold. It's not really a safe haven, but it can survive all this geopolitical stuff. So I think this is a very nice uptrend. Expect something like that to happen, or maybe wait for a smaller reversals to happen there. Then you can think about something. I hope you see that. So
hey, Kenzo,
let me see some of the.
Can you hear me?
I'm doing great. Thanks, and you, man.
I'm good. Hey, I didn't mean to interrupt you. You were doing some awesome analysis there on the metals, and I listened in for a good bit of time here today. Thank you for coming in. I know you've been doing it for some time, so I was jumping in to give you a break. I just wanted to say also to everybody who's hanging out with us here, if you guys enjoyed Kenzo's commentary, we've just had a list of people. Kenzo was our fourth guest on the show here today, and we appreciate everybody on our guest team that is coming on and sharing value, sharing content in the financial markets. Today was a huge day, Kenzo, with CPI coming in hotter than expected. That's following jobs data that's hotter than expected. I'm very curious to see where some of these markets end up today. As you mentioned earlier, the S&P 500 rallied back about halfway of its drop. It is now trading back down, but we'll have to see if stocks can stabilize at these levels or if we break support. But regardless, we'll have you later on this week, Kenzo, again, I believe, for you to come back and share more thoughts. I just want to say thank you. And to everybody who's listening here live, would you do us a favor here at the A1 Trading show staff? We would really much appreciate if you guys make sure to go subscribe to Extra Hot Forex on YouTube. This is Kenzo's YouTube channel where he shares free value throughout the week. So if you'd like some more of his content, his analysis on a regular basis, it's totally free to do so. Just subscribe to Extra Hot Forex. Kenzo, thank you very much for coming on. Won't keep you any longer. Thank you for contributing to our show today, and we appreciate you coming on. All right, thank you very much, Kenzo.
Thank you very much, man.
All right, we'll see Kenzo again Friday, guys. Kenzo comes on once a week and contributes to the show here, which is awesome. In just a second, we are going on to our next guest. We're bringing on the one and only Ivan. You guys know him, you love him. Some of you love him, some of you don't love him. I love him. He's a great guy. He's got a great beard. He's a father. You know, you got to go easy on a father. Anyways, he's coming in just a second. Real quick, while we do that transition, we're going to just thank one of our sponsors here on the show, contributing to this all day long stream. There's obviously costs associated in offering such great value to the community. We appreciate all of our guests coming on. And of course, we want to thank our sponsors for making it possible. So real quick sponsor break, and then we'll be right back with Ivan in just a moment.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Oh, it's just me. All right, fantastic. Good evening, everyone, or good morning, good afternoon. So I think that today it's. I think I missed everything. So let's just recap a bit of how and what and where. So when you look at the CPI, reasons why, and you see, okay, it's shelter, it's oil, it's whatever the reasons are. The reasoning behind everything has been put out before it kind of happened. Now, can we be sure about that? No. There's no prediction in that. But on Monday, I said if we had higher than expected, dollars could be bullish. That was already set. So you're already set up for success already on Monday, right? So secondly, how does this tie in? How does technical ties in? And how does fundamentals and all of that? Now, in my view, as crazy as I said on Monday, that we might have a rate hike this year, we are now closer to that. Why was dollar and sell today? The reason why dollar was selling before the news was very simple. They were hoping and praying that, or they were seeing other signs that would say that they would indicate inflation would come down. That June will be a rate cut meeting. But today we have seen very clearly that it is not going to be a rate cut in June. Bank of Japan comes out and says and opens up the door for a rate cut in June instead. ECB comes out and says, probably tomorrow, and they're probably going to say they're going to cut in June. USA is now lacking behind. US is now relatively stronger than any of the other currency. And if you look at the Fed Watch tools, probably been mentioned before, but regardless, this was 37% chance. Now it's 81% chance that we're not going to change anything in June. Fantastic. And I have stayed. Have I stayed dollar bullish? If I haven't stayed dollar bullish, I will stay dollar bullish now. Yen. We are going to talk about yen. And what is surprising to me today, I just want to look at your dollar. I have not posted this, but I said that I would scalp this one. So I got an entry at around 108 plus something. And I am currently on my scalp that is not publicly traded, 68 pips in profit on that. I'm just going to be transparent. That's what I'm trying to talk about. Fantastic. My real entry and my real strategy comes in later. Right now, I can't have an entry at the moment. So, because that was just the catalyst. Now I just need to, for the slow burning, which is I need a pullback. I need a pullback either to 107.80, also 108, whatever it is, because right now we need to fall. We need to continue falling, and we are going to continue falling. So maybe by Monday I might have something that I can discuss, because as you see here, also this is February 14th all the way to 7th of March for setting up another sell. It's not done in a day. So I am pretty happy about that. So let's see, what can we... Okay, so Gumulemo says, can I ask you about how you personally trade? Do you wait for catalyst and use them for entries, or do you use technicals? I use fundamentals, seasonality, sentiment. Also, where is big money going? COT, retail COT. Then I do technicals, and technicals doesn't always. I don't really care about them all the time, every time, because sometimes it's just about getting in. What do I mean by that? When fundamental, seasonal, and sentiment, and news, for that matter, align, I don't need technicals, because I've done this so many times, and I know my risk, which is that much. For me, I have done this many times. That doesn't mean that you should do it. That doesn't mean that is profitable for you. That just means that I take those momentum trades and I get out and I wait for my actual setup, which is a pullback to resistance, which we currently don't have. That is, then I will use technicals. If we don't have a trend with us, which we kind of don't, we have kind of a range here in the 4 hour. We don't really have a bearish one. I have to look for bearishness. I'll wait for bearishness or some kind of. And you know that I previously said I want 110. I want 111. I never got it. Okay. That's that market. It does give you lemons. Not always, but keeping in mind the underlying fundamentals, statistical data behind an asset class you're trading, whether it's a quiet day or eventful day. I don't really care about if it's an eventful day or quiet day. I trade based upon when my setup is. If that's a Monday or Tuesday, most likely. And then I exit on Monday, Tuesday, Friday, any other day. But mostly my trade setups are on Monday. And then doesn't always happen, but Friday, Monday. And then I exit around Tuesday, Wednesday, Thursday. One is the New Zealand yen. Is kind of that kind of a trade. Okay, all right. Where the entry is give or take Friday and ends up today at target for the week. I use pivot points. This is weekly pivot points. And that is a Wednesday. So Monday, Friday to Wednesday was this week on yen pairs. So can you give us a thoughts on British pound dollar and pound yen? What did other pairs like pound yen affect by the US news? Anif, I am a bit surprised, but I think I have a very good theory about it. And I think that it's very important for us to think about what is the reasoning. And I think the very quick kind of what can you do is go to the futures. So Swiss franc fell, British pound fell, New Zealand fell, the Japanese yen fell, the Australian dollar fell, the Canadian fell, and the euro fell. Every other currency fell relative, or not even relative. They went completely opposite of a dollar. That means that you need to write down in your notebook that whenever dollar gets strong, everything else gets weak. There's strength in dollar where the market is 100% of money at all times. It never expands or contracts with volatility events. Give or take, is not always that, but that's a theory. Nice little theory, not necessarily reality. But where are we? If dollar gets stronger, it gets a bigger piece of the cake. I tried to make something. Go from there to there. When they take a bigger piece of the pizza, the weakness, and somebody has to suffer from, or will suffer from it. Let me see what. Okay, thank you for questions. Anyways, so what I want to talk about is yen, and for that matter, dollar yen. What I was worried about, and this was a serious worry that I had, was that Bank of Japan will kick in at 152. Not because I don't, not only because of the former strategist of Bank of Japan that said it, but we can all see that we are trickling. We're trying to get in or go above 152 for quite some time. And Bank of Japan is very active around this level, or have protected this level before. So it's likely to think that they're going to protect it again. So for me and my yen pairs, that could be a $300 pip move down if they decide, or 400 or 500, depending on how much power they decide to use. Now that they've broken out, they haven't, to my relief. Okay, fine, fair enough. But most yen pairs has now had quite a significant drop today, which is, I don't know, sad, positive. I don't know how to take it. I need to see this volatility subdue. Targets has been reached for the month on New Zealand yen. Pound yen, which was talked about earlier. I mentioned earlier that should cover, has not reached any monthly or weekly targets. So for me, that is okay, barely. But it's kind of like, where do I go from now? Do I buy now? Or do I wait? Do I continue? Those are serious questions you need to ask yourself. And I do. But on the other hand, I have the answer ready for you. Kind of. I wouldn't do anything in this situation. And why wouldn't you do anything in this situation, Ivan? And I think it's quite a straightforward answer. Do you enter a market that clearly has a falling knife? But then you're like, this is a live trading show. Like, why wouldn't you trade this? Because I was earlier asked today, like, if you think this is going to be the top, which it was, so far at least, may not be the reason tomorrow, but at the moment it is true. Why wouldn't you sell it? Because that wasn't part of my strategy. That wasn't part of my theory. That wasn't part of my hypothesis. I didn't I didn't plan for that. What did I plan for? Continuing higher highs. Would you use a sell stop? Not really. Mostly because I don't have profitability with it. I don't have profitability with it. I can't English I'm trying to find here, by the way. I can't justify that. Because my results with sell stops are 50-50. What generally tends to happen, which is kind of like the situation on yen pairs a couple of hours ago, where if you sell, let's say you sell here on that candle there, and then it pulls back, then I get scared, and I start having emotions, and I start having feelings. That's nice to have feelings for someone, but for a currency trade, not really. And then I close out at a break even or a loss, and then it continues down. And now I have one, kind of broken my rules. I haven't really sold at the best price, which is 193, give or take, 192.90, which is a much better price than to sell 192.10. So I'm 80 pips in loss in terms of opportunity. So for me personally, it doesn't, or it hasn't on paper and in reality, made sense to try to sell subs. That's just as a thing that I've done, because what I really want you guys to do, whatever you do, and don't take me for it. Don't take me for to be the guru here. I don't really want to be the guru, but let's take it for a name right now. Whatever you do, always backtest whatever you do. Also, don't go out there and be like, oh, I'm gonna try and sell whatever. If you ask me, should you use ABCD? If it is the ABC pattern, if it is harmonics, if it is support and resistance, it doesn't really matter what it's called. If you can't make this work, then you should find something else to do. Another strategy. Like, it doesn't matter. Like, I am not going to sit here and be like, hey, you should do this. Doesn't matter. Doesn't matter. It has to work for you. You have to believe in it. You have to have good stories with it. You have to see that it works for you. And if it doesn't, then don't waste your time on it. And how long time am I going to spend on trying to figure out something? Well, that's a different story. For some, I can spend one day and say, I don't really believe in this. I don't want to try it. And I can use a year on a different thing. The only thing that kind of separates you is, what is your statistics on the strategy? Is it 50? Is it 60? Is it 30? Are you and I think the most important question on your strategy is, are you able to trade it live? Are you able to surpass your emotions, surpass your trading, surpass everything, and still get the results kind of what you did in demo? Because those are two different things. And then, if you expect a potential 500 pip move, wouldn't you not try it on dollar yen? Good question. Wouldn't I set myself up for success to buy the dollar yen and for it to go up parabolic? Yeah, that would be great. That we are up, what, 110, 120. That would be great. That would be great. But in the sense that I didn't plan for it ahead, in my theory, I can trade it now because now I am doing football. I am reacting to price. Whatever I do is based on fundamentals, and fundamentals is in line with this trade. I didn't focus on it. So, in as much as I want to take all those 111 pips or whatever it is now, I didn't take them. I didn't look for them. I think the risk is too high, where we have a Bank of Japan potentially, which might never happen. But in my little world, Bank of Japan interference isn't something that I would consider, versus a euro dollar that has a central bank that is going to cut in June, most likely, confirmed tomorrow, that is already bearish. I already have the fundamentals, already have the central bank monetary policy in my favor. So I'll go on the euro dollar move instead as a personal choice, but then dollar yen, fair enough. Have fun with it. So my theory on the intervention is that they feel like it's, well, by the way, it's not necessarily a feeling either. And I don't want to talk too much about it, but for 2024, the Japanese yen has lost 8%, which is ridiculously a lot for an economy. And I think Norway Norway interfered in the forex market in 2020 when we had lost 12% in a good 2 month period, 3 month period, I think it was. So here we have 8%, 9% almost in the same period. And then if we start really going down, they have lost a lot of value, though, through their their policy, which is around 20. So an intervention by the central bank is not out of the blue. We shouldn't really, this rule it out. So that's where it comes from. It's just that it's something I can't rule out, and I'd rather go down a route of a central bank that had already bearishness in mind for the currency with dovish monetary policy instead of having one that goes against the weakness, kind of thing. So let me do some fun stuff here. So we have a range here on Australian dollar. My little projection here is that we are gonna have a good 3 weeks now going down. It of course depends a bit on other indicators like NFP, like PPI, CPI, PPI and PCE, producer price index, and personal consumption expenditure, consumer expenditure. That is dependent on those also coming in above line, which they have been previously. Then I believe this one is going to continue lower. Now, it is at the moment not really straightforward. Okay, so it's really has fallen today. I agree with you on that, but I just want to reiterate that this is not the end. We're gonna have a meeting in, I think it's 1st of May, which is in 2 weeks. There is not going to be any more CPI until that meeting. That means that Fed needs to either become hawkish, or less dovish, sorry, which is a hawkish direction, become even more neutral than they've ever been in the past months, and that's going to create more dollar strength. That might be the bottom of the dollar strength, by the way, technically, because now we're going to price out all the currency, all the rate cuts we've had this year, I believe. And that's going to drag the market for quite some time. It will take a couple of weeks to do it. And as you can see, on the 2-year is 4.9, and the 10-year is at 4.5. I just want to kind of reestablish where we have been and what happened last time. Last time we had a re-acceleration of inflation, which was around June 23, I think it was. So around this era here, and as it continues, as you can see here, as it continues, it does continue higher. Now the whole question is, when is this higher than expected and higher than previous CPI going to continue? That is the scenario ahead of you. So relax, take a breather, look ahead, and think of where can you get the best possible scenario for yourself. Where is it? How does it look like? Now is where you're going to be paid for your hard work, for your sticking to your strategy, or learning your setups. Now is the game. It didn't start earlier today with the fall. No. It starts now going forward, because the trend is now going to come in your way. And now it's the question, is your patience there? Is your entry there? Is where you're supposed to be as a trader? The test comes now. And for me, I love Fridays. I love Mondays. Those are my pullback days. I just don't know how much of a pullback I'm going to get, but I love those days. So I see them relax. I am practically content, and I think that you should be that too. How do you backtest if you want to become a fundamental trader? Now, that's a bit of a different thing. I believe that fundamental analysis is like history class. It's like you learn it once and then you have learned it. When you go back in time of fundamentals, it changes the application, the importance, and the execution of it previously. I mean, 1980s, 1970s, 1990s, 2000s is different from how we conduct monetary policy today. Today, we have way more transparency. And by the way, if you want to look into one-on-one coaching, you can check out my YouTube channel and send me a message if that's what you want. But fair enough. I lost my trail. Fundamental analysis is different from where it was once before. CPI importance, NFP importance, PPI importance, PCE importance is kind of, it's a textbook thing you learn and then you move forward. And then you take the pool of information you've been provided that you through Edgefinder, through the resource that you have, through sentiment analysis, through your analysis of the central bank and their monetary policy and how they conduct it in the current environment they're doing is the single most important thing you have to do. So it's not really necessarily a backtesting thing, which is possible. I would rather you start with reality and current and what is that going to lead to down the road, because that's where your opportunities are and that's where your directions are. So for me, yeah, that's where I will head. So Mr. Who? Gotham says, what about euro dollar? Euro dollar is in quite a funny place. It is in a range. I do apologize for being not that one. No, I want bearish. I need to find bearish because we are bearish now. Oh no. I hope that we don't hit monthly target tomorrow, which is the monthly bottom, which is around 106.7 on euro. I think that might be an issue if we do that tomorrow with the ECB coming out. Now, this is dependent on previous history and all of that we have arranged before the previous month. Therefore, the next month it's not going to have much more volatility. But I believe that May, so far now, for April and May are going to be dollar bullish. But June probably is not going to be that. And it also depends that May CPI is going to be around 3.5 or higher. But given now, for euro, a pullback, I'm not looking at anything here being a very good opportunity. I think this is a very bad opportunity. I need a break off 107, 106.50, pullback Monday. That's where I am right now. Then on pound, I am on the same boat. We have been in range for, I don't know, since Jesus was born. It's 2023 December. Now we might break out. I will wait for the pullback. I will wait for the larger setup because the momentum has already happened now. But that's not the trade that I want you guys to focus on. I want you guys to focus on the trend, right? Do we have a trend at the moment? No, sir. We don't have any trend at the moment. And I think that is quite crucial, that you identify the current market without your emotions, and your current analysis of the market is range. So I've seen my fair share of asking for gold. What do you want? The trend is there. It is parabolic. It is very high. Central banks are buying. It is ridiculously high, and it's probably going to go higher. That's the view. And I have practically no interest myself in buying gold at the current situation. I think I have mentioned it a couple of times before. I'll mention it again. I want to fall. I want to pull back. I want something to have a bottom again, so I can buy it back up. I poor in this market. If I didn't catch the bottom of it, if I didn't catch the bottom, I'm out of it. Same thing with your dollar yen. By the way, leave a like on the stream. So where's your value? The value is your patience. You losing money here is ridiculous. You know, you losing money at 23, 35, 37 is ridiculous. Because why are you losing money at 23, 37? Your lack of patience, your lack of discipline, your lack of strategy. But if your strategy is to do the 5-minute one in an uptrend, give or take, is this your market? This isn't my market. My market is, let me see. This is my market. Coming down here, new higher high, new higher high. I'll probably buy in this area. And then it continue higher. And I need to go a couple of days behind back to find that market. And this is another market that I would probably be buying into. But at the moment, I don't have that situation. So, hands up. So, Sarah says, what about Aussie yen? Aussie yen, CAD yen, Euro yen, Swiss yen, they've all lost value against the dollar. And I want them to reset. I think we're going to go dollar. I think we're going to go yen bearish again sometime soon. But the base side of the currency, meaning Euro, CAD, Aussie, Pound, needs to find their strength again and find their normality again. And that might take a day or 2 or 3 or 4. So to me, that is that. So where is your opportunities going forward? You have a very clear fundamental direction at the moment. There hasn't been a clear one previously today, but now it is clear. Stronger inflation means means higher interest rates. In this case, less likely to cut in June, less likely to cut in September. It means that we might be higher for longer. There is more surplus of money in America that wasn't there before. That the market that came down was once there, but is no longer there. And I think that you need to take that into consideration. And there is nothing in my head that I want you to be like, but Ivan, we have now fallen so much. We're going to fall more. And dollar is going to strengthen more. So by the end of the year at the moment, the market has priced in, I think this is not changed at all, actually. So this might be updated by tomorrow. I think this one, and this one is going to be stronger, much higher than it currently is. I don't think that 475 is a possibility with the current inflation at the current moment. As you can see here, we did not think there was a possibility a month ago to have current, but now it's about 10%. And we almost didn't think it was a possibility to just have one cut this year. It is now 31, and then 2 cuts. So there's 1 cut, 2 cuts. So 3 cuts is still... So 2 cuts, it's now the possibility, most likely possibility, but in the year, that might change by tomorrow when we have repriced everything. Okay? Thank you. Thank you very much. I think that it is a very good exercise to be, I don't know what to call it, be patient today. If you didn't already sell, I think that you did. If you didn't sell the euro, if you didn't sell pound dollar, if you didn't buy dollar CAD, it doesn't really matter. Don't worry. It doesn't matter because there's going to be more days for you. As long as you still, stick to your strategy, stick to what you know, stick to what you've learned. Don't do anything bad. And this one is gonna come. It's gonna come around. So, secondly, you guys know me as a very happy person, right? Am I happy today, or am I content? Through my demeanor today, I've been a bit rough on you, but I mean that you as a trader, the excitement that you showed today is great. Just don't show it on the forex charts. Don't be like, oh, this is great news. I am so happy. Because you know what happens to me when I'm too happy? I make mistakes. Or I'm too sad. So I want you guys to sleep on this one, come back tomorrow, do another analysis, come back to the stream tomorrow with Nick, and be like, hey, people, what is happening? What are we going to do? This is what you're trained for. This is not a drill. This is what you're trained for.
Hey, Ivan, how you doing?
Hi, James. I'm doing good, and you?
I'm doing good. I think that we are about to start our new stock segment. So I want to thank you very much for coming on today. We really appreciate you being here and helping out like always. Ivan is like the most original live stream guest. If you've seen any of our streams before, you've probably seen Ivan. He's been hanging out with us for a while. So Ivan, thank you very much for coming on today, and we will see you later.
Thank you very much for having me.
Thank you. All right, guys. So we are about to get started with, I need to share my screen here and get set up for a second. While I'm doing that, let me just say really quickly, I want to give some people some shout outs because this is a whole process and it takes a whole team of people to put this together. So first and foremost, let's give a big shout out to Chandler for helping putting all this together. He's the, similar to Ivan, if you know the streams, you probably know Chandler, and he's the man behind the curtain, pushing all the buttons. So let's give some shout outs to Chandler in the chat for helping put all this together. And you might sit here and watch the stream for like an hour. Chandler sits here and he's watching the stream for the entire time. He's watching for like 6 hours straight. So big props to Chandler. Shout out Miko, Marco, Chris, Kenzo, Ivan, Nick, and Frank. Where else do you go that you get this type of content? We have guests from all over the world in and out doing market analysis on everything imaginable on this huge, crazy news day. So shout out to everybody that's been streaming with us today. All right, so I'm all set up here, and here's what we're doing today. So if you haven't seen this segment before, this is our community stock portfolio. You, the audience, have voted on every single thing that we have bought in this portfolio so far. First, we bought, just to get it started, I bought some Apple stock. And then you voted and you bought NVIDIA, not once, but twice. We've bought NVIDIA. We bought Reddit. What in the world was that? How did I do the balloons? 1, 2. Happy birthday. I have no idea why it does that. StreamYard's goofy. We bought Reddit not once, but twice, or excuse me, NVIDIA. We have Reddit. We have Nike, Walmart. And then the other day, we got some Lockheed Martin and we got some JP Morgan. Now, the portfolio has not lived up to expectations so far, but that's going to change today. Now, I just had an idea. So first of all, let me say this. Like I said, all of these are positions that you voted on, and you vote by joining our Telegram, 100% completely free to join. You join the Telegram. We put up a poll in the Telegram. You vote, and then we buy it. It's as simple as that. And I just had an idea to kind of kick things off. I didn't plan on this, but I have something here with me that just kind of gave me this idea. Coca-Cola stock. Is this really surely? Wow, Coca-Cola stock trades at $8.16 a share. Wow. Coke, Pepsi. Coke and Pepsi, people. That's our first poll of the day. Coke or Pepsi? What do you guys think that we should buy? No wrong answers. Coke is KO. Am I looking at the wrong Coke? Coca-Cola Consolidated. I thought that was like way too high. There we go. That makes way more sense. Okay. So that's our first poll today. In fact, let me pull up the Telegram here. And please don't break my heart with this answer. So the poll will be up in the Telegram in a second. Coke or Pepsi? Remember, Telegram, 100% free to join. You can join it by clicking the link. 100% free to join. And you can choose what we're going to buy. Trader Denny says Pepsi. Matthew Doon says Pepsi. Let's see. I might have to. There it is. All right. No wrong answers. What are we buying? I'll show the charts again. So this is Coke. Coke looks like it was at its all-time highs about the middle of last year. It dropped a lot since then, but has been on a very nice little rebound uptrend since then, since October 2023. There's Coke and Pepsi. Yeah. Coke and Pepsi. Soda is bad for you. Sure is. Was that? This had to be Nick. I don't think Chandler said that. I think Nick said that. We have a bias here in our Atlanta office. All right. I'm going to pull up the Telegram and then we'll get into, okay. Only 21 votes. Guys, go vote. It's free to join. Go vote. You can literally choose what we buy right now. Oh, 57 votes. Wow, that updated fast. Okay. My vote is Coke. Thank you. Thank you. Thank you for not making me buy Pepsi stock. Love you. Mwah. $10 Coke stock. We're buying it right now. $10 of Coke stock. Please let me buy. Thank you. Boom. All right. Now we own a little bit of Coke stock. Beautiful. All right. So let me show you what we're getting into today. So I was looking over our list and we have some technology. right? We have Nvidia and we have Apple. So we got some tech stock in here. Reddit maybe even would be considered tech stock, kind of. And then we have some apparel retail stuff, Nike and Walmart. We have a bank, JP Morgan. We have some aerospace, Lockheed Martin. We just bought a beverage. We bought Coke. One thing that we shout out RH Knight. Coke is better. Yes, it is. One thing that we do not have any healthcare stocks. No healthcare stocks. So I went on FinViz, which is a really fun website to use. And I was browsing all of these different healthcare stocks. And I made a list of 4 stocks that I think looked pretty nice. They are companies that I have not heard of before. So I thought it would be fun if we learned just a little bit about them together. And then we'll choose which one to buy. Also, I should have mentioned this already. After this, we are doing a giveaway. So we're going to do this pretty quickly, and then we are going to get into our giveaway. We are playing a game with the audience. I don't want to give too much away, but it's going to be a lot of fun. One person is going to win the Edgefinder 100% for free. 2 people are going to win 30-day Discord access. Okay, so one person is going to win the Edgefinder. 2 people are winning 30-day Discord access. This is one of the biggest giveaways that we've ever done. And that is coming up very, very soon. So stick around through this, and then it'll be your chance to play for the giveaway. We're actually going to be playing a game. It's going to be interactive. It's going to be awesome. So stick around for that because that's coming up very soon. So healthcare stocks. I put together a list. I took a look at FinViz. I was browsing all of these. I was checking the charts. You got some big names on there like Pfizer and Biogen and Johnson & Johnson. But I picked some stuff that I haven't heard of before so that we can learn a little bit more about them together quickly. And we're going to decide on what to buy. So first and foremost, we have Organon and Co. Ticker OGN, Organon and Co. Now, this is a cheaper stock. This is only trading at $18 a share. So if we do decide to purchase this particular stock, I think we'll go ahead and buy 1 full share. Now, well off of all-time highs, trading at $35 a share in 2022. But something that interested me about this stock was how new it is to the scene. You can see that this hit the markets in May of 2021. So this thing hasn't even been around for 3 full years yet. And yes, it did have quite a dramatic dip. However, it looks to me like we've bottomed out. And we've had a really nice bullish run to the upside since then. And if we can get in now and get back up to these all-time highs and potentially break through those in the long term, of course, this is a stock portfolio for long-term investment. I think that this one has a lot of potential. Now, I'm just curious because, again, I don't even know what Organon is. Let's see if we can learn just really quickly. What is Organon and Co.? Pharmaceutical company. Here is their website. This is Organon, about us, our products. Let's look at our focus. What do we do here? What do we do? Women's health, biosimilars. What? Establish. All right. What are your products? Oops, not that. Product list. Bunch of confusing stuff. Bunch of big names that I don't recognize. That's Organon for you. So that's stock number 1. Novartis was number 2, ticker symbol NVS. This one stood out to me a little bit because it was the only one on our list here that I was taking a look at from Switzerland. Most of these are United States companies. We had one from Ireland, two from the UK, one from Spain, one from Switzerland, and one from France. So I wanted to take a look at this Swiss pharmaceutical company, Novartis. At a little bit of a discount right now. You can see that it's trading a little bit lower as of late, but overall, pretty solid growth. Pretty solid growth overall, especially recently. 2023 was a big year. Gave back some of those gains, very natural, but then broke through those all-time highs this year, early on this year, in a bit of a pullback. But I think that that's the time to get in, because if it's following the trend, you see a big move up, a little bit of a pullback, big move up, little pullback, yeah, move up, and now we're back in the pullback. So this one I think has a lot of potential. Novartis Innovative Medicines. It looks like they work with cancer. They do cancer studies over at Novartis. So this is number 2. Reminder really quickly, Organon. Here we go. Number 1, relatively new to the scene. Hasn't even been around for 3 full years at a much cheaper price, but, has been moving the right direction this year. Novartis is in a pullback right now, and if it continues to move how it has been, we see big move up, pullback, big move up, pullback, move up. So definitely a lot of potential there. Number 3 on our list. And remember, guys, stick around because we're going to vote, and then we are going to vote, and then we are going to do our giveaway. And in fact, I'm going to go ahead and send this to you, Chandler, if you want to go ahead and put the poll up so that people don't have to wait. I'm sending you that list right there. Those are our 4 options. And number 3 is Merck & Co. Ticker MRK. Merck & Co. is very close to all-time highs. In fact, it's pulling back from all-time highs as we speak. You can see that this thing has just been going up and up and up. Let's look at a weekly chart. Yeah, check this out, guys. This is Merck & Co. And recently, very recently, just this thing has exploded. Merck & Co. Let's find out what Merck & Co. is up to. Biopharmaceutical. So they develop medicines and they develop vaccines. It says 130 years we have brought hope to humanity through the development of important medicines and vaccines. So it seems like, standard pharmaceutical company making medicines and vaccines. What we do. We use the power of leading edge science to save and improve lives all around the world. Research. Sustainability. So this is Merck & Co. And again, recently hit all-time highs. 2024, this thing has exploded so far. Steady growth for years. Literally years. Since 2009, this thing is essentially just continued to fly. So this seems like a very safe option, Merck & Co. And finally, GSK. This is from the UK. GSK PLC. Is that another GSK? Which one is it? Whoa. What happened here? Let me see something. On FinViz, they have it listed as just GSK. GSK PLC ADR. They have it trading at 40. Okay. So FinViz is showing us this one. So we're going with this one. This is the one that FinViz is showing us. So we're going with this one. This is GSK from the UK. Also in a bit of a pullback. Also an even newer stock. This is what interested me about this stock. This one has only been around since 2022. And I feel like a lot of stocks on the market have this problem where they come out onto the scene and then you see a big drop. But since that major drop, this thing, as volatile as it is, you can see there's a lot of gaps in here, very volatile, but nonetheless, slow, steady growth. In a bit of a pullback, not far off of all-time highs. This is GSK. Really quickly, let's see what GSK is up to. GSK is global biopharma company. I feel like I recognize this logo. Here's a look at some products GSK is responsible for. If you use any of these, shout out to GSK. That's a lot of stuff. All right. So I wanted to kind of keep it a little short, a little simple. We don't have any healthcare in our portfolio yet. So are we getting Organon? Are we getting Novartis? Are we getting Merck? Or are we getting GSK? Pull up the Telegram. There is our list. I think that I liked Novartis. Was this the one? I do like Novartis. Organon, I think, is the one that I want. I know this one seems like the least likely, but I have faith. Hasn't been around that long. Deep pullback, deep downtrend, bottomed out here, making our moves higher. I want to see this thing continue to run. It's trading at just $18. I think this one has a lot of potential to the upside, and this could be a good addition for us. So Organon is going to be my vote. Only 28 votes in here. This thing usually updates in a big, just 29. Go get your votes in. Free to join the Telegram. Maybe we can drop the Telegram link just one more time. If you want to. Oh, we just dropped it a couple minutes ago. All right. I'm voting Organon. Wow. And you guys are agreeing with me at the moment. Organon. It's close between Organon and GSK. I'm going to give it just a second to see if that changes while I get our giveaway set up here. Perfect. So we have about another 30 minutes before our next guest joins the stream, which is the perfect amount of time to do our giveaway. Thank you for not making me buy Pepsi stock. Any more votes? Any more votes? 5, 4, 3, 2, 1. I think we're buying Organon. And I said because this one was so relatively cheap that we would buy one full share. So I'm not buying $10. I'm buying one full share of Organon at $18.10. Market order. One share at $18.10. Buy it. And there we go. Now, look at this. Look at this portfolio, guys. This is great. Apple, 2 partial shares of NVIDIA, Reddit, Nike, Walmart, Lockheed, JP Morgan, Coke, and Organon. What a diverse portfolio. This thing is really starting to come together. All right. So, with stocks out of the way, who wants to get to our giveaway? Let me see what I need to do to get this. Do that. And then, yep. And, all right. Are you guys ready? We are going to be playing a trivia game. All right. We're going to be playing a trivia game. And if you're familiar with what's going on right now, if you watch our content, you should be familiar with what's going on. April is the anniversary month of the Edgefinder release. 2 years ago in April, Nick originally released the Edgefinder, the original version of the Edgefinder. And 2 years later, that thing, I mean, it's a night and day difference from where it was 2 years ago to now. It's really cool to see. And it's actually on sale. We're doing a special promotion all month long, but today we're doing an even more special promotion because of our 6-hour live stream and all of you guys hanging out with us. We're doing 50% off the Edgefinder right now today for the 2-year celebration. So you can get the Edgefinder half off today only, which is, I mean, come on, it's half off. But in honor of Edgefinder anniversary, in honor of all that, we are doing A1 trading trivia. I have a Kahoot set up. The Kahoot lets 40 people in. So you have to be one of the first 40 people to join when I put this on the screen right now. So this is the game pin, and this is the website. You go to www.kahoot.it, or if you happen to have the app, you can also use the app. You type in the game pin or scan this QR code. There's a million ways to join. But the first 40 people in get to play. First place gets the Edgefinder for free. Second and third place will get 30 days VIP Discord access. Okay? Let's see here. This is how you participate in the giveaway right here. You're going to join this game, and we are going to play a little bit of A1 trading trivia. We have our first member in. It's Joshua. Welcome, Joshua. We have space for 39 more people. But that's it. All right, now they're coming in quick. Only 40 people get to play. Who will it be? Welcome, Benji. Sebastian, Brad, DJ, Josh, Mark, Johnny, Kakatihi, Makisa, Stefan, Essay. Welcome, welcome, welcome. We have 287 people watching right now. 40 of you can play, but we're also not going to wait around forever for 40 people to join. So get in quick, get in while you can, because we're going to start here in just a minute. If you're in the game, let us know in the chat. Say me, say I'm in, I'm playing. Let us know in the live stream chat if you are one of the members in the Kahoot right now. Can you explain what the Edgefinder is exactly? I am interested to try it. So I'll show just super quickly, just because you asked. The Edgefinder is our proprietary trading software. There's a lot of different stuff you can do with it. And if you want to talk to somebody about the Edgefinder, we can drop the link to the chat, and you can live chat and ask somebody all about it. There's so much to even show you. It's kind of ridiculous. There's a lot of useful information here, but we do have members of our team that you can talk to and chat with. All right, I see Benji, I see Josh, Nelissa, Tom, Johnny, SA, RH Knight, Trader Denny. All right. I think that I'm going to join or start it in 5, 4, 3, 2. Can we get 25 players? 1, 25 players. 24. 25 players, maybe. All right, never mind. 24, 25. All right, we're starting. All right, if you never played Kahoot before, press the shapes that correspond to the right answer. The quicker you do it, the more points you get. All right, here we go. First question. What year was A1 Trading founded? Was it founded in 2017, 2018, 2019, or 2020? What year did A1 Trading officially become a thing? 2017, 2018, 2019, or 2020? Correct answer was 2019. Only one person got that right. Uh-oh, guys. Who got that right? Stefan. Looks good for you, buddy. He's the only one that got that right. All right, number 2. What or where did Nick go to school? Where did Nick go to college? Did Nick go to college at Auburn, at Alabama, at Georgia, or at Georgia Tech? Nick graduated from one of these 4 schools: Auburn, Alabama, Georgia, or Georgia Tech. Which one did Nick go to school at? He went to Auburn. A lot of you said Georgia Tech. Interesting. He is a smart guy, but not Georgia Tech. He went to Auburn. Let's see. Stefan, did you get that right? You did not. MK98 is current. Is that MK? MK, is that you? That's no fair if that's the MK I'm thinking of. What year was the Edgefinder released? Guys, I just talked about this. Was it released in 2019, 2020, 2021, or 2022? I just said it was blank anniversary of the Edgefinder. And in case you forgot, it is 2024. It is the 2nd anniversary of the Edgefinder. 24 minus 2 is 22. 2022. Okay, no change in the top 3 so far. What was Nick's largest trade caught on camera? This is actually a screenshot of that trade. Here was his buy entry. Here is where he got trailed out. Was this on the SPY? Was this on the NASDAQ, the US 30, or was it oil? This was relatively recently. It was on the SPY. That trade was on the SPY. His largest trade ever caught on camera. I forget quite how much it was, but I think it was a lot. We'll just say that it was a lot. All right, next question. We're going quick. Who is not an A1 Trading team member? These are the people behind the scenes. Hallie, John, Drew, and Emily. There should be one name that does not register. Who is not an A1 Trading team member? I hope you read that carefully. I hope you read that carefully. The correct answer was John. Drew, most of you have probably talked to Drew or Emily or Hallie before. That was a little bit of a trick question. Who is not an A1 Trading team member? We have no one named John that works at this office. Hallie, Drew, and Emily all work for A1 Trading. There is no John. Let's see. No change in the top three. Only a couple more questions to go, guys. We're halfway through right now. Where is A1 Trading located? I just talked about this too. Los Angeles, New York, Dallas, or Atlanta. I just talked about where A1 Trading was located. There's a hint. Atlanta. There you go. That is correct. Shoot, my computer might die, people. This could get real bad real quick. So we might have to go a little bit quicker. Brad Q takes the top spot. Guys, this has been an interesting game. There's been a lot of movement on the leaderboards. Question number 7. Who did we partner with for our first in-person seminar? This is something that we did, I think, a year ago, almost a year ago exactly, maybe 11 months ago. Maybe I forget if it was in March or if it was in May. But who did we partner with for our first in-person seminar? Was it Oanda, Eightcap, TradingView, or Webull? Correct answer is Oanda. Only one person got that right. We put on an in-person seminar with Oanda. We did that with Oanda. Brad increases his lead. Brad really wants that Edgefinder. All right, these questions are a little bit different. I forgot to mention that. What stock ticker is PZZA? Is it Domino's, Papa John's, Pizza Hut, or Little Caesars? Yeah, it switches up on the last 3 questions. I forgot to mention that. Shout out, Leia. Love the Tide. I don't give a piss about nothing but the Tide. Yes, sir. Sorry. That just comes out of me sometimes. The correct answer is that is Papa John's ticker. PZZA. PZZA is Papa John's. Papa John's. All right. Next question is similar. All right. Next question is similar. It's going to be a stock ticker question. Scoreboard. Brad Q still holding on. All right. What stock ticker is D-Nut? D-Nut, is it Dunkin' Donuts, Tim Hortons, Voodoo, or Krispy Kreme? D-Nut. Oh, you went to Clemson? My cousin went to Clemson. What year did you graduate? My cousin graduated 2017 from Clemson. Krispy Kreme, most of you got that correct. Nobody said Voodoo. That was smart. D-Nut. D-Nut is the stock ticker for Krispy Kreme donuts. All right. Last question. This one, I think, is going to get a lot of you. I'm not going to lie. This last one is tricky. 2020. Well, congratulations on your graduation. Did I just say my cousin graduated in 2017? He absolutely did not. He graduated in 2021. Anyway, What is the stock ticker for Save? SAVE. Is that Nerd Wallet, Motel 6, Spirit Airlines, or Goodwill? Which stock ticker is Save? Save. This one is a little bit tricky, but the answer is it is Spirit Airlines. Most of you got that right, but that one was pretty split. That one was a little all over the place. Here is Save, Spirit Airlines. Just so you know, I'm not lying. Save a lot of money buying Spirit Airlines stock right now at $4.63 a share. So there we go. Here is our top 3. In third, we have Joshua. In second, we have Max B. And in first place, winner of our Edgefinder is Brad Q. Congratulations to you 3. We're going to drop a link in the chat right now. You can message in. Brad, you got the Edgefinder. Max and Joshua, you both got 30-day Discord access. Nick is popping in here really quickly. Hey. And don't message the chat and pretend to be somebody else. Because we can very easily verify who is who and who is not. So if you did not win, you do not win anything. Congratulations to Brad, Max, and Joshua.
Bradley, do me a favor. Send our support email an email. We're going to do it this way just because we don't want people just trying to claim your prize.
Sure.
So Bradley, if you have a email associated with your name, send an email to us. That'll probably be the easiest way for us to verify, just so nobody tries to swoop in and take your prize. It's support@a1trading.com. Thank you all for playing. That was incredibly entertaining. James did an awesome job with the trivia. We were having fun in the office watching you guys respond to it. And some of you guys know us a little bit too well, so I'm going to need you to take a break from the A1 trading streams.
Brad, you need to chill out on the A1 trading streams. I'm just kidding.
You guys must love this stuff. That's awesome, though. Thank you, everyone, for playing. James, I think I'm gonna jump in here if you're all good, and I'll take over a little bit.
Really quickly, Max, I see you commented. If you have an email or something, that email that Nick just put right here, support@a1trading.com. Email him, let him know that you are Max, that you just got second place. We'll verify it with you and make sure that it really is you and everything. But yeah. All right, Nick, I will leave you to it. Have a good rest of your stream.
Thank you, man. Good job on the trivia. That was awesome.
Thanks.
All right, guys, we are back, getting close to, I guess, the second main event of the day. So I just want to say, as we transition back into market stuff, first of all, thank you guys for playing. That was, like I said, that was really entertaining. If you were one of the winners, what we'll do here is, James or Chandler, if one of you guys could just Discord message me the names that we're looking for. I think James probably has those results. The 3 names that were the winners, if you could send me those details on Discord. And then our winners who are here with us in the audience, if you won, shoot an email to support@a1trading.com and we'll get you squared away. So again, thank you to everybody for playing. Thank you for your dedication to the community. You're welcome, Damon. It is a group effort here at A1 Trading. It's not just me. You got wonderful producers, James, and the unseen mastermind Chandler behind the scenes as well. We got just an awesome support staff to make this stuff possible. That trivia, again, shout out to James. Can we get some thank you, James, in the chat for that? That was awesome. Also, as we close in, guys, we are just about at a record number of likes on the stream that we've ever had. So shout out to you guys. Thumbs up. I wish we had, you know what StreamYard needs to add so badly? Sound effects. Like, come on, man. Like, imagine if we could do like the cheer, like, woo, that would be so cool. Anyways, big thank you to James. That was awesome. Really fun. And thank you to you guys for playing. So back to business. Stocks are selling off. S&P 500 still near session lows. NASDAQ is slightly higher. Guys, I sold a put, XLV. I went ahead and sold puts on XLV. I'll show you my position. Yeah, GIFs, sound effects. Man, I wish. I'm hoping that StreamYard brings that in. That would be the coolest thing if you could like have the producer punching sound effects, because I know we would have so much fun with that. Chandler and James would have so much fun doing that. Anyways, current positions. I am now in a good number of options positions. In fact, I'm just going to really quick, while we're chatting here, I'm going to go ahead and just send a full list of my positions. Let's go right here. We'll do open P&L to our Discord channel. I do share every options trade that I take. Let me send this really quick. Everyone, current positions. Oh, my light just decided to take a break. Hold on. Current positions at everyone. Current options positions. All right, there you go. So there's your updated list of current options trades that I'm in right now. So anyways, let me show you this. So XLV, I sold puts. We're approaching support here. And I sold puts 9 days out. So with this recent sell-off, I've had a chance to hopefully get into a position. I actually would love if XLV continues to go lower. For those of you who are options traders, I want, even though I have sold this put, meaning I make money if the market goes up, I still want the market to go down. Because remember what a put is. A put, if you're newer to options, is basically saying, if you buy a put, you think the market's going to go down and you have the opportunity to sell shares at a higher price. If the market goes down here and you bought this put, on expiration day, you pocket the difference because you can sell shares up here. It's basically a leveraged short, okay? And what's cool about that is that if you are, directionally biased, you can make a lot of money if you're right about the market and you buy puts. Or you can do what I do, which is I sell puts and I sell calls. And the idea behind this is I collect premium for doing so. This is AKA the wheel strategy. My theory here is that XLV is something I would like to own. It is a healthcare sector ETF, and it holds several of your favorite healthcare stocks. Just a moment ago, James was doing his stock picking for the community, which was a lot of fun to watch, by the way. We added some positions today. And I've been wanting to build my own healthcare sector exposure. And so I sold puts today at 139.5 and an expiration date 9 days away, April 19th. So what this tells you is that if the market is trading at or underneath 139.5 per share on expiration day, I will be assigned the shares, meaning I have to buy the shares at $139.50 a share. I'm willing to do that. I'd like to own some healthcare in my portfolio as part of the wheel strategy. If I get assigned, I can then sell covered calls and make money even if the stock goes sideways. That's the beautiful thing about options. So XLV, I'm watching that. That's an ETF that I've sold puts on. I also have solar stocks, tech stocks, the S&P 500, consumer discretionary, and my bond ETF, which is doing not so great. With everything that's happened today, bond values have dropped. Why are bonds trading lower today? Bonds are trading lower today because yields are up. Remember that when yields rise, bonds drop. When yields rise, it's because the economy is expected to be strong. It's because the inflation issue is expected to be persistent. And so my theory when selling these puts on TLT was that I thought inflation would continue to normalize. I was wrong about that. The economy continued to show strength. And so currently I'm stuck in a situation in which I probably will have to buy the shares at $93 a share, even though price is trading at $90.58. So I will immediately, when I get assigned these shares, be at a loss. That being said, I also got assigned, or I got paid a premium to sell this put. So my break-even price is about $91.93. I will be break even on this position. And this is one that I'm willing to work with, and I wouldn't mind getting assigned either. I'll just deal with the trade if I have to. Anyways, that's a little bit of an options trade update. If you guys would like to use Webull, it's a wonderful brokerage, one that I've used for several years now. In fact, 4 years now. If you're looking to trade with Webull and you'd like to check it out for yourself, it is available for a select few number of countries. If you'd like to get access to Webull, we'll drop a link here really quick in the chat for you to check out. So here is your opportunity to check out Webull. Also, if you are somebody who's looking to trade CFDs, like for example, if you're looking to trade XAU USD, Euro USD, those are of course FX crosses. Here's another brokerage. We're going to drop a link here. In fact, Chandler or James, if one of you guys could grab this, let's just drop the link for Eightcap. If you'd like to sign up with Eightcap, it is also a broker that sponsors us here on the channel. And if you'd like to get access to a Edgefinder copy for free, that is something you can do. Check out the details by clicking this link here. Okay, so the S&P 500 is trading lower here today, of course, by about a 1% move. And what I find interesting here is, look at this. The NASDAQ is bouncing back harder than the S&P. And I made this point earlier today when talking to Chris Pulver, who was one of our guests several hours ago. We've been doing the stream for, at this point, 4 hours, 45 minutes, and 14 seconds. I made this point earlier. I made this point that, okay, so let's look at the facts. Let's look at the facts right now. Let's do a little bit of a fact check. Okay. Here is our situation. Okay. We're going to do a little bit of a macro update. Okay. So as we approach meeting minutes, which is about 1 hour away, by the way, you've got some stuff to consider. Inflation is what? We got the update. Inflation is actually on the rise. Problematic, in fact. On top of this, jobs did what on Friday? Were they hot or cold? They were hot. Okay? Finally, everybody is expecting interest rates to come down, right? This is what people think is going to happen. But the bond market today is saying not so fast. Here's the bond market, the 2-year government bond, or the government note. Here's what you see, okay? See yields jumping. This is telling you that the bond market thinks, oh, interest rate cuts are not coming, at least not for a while. The 2-year yield is saying 4.95%. So when we change this story and we say, oh, rates are not necessarily going to come dropping so quickly, they in fact might be more like flat for a while. This is a change in the story. So if you guys are following with me so far, do me a quick favor, hit the thumbs up button on the stream. If this is making sense so far, if I'm doing an okay job explaining our macro situation, hit the thumbs up button on the stream. That will let me know that I'm doing okay, that I can keep going. Also, I think we're about to hit a record number of likes on a live stream ever. So thank you for your help. And thank you for hanging out with us. And if you're enjoying the show, you can also let me know you're liking this stuff by hitting the thumbs up button. And yeah. So here's again, macro update is this. The economy is strong, at least in terms of the figures that the conventional ways of tracking the economy. Now, again, I make this point often. If you're somebody out there who's struggling to pay for the grocery store bill, that is not, something you want to hear. Like, oh, the economy's strong. Are you kidding me? I can't, prices are ridiculous. That is true. And that's also been a heavy supply issue, right? During COVID, we saw prices go crazy because so much money was printed by the Fed to try and keep everybody from getting evicted from their apartments, right? So we saw this massive currency supply expand, and inflation is just really biting, and it's becoming a stubborn problem. The question, though, is, let's look at the metrics. People are employed. inflation continues to go up, arguably because our numbers are not that weak, right? The economy numbers that we can look at are not weak. I'll show you those. Again, we're going to do a macro. We're doing a macro update here. So give me a second. I'll get to that. The point is, the strength in the economy and the stubbornness in inflation is going to, at least for the time being, scare the market because rates are not going to come down. And so areas that are sensitive to interest rates are likely to struggle, at least right now. Can you guys list me? Here's a quiz question for your day. What are some sensitive areas in the financial markets to interest rates? List some of them in the chat. I want to see what you guys, I want to see if you've been paying attention, because I could list them for you, but I want to give you a chance. Tell me, what are some interest rate sensitive areas of the market, whether it be commodities, stocks, sectors, indices, currencies, whatever you want to say, it doesn't matter. But tell me some things that are interest rate sensitive. Max, you've got it. The Russell. The dollar is interest rate sensitive. That is absolutely true, but not sensitive. It's in love with the idea of rates staying higher for longer. The dollar index is up today because the expectation is the Fed might not cut rates as soon as everybody thought. So that is true. It is sensitive, but in the opposite direction. Gold, absolutely, right? If gold does not see rate cuts coming, gold will struggle. It's seeing a little bit of a red candle here today. I got trailed out of my trade, took profits on it. Bonds, absolutely. Mortgages, absolutely. You guys are good. You guys are intimidating me. Now I can't BS you at all. People in the audience know too much about macro and fundamentals now. I can't make stuff up. Somebody we had this funny thing. Let me see if I can find it. I'm going to show off okay, look at this. So James shared this today. Somebody said, "You guys look like you don't know what you're talking about, not hating, just watching the live stream." And I said, he's right. I don't know what I'm talking about. Buzzwords and coffee, that's all you need. But I don't think buzzwords and coffee will get me far enough with you guys. You guys seem like you know your stuff. Small cap stocks, absolutely. Cars market, absolutely. You guys are well done to you guys. That is awesome. You guys nailed that. Absolutely. So interest rate sensitive areas of the economy are under pressure first. Does that hold up in today's market analysis? US 30. Ready? Here's next step. Next question, quizzing you guys. Why is the Dow down more than the NASDAQ? Isn't the Dow supposed to be the more stable companies? Tell me why, on a day that yields are flying, the Dow is underperforming. This will really be a test. If you know the answer to this one, then you just have my straight up respect. Because this one confused me at first. But once you know, it makes a lot of sense. And I promise we're going to get into some more market data here in just a second. I've been teaching you guys. I'm getting scared, man. If I keep teaching everybody my tricks and my stuff, I'm going to just be out of a job pretty soon. I'll just have to go hide in a corner and trade by myself and never make videos again. I'm kidding. I'm pretty sure I'll be making videos till I roll over. All right, let's see. Does anybody have the answer? Why Dow underperformance on a day that yields are rocketing? This is true. This is not necessarily wrong, but there's a specific answer that I'm looking for. Debt-heavy companies. I mean, yes, there are some debt-heavy companies, and they got like Boeing and things that require a lot of cost of capital stuff. There's no question there. Does nobody have it? Nobody has it. Okay, here's the answer I was looking for. The reason is because there's a lot of dividend stocks in the Dow. Okay, this is competition. Dividends reigned supreme. They were lovely during a time when interest rates were zero or near zero. Okay? When you have dividend stocks looking less attractive on a day today. Why is that? It's because now people can go get risk-free yield going to the bond market. This is a competition to stocks in general, but the first ones that get challenged are dividend stocks. Because why on earth, if I'm looking to get 5%, okay, let's say I'm an investor and I want to go get 5% out of the markets. I'm just looking for slow and steady, low risk investing. Okay, so a dividend stock offers 5%, or I could go into the 2-year yield and get about 5%. Where are you going to go? You're not going to go into dividend stocks, especially if you think the market looks scary. Why would you go into dividend stocks when you could get risk-free in bonds? Do you see the dilemma? Do you see why now the dividend heavy area, which is the Dow, there's a lot of dividend heavy names in this, very stable dividend offering companies. Their attractiveness is deteriorated by high yields. Does this make sense? If this made sense, do me a quick favor, like the stream. If that made sense, hit the thumbs up button on the stream. Where are we? I can't see it on my software. Can someone let me know how many likes are we on the stream at? Let me know, and I appreciate you. S&P testing support. NASDAQ not quite at support. The NASDAQ's outperforming today. This is remarkable. You might say, well, Nick, it's still down by 1.4%, but the NASDAQ's supposed to be the higher risk area of the market. It's supposed to be the more growth-oriented market. Why isn't the NASDAQ down 2% compared to the S&P, compared to the Dow? Why is the Dow down the most? It's confusing at first until you realize that this is the area that has the most growth, and rate cuts are still on the table. They're just getting pushed back. That scenario still favors the NASDAQ. I am more bullish on the NASDAQ right now than I am on the Dow. I changed my mind on that. A couple of weeks ago, I said the exact opposite. I said, I think the Dow looks more favorable. I think now the NASDAQ looks more favorable because we might be entering into a time where rate cuts are not coming anytime soon. Maybe there's a couple extra months than people thought. We're now seeing, by the way, guys, September is the new expected time that we'll see a rate cut. September. July, nope. Slightly favored to not cut rates. June, absolutely not. 80.7%, guys. 80.7% chance that we do not see a rate cut in June. This was the Mecca. This was the safe haven for rate cut bulls. So now we're seeing pushback to September. And this makes sense. Jobs data hot, CPI hot. What more do you want to change the narrative a little bit? So if we're going to be in an environment where rate cuts are coming eventually, but we don't know when, give me the NASDAQ over the Dow. That's my opinion. As always, these streams are my opinion. The streams are our guest's opinion or my opinion, whoever's on. It's listed in the description. Okay. This is not financial advice. I'm not a financial advisor. I'm a trader. I share my opinions online. My opinion is give me the NASDAQ before you give me the Dow. And we'll see how that goes. But that's been a winning trade late 2023. It's not been so much recently. The S&P has actually outperformed the NASDAQ, I believe. Anyways, let's talk gold here. I am out of my gold trade, guys. Stopped out here on this candle. This candle took me out of my trade. We closed for 18.5K. I took 2 different trades, and I'm officially out of the position. I am still, however, in my oil trade. Here's oil. Oil P&L is about 9.5K. There was a little bit of period of time there where it looked like oil was going to actually be a bigger trade than gold. I had a similar account position sizing on these two. And that flipped the other way. Gold just went crazy and then now has pulled back. Am I looking to buy gold again? Let's do bread and butter. We do this day in, day out. We enter trades, win, technicals set up nicely, and the Edgefinder is confirming. Gold is not a bullish setup right now in the Edgefinder. It was. I took that trade. I made money on that trade, but it's not there anymore. So I can't just pretend it is. For me with gold, I trailed out. I made my money on this, and I'm very thankful that I was able to catch that trade. It was remarkable. Best trade of the year so far. One of the best trades I think I've ever taken. This might have been number 2 trade ever for me. I think it is. I think this is the number 2 trade that I ever had was on this gold position. I entered it here, ripped, entered it second time here, ripped, stopped out today. Now, am I going to feel foolish if it just rips and keeps going from here? I'll be a little sad. I'll be honest. But if it does happen, I stuck to the rules. I caught this thing for, let's see, 15 approximate % on gold. And I could not be more thankful to have caught the move that I caught. And I'm not saying that, obviously it might come across like, oh, I'm just bragging about this trade over and all. I am really excited about it. I'm really proud of this position. Obviously, you could tell. But I like to add context when I talk about these moves. Prior to this, I could not find my groove with gold. There were several times where over here I tried being short on gold and it didn't work out. Over here, I had a couple longs. Some were okay. Some were losses. And I finally caught the move I was looking for. I finally caught the breakaway movement. I was bullish at the turn of the year, but I couldn't find the right entry. So I took losses, break-even trades, small wins, and finally caught the big runner. And this is just the power of patience. It's so important. You stick to your rules, you take the trades you're supposed to, and eventually, as long as you've done your research, backtesting, and risk management, you'll get rewarded. That's the cool thing about trading. So I am sad to see it go, but I'm thankful that it happened. I feel like it's like a memory. But these are how these trades sometimes go. They're like a big roller coaster. Anyways, that being said, let's talk a little gold technicals here. To be honest, even though I got whipped out of this trade, we aren't necessarily outright bearish either. If this market takes out the lows, yeah, I think we probably see a little bit more downside on the gold market. But I think that we're in a technical bull market. There's no denying that. What I can deny, however, is that I don't have a reason to enter. And the reason I don't have an entry is because the Edgefinder does not have an entry for me. So I'll wait for that confirmation to show up again on the Edgefinder before taking another trade. Gold is getting a -2 reading on the Edgefinder. So now we'll focus on things that have stronger readings. Pound USD, Euro USD, Kiwi USD. These things are getting strong readings. US oil, USD CAD, USD JPY, USD CHF. I'm already long USD CHF. Let's check in on that trade. This one's going really well so far. I have trailed my stop loss one time already. And with this breakout here, it's probably time to go ahead and trail again. In fact, that's what I'm going to do here. So bear with me, guys, as I trail a stop. Also, while I do this, let me just make sure if anybody hasn't heard, today for the CPI and FOMC stream, the 6-hour stream, we are currently doing a 50% off flash sale. If you have not heard about this already, if you are looking to get access to the Edgefinder, this software that I use in all of my videos, the content that I produce, my company, A1 Trading, has built this tool in the last 2 years. We're celebrating 2 years since we initially launched the product. If you'd like to get access for half off, we are doing a very special just during the stream discount sale. If you want a copy, click this link, chat with us right now, and you can get your hands on a copy of the Edgefinder. A couple cool things about the Edgefinder. It's browser-based. You can take it with you wherever you go. You can log in from any device that you want, and you can use the software wherever you are. That's number one. Number two, it's a one-time fee that has currently just got slashed in half just for you during this stream. Click this link if you want access to the sale before it ends, and you can speak with someone on our staff who will get you set up with a copy for that very cheap discounted price. Okay, so while that's going on, I'm just going to update my stop loss on this position, so bear with me for a moment. All right, I'm trailing my stop loss to 90.81. Okay, 90.81. All right. Okay, so for those of you who are on the Discord, I'm sharing this update right now. Okay, and I'm just going to also share a screenshot of this. Okay. All right. For those of you who are on the Discord channel, I just shared the update on USD CHF. This is a trade that I took. I took it yesterday. Yeah, I took it yesterday, right before stream. Okay, so that is in there. Make sure also Gary might not make it. Oh man, no Gary today. That's okay. We'll make it. Anyways, so I don't know. I lost my train of thought. Trailed my stop loss on dollar Swiss. I'm already in this trade. So are we buying? We should not be just placing trades just because somebody is streaming about it. I entered dollar Swiss yesterday. I'm in a trade. This was shared in our signals room. Stop has been trailed, and I'm just managing the position. I'm not adding to a trade up here. I wouldn't sell. I wouldn't buy it up here. There's nothing to do up here. Just let runners run if you've got a trade on. I want to buy GJ right now. Do you think it's a good idea to buy now as the meeting minutes is coming? I will say this, and I don't mean to sound like, I'm not trying to sound like a jerk or anything, but if you're asking people like, should I be buying this? Should I do this? Should I trail a stop? Should I take profits? Stop trading. 100% cold stop trading. Do not trade if you don't already know what you should be doing with your trades, okay? If you're asking for so-and-so's opinion, you've already lost. Because at that point, you're not trading a system or a strategy. You're firing from the hip. You're not aiming, right? It's like trying to, you should be aiming, right? That's a terrible analogy. But my point is this. If you are just asking random people in Telegram channels or YouTube chats, hey, should I do this with your position? You are destined to lose your money in the markets. You should have back tested your strategy thoroughly before ever touching the financial markets. You should never just be trading off of a hunch, asking people for opinions on should I sell it? Should I, right? At the end of the day, if you are just reliant on other people's opinions, you're just looking for somebody else to blame. You haven't done the work for yourself. I'm not saying it to be harsh. I'm telling you the facts. If you want to trade the markets profitably, you should never just rely on people's opinions online. You should have a system. You should have a strategy. So that being said, I can look at pound yen. I can share my opinion on it, but I'm not always right. And nobody is. If you're looking for somebody to give you the holy grail answers to your stuff, it's going to be a tough ride, right? So that being said, something to think about. Alan, you're funny. I know you're kidding. I hope you're kidding. I know you are kidding. My doubt is, should I trade with the meeting minutes coming? That's, again, another thing that you should already have answered before trading, right? You should know, like, do I trade ahead of news events, right? Should I be in a trade holding into a news event? For me, this is not the right answer. This is my answer. My answer is I'm a swing trader, so I oftentimes do hold through news events. But if you're a day trader, you have to figure these things out. If you're a day trader, if you're a swing trader, These things need to be things you answer before you have trades on, or you're even considering trades. What's your opinion on gold? I trailed out. I took profits on gold. I am neutral on it now. Does it look bullish? Absolutely looks bullish. But technicals are one side. I am also looking for some sort of fundamental bias in order to also get long. So I don't have anything on gold. Gold is neutral. So I'm just going to wait. Is swing trading better than being a day trader? I think so, but that's my opinion. It's not fact. So I like swing trading because I don't have to spend all day long in and out of the markets in order to make money. I can place a trade. And I also like swing trading because I think it's more preferential for fundamental traders. If you are looking at, economic statistics and, GDP numbers, retail sales numbers, if that's something that you consider, which I think you should, swing trading, I think, is preferable. It's my opinion. Day traders can still use fundamentals, don't get me wrong. But sometimes the moves on shorter time frames can be so sporadic and unpredictable that for me, I like to try and pick up the bigger picture rather than try and just Finding an edge in the market. I'll tell you why we named the Edgefinder the Edgefinder. It's because everybody, their mother, their brother, their sister, their dog, their goldfish tries to find technical edges using technical analysis only. Where I think an edge is easier to find is having a very comprehensive understanding of macro fundamentals. I think an edge is a lot easier to find in that area than trying to just find your technical edge. Everybody who's listening, again, I'm telling you this, my edge doesn't come from chart markups. I think that's what everybody tries to do. If absolutely everybody tries to find their edge in the markets by drawing trend lines, indicators, support and resistance, if that's all you've got to build your edge, I think you're going to struggle because the financial markets are just harder than that. If there was a single line that we could all draw or a couple zones and charts that we could just mark up and all be profitable, markets would be too easy. The money is made, I think, on the fundamental side. That's just my opinion. So the name Edgefinder is meant to allow traders to look through a lot more economic data and to assist them in getting a full comprehensive view of the market and help them find an edge. So, and remember, it's 45% off sale right now, but we are doing for this stream only 50% if you send us a DM using the link being dropped in the chat. What do you use? Like pure price action? No, I use fundamental analysis. I'm talking about things like CPI statistics, retail positioning, seasonality, right? GDP numbers, manufacturing numbers, services PMI. These numbers all mean something. They tell you a story about what the financial market is telling you. And most traders choose to ignore them. Whereas most of the people that I know that are very successful money managing traders, they consider the fundamentals regularly. What do you trade most? I trade mostly indices and commodities and options. The VIX has given back a lot of its gains here today. The VIX was up to 16. It's now at 15.48. S&P 500 finding a little bit of a bounce here. NASDAQ also finding a bounce. Check out silver. Yeah, what's going on with silver? Silver's wicking on both sides here today. This could either just be a pause point or a reversal. Maybe a short-term pullback is something for the metals, although it's not something I'm betting on. I wouldn't be short the gold market or silver. If anything, I'm waiting for a pullback and confirmation from the Edgefinder to be bullish again. Oil's trying to break support. Let's look at oil. I've got a stop loss just below the lows of the day on oil from my entry back in mid-March. So we'll see if I can stay in the trade or not. Oil's been so impressive at this level of support, though. Look at this. It's been several times where the market's come down into this area and can't seem to break that support level. Because I'm bullish, obviously I would like this thing to continue to bounce. But I'm feeling pretty confident in terms of my decision to either stop out if this market breaks the lows. If it breaks the lows, time to trail stops and take profits on the move. And if the market keeps moving, then I'm just going to continue to trail. Check out silver. I just did. I just pulled up silver. Sorry, I'm just adjusting my support zones here. Okay. Yeah, so oil continues to be one of the top setups on the Edgefinder. Let's take a look at some of the other ones. Dollar CAD. Dollar CAD, huge breakout to the upside today, which makes sense. Again, between jobs data and hot inflation, the dollar's looking really attractive, in my opinion. Maybe a 61.8% retracement might be interesting. So if you're watching USD CAD, maybe a pullback could be interesting, but that's still a ways away. You could maybe make an argument for the 50% retracement as well. But I think a pullback is probably a fair thing to wait on. And look at that, guys. Yields continue to scream higher. This is kind of crazy. I could be wrong, but if yields keep going like this, I wouldn't be surprised if by the end of the day, the S&P is right back down towards the lows. Again, with yields on the rise, the stock market seems to be fine with it overall. Like think about this. The 10-year yield is up 4%. Stock market's down 1%. It's not a direct like one-to-one correlation by any means, but you do have to wonder, why isn't the S&P 500 breaking support? And I will say bulls are going to love this. Bulls are going to love the fact that this level hasn't been broken today. Despite all the pessimistic news, bulls are going to love that. I mentioned this earlier, but I sold puts on XLV. XLV is currently slightly, I'm up $14 for the most part. Well, nope, never mind. Down 22 now. Changed that quick. TAN, XLK, VOO. These are things that I've sold puts on. TLT is treating me terribly. TLT is looking like a bad call out. But regardless of that, if I get assigned TLT, I'm more than fine with it. TLT, I have a strike price at 93. Collected $1.07 in premium, so my break-even price is 91.93. So if I get filled, I will get filled here. And this one I don't mind holding for the longer term if I have to. Stock's the opposite with DXY. Not so much recently, but usually you're right. Most of the time when the dollar is jumping like it is, like look at this, 105.15 coming in. Most of the time, yeah. The fundamentals don't matter. Let me ask you if you think, does this chart tell you that fundamentals don't matter? This came out right at fundamental news being dropped. So tell me if you think that matters or not. CPI being hot absolutely matters. In fact, if you had understood what this number is and you just blindly bought the dollar after, it continued to rip higher because the market knew what it meant. The market understands that hot inflation plus hot jobs is problematic for a lot of other assets, but it's also just incredibly dollar bullish relative to its peers. Look at Europe, look at, the UK in relation to this. And suddenly you've got an interesting story. Look at this. Oil just jumped. Anybody know what just happened with oil? Look at this 5-minute chart. Whew. Just had a big jump on oil. Real quick, guys, we're going to take a commercial break. We'll be right back to talk about this oil move, gold move, indices, what's going on. They're selling off here towards on the hour. We'll be right back to talk about that with Frank in just a moment. We're going to just take a quick commercial break, 30 seconds or so. We'll be right back after this.
It's our Edgefinder anniversary sale. If you want 40% off the Edgefinder, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our smart money indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the Edgefinder anniversary by grabbing yourself a copy today on our website, a1trading.com.
All right, and shout out to James for his quick commercial break. That is just a reminder, guys. The Edgefinder is currently 50% off if you direct message us on our website using the link we just dropped in the chat. Also, wow, something just happened. Frank, did you see that on everything just moved a bunch? Did you see that?
Yeah. I don't know if it's anything particular, but I think we're just going to see a lot of choppiness until, I guess, 2 o'clock.
Yeah. I mean, look at this. You just had a jump in the VIX. You had dollar index still on the move. Here's the 2-year yield. Frank, this is something here. U.S. oil's up 1%. This is my indicator. This is the James indicator. Lockheed Martin jumping up. This is the war indicator. U.S. oil, gold, Lockheed Martin, and yields dropping.
Did something happen in the Middle East?
I don't know, but that would be the that's my go-to is if you get a move on those instruments all at the same time. That's usually recently been the case, but I don't know. Regardless, a little bit of a blip there. S&P 500 was on a move up and now just dropped again. NASDAQ down. Frank, I want to get your thoughts on something. So a couple of weeks ago, I was more in the camp of thinking the economy is going to slow, so yields are going to probably come down, and maybe want to be in Dow stocks because they're dividend payers, they're more stable, and if you get a slowdown in the economy, their earnings will be relatively stable to more volatile areas of the market. I talked about that with Chris earlier today, and I want to get your thoughts on this too. I've actually just completely Uno reversed. And now I think that overall, maybe not right now, I think the NASDAQ still has room to pull back. But I think overall, I think I'd rather be in the NASDAQ than in the Dow, because if we're going to go into this environment where rate cuts are still coming eventually, but we don't know when, it could be some time. Don't we want to be more in the growth focused tech sector names that are less rate sensitive than the Dow? What do you think?
You're saying you want to be in tech that's more rate sensitive than the Dow?
No. I think that actually a lot of the big names like Apple and Microsoft and Nvidia are less rate sensitive in some ways than the Dow is. The Dow is sensitive because it's dividend stocks, and dividends look less attractive if yields are way up. So Dow struggling. That's why I think today, Frank, that the NASDAQ is not down 2.5%. Here's the NASDAQ down 1.3. The Dow's down more. I think the reason is because the yields going up like this are telling the market, rate sensitive areas or dividend stocks look less attractive because rate cuts might not be coming for a while. Meanwhile, where does that take you if you're an investor? Just put me back in Microsoft and put me back in Google, because I know they're going to grow. They've got so much growth, even if rate cuts don't come for a while. Does that make sense? That's my thesis.
Yeah. I still kind of think, though, that if rates do remain higher, it's going to be tough for everything. And I think what you're arguing is that the Dow would be more at risk versus the NASDAQ. Although I do wonder, because a lot of companies in tech, they have business overseas too. So a lot of borrowing there, and then just having higher higher interest rates overall is really tough on.
Let me also clarify too. This is also what I'm thinking. So I'm saying NAS, if rate cuts are still on the table. As long as rate cuts are still on the table, I think the stock market overall will remain supported. Even if it has dips, I think buyers will step back in. However, to your point there about if there is actually just like a uncertainty if like rates are even going to go higher at some point, which is a possibility. If you keep seeing strong economic data and inflation just stays a problem, the Fed might be forced to talk about, again, rate hikes. And in that case, absolutely, the NASDAQ gets crushed and the Dow reigns supreme. So I think that there's an important distinction there, I guess. I'm saying NASDAQ still stays preferable as long as rate cuts are still coming eventually. But if rate cuts get taken off completely, then the Dow becomes the winner. Is that
okay?
Kind of
yeah, I see what you're saying.
Okay. Cool.
Yeah, I'm overall leaning bearish so far, just because today you saw that big sell-off. You see some attempt to come back, and it's just silenced by all the sellers today. So I guess what I'm hoping for today is for price to sort of, I guess, either stay where it's at or come down a little more, and then let it digest what happens in meeting minutes. But I'm seeing overall just weakness. Even if I'm sharing my screen now. If you look at the weekly time frame, I know this isn't something that like is very common of me to look at the weekly time frame, but we took out last week's lows.
Yes.
I don't know the last time. Okay, so in February we did the same, but we hit this trend line. Now we have broken underneath, and we've taken out this week's lows, and there's just this candle right here suggested some sort of bearish move. So it looks like today, if we close around here, if this week closes below last week, it still looks like we're going to have another, I think this is a couple percentage points. If we come down to whatever this is, the 50-50, that's 1.8%. And then the next clean one I can find is down here at 6-7% drop, 9% drop to 46 or 47. Yeah. So we could see a lot of room for drawdown here. And I think US 30, NAS, S&P, they're all subject to the same sort of drop here. But if you're talking about longer term, yeah, I can see the Dow performing less worse, I guess.
Sure.
But if we do see this correction, which again, I'm not sold on a correction because there's always buyers stepping in and propping price up. But if we see a correction, I think they're all going to kind of suffer the same volatility.
Yeah. No, I would agree. I think overall, they're all going to move down if they're going to move down. I'm just thinking that in terms of like, if you're still a bull on the year, even like for me, I think that if we break this support level, you probably see some bigger pullbacks in all three indices. But at some point, I think the dip gets bought. But I just got an update here, Frank. So we had somebody mention that the reason oil is up is the U.S. sees missile strikes on Israel by Iran or its proxies as imminent, from Forex Live, I assume.com, which is, of course, concerning to the market. That could be contributing here. But I think, Frank, what you're on about too, you mentioned sellers just not backing down here today. That's a change in behavior that you and I have been, actually admittedly frustrated by, is every time you do get some sellers picking up, the buyers just rip it back. Today might be a bit of a game changer in that regards. We've seen, dip buyers. Here's another one. I thought this was interesting. Last Thursday, the market went crazy, sold off on geopolitical tensions and jitteriness ahead of NFP. The market did rip back, but look at this. It put in a lower high after that. This different scenario than what we've seen in previous times, where you get these sell-offs and the market just rips past them. You get the sell-offs, dip past high, rips through the highs. And so right now we saw a lower high happening over here. And today, I think if you close down, like if you see markets close near the lows of the day, that could be signaling, as you're pointing out, a bit of a bigger pullback is in store for the markets. I think for me on the daily chart, the key spot here is can we close below 5140, and we'll just have to see how that one goes. But Frank, if you're cool with it, I'm gonna go to the restroom and grab some water really quick. Can you take over for just like 5 minutes? I'll be right back. If you just want to like walk through gold and oil or something.
Sure. Yeah.
I'll be right back.
So I do have a few scenarios I want to go through, and let's start with the gold then. So the three scenarios I see from the Fed after today's inflation are, so they can either decide that they want to keep the rate cut projection the same, so we still have the 75 basis point cut by some point this year, or they then track backwards and say, okay, we're going to hold off on the rate cuts and maybe wait till next year. That's scenario 2. And scenario 3 is I don't think this will happen, but if they start saying like, okay, we're going to start hiking again, these are the three things I think could happen. And if so, what I see on gold is I think I see a win-win in either direction. So weaker dollar is the overall sentiment here, but say the Fed decides that they're going to wait. They're going to see what happens. Projections are going to remain the same. Gold is probably going to stay at this level. It's probably not going to dip too far. I think it's going to be in some sort of consolidation, leaning upwards to the, the 2350 or 60 zone. So that's kind of what I have going on for gold if they decide to stay. If they decide to hold back on rate cuts and say they wait till next year, higher rates for longer, this might be more of I would say neutral to bearish sentiment, because higher rates for longer is still not great for gold. But I still think that regardless, you're still expecting that that sort of weakening dollar overall in the coming years or so. It's just a matter of time. So they stay where they are, and they want to keep their policy rate the same, neutral to bearish. They decide to hold back, that's neutral, or the first one's neutral to bullish, this one is neutral to bearish. If they decide to hike rates, that's more likely going to be bearish. So I think that in those three scenarios, there's more of a probability that gold either stays where it's at or moves higher. So that is kind of my thought process on gold. And again, I don't have a price target after breaking these all-time highs, so it's just something to look for. Just watch that already. James, I see you taking Nick's spot.
Yeah, he's back. He got back a lot quicker than I thought he would. Okay. What do you think personally, Frank? Do you think that there's any chance at this point? Because way back in like December, I think that the overall sentiment was March rate cuts, which clearly we are well past that. At this rate being in April, and inflation, not only is it not sitting still, it's actually going higher. Do you think that there's any chance for rate cuts this year?
I think so until the Fed says otherwise. So I think we're going to see at least one.
Okay.
But again, they said 75 basis points. That could be 3 consecutive 25 basis point cuts, or that could be one 75-point cut. You just don't know. But for now, I think that there is going to be a cut. But I'm going to wait and see what the Fed says because, I mean, that's ultimately where you're going to get your answer. But I didn't think they were going to happen in March. I remember even analysts were saying they're happening in December of last year, and I was completely against that. I was against March. June, I believed. I thought June they would probably look to cut then. However, the expectations went to like 80%. I think they're going to hold again in June. So once again, high rates for longer. And I think September, October is kind of that 50-50 zone for cuts or high or pauses.
Well, it sounds like you haven't been wrong with your thought process so far. So Frank's looking deep into his crystal ball for the rate cuts, but Nick is back, so I'm going to let him take back over at his own desk.
Thanks, James. Welcome,
guys.
back.
I think we're near a. Actually, we passed an all-time record number of likes on a stream. And again, I really wish, Frank, I was saying this earlier, I wish that this software that we're in, StreamYard, would let like a sound effect come on, because I feel like we could do like a little clap, like a little, I hope they add that. That'd be so cool. If you're hanging out with us live, smash the thumbs up button on the stream. We are currently at 918 likes. Help us get to 1,000. If everybody just hit the thumbs up button right now, we'd probably get to 1,000 likes, which would be a absolute record breaker for a stream. And we appreciate you guys for hanging out with us. And we're gonna run it right into the close. We've been streaming here since 8 a.m. 5 hours, 35 minutes, and 33 seconds. That is absolutely crazy. And Frank, I didn't mean to cut you off. You're looking at gold. You're still in gold.
I am, yeah.
Nice.
So how it works is you have to set your stop loss, and it has to, if it doesn't get triggered during the day, you have to wait till the next time it opens to set it again. So my stop loss alert or activation expired, and gold, the gold spot actually never came down to my the price where I said I would get out. I was kind of eyeballing like, okay, 33 would be where I would get out, but price had to come down to 22.62, and it never did. So I'm still in gold.
Frank, you can set a good till canceled order. Did you know that?
No, I had no idea.
Yeah. So when you set a stop, let me see if I can pull it up on my screen really quick. So let's say I go to USO. I have a trade open here. I do it usually within TradingView. So let me just do it on there. So what you can do is modify order. You can, I'm sure you can surely do this within Webull, but I just do it in TradingView. If I go good till cancel right here, that way you have it probably set as like it expires at the end of the day. If you change it to good till cancel, yeah, that was a life hack, because then you just have it, until you take it off.
Okay, that's good to know.
Frank, you should try trading directly within TradingView. It is so convenient. It's crazy, because then I'm just looking here. Like if I'm talking about oil, I'm like, okay, here's my oil, and then just type in USO. Now I can see the trade. I find it so convenient. The only thing that sucks is that you can't see options trades within Webull. I wish you could.
Right. I just kind of get caught into a rhythm, and I get used to what I'm doing.
Yeah.
So I don't try to do anything else. But yeah, I could add it to TradingView and just see. But
yeah. Look at this. So we got the VIX is trading at 16.36 ahead of the meeting minutes. We're about 8 minutes out, and we'll see what happens there. Look at this, Russell down 3.2%. Russell's the big loser today.
Yeah. Small caps taking the biggest hit. That's not a good sign either.
Yeah, just showing how sensitive, I guess, they really are to interest rates. Oil's on the move higher here. Again, I'm not exactly sure geopolitically what's going on. Someone mentioned that there was some announcement that there's concerns about an attack on Israel or something from some of its enemies in the Middle East. So just continued, very sad escalation of things going on over there. I was mentioning this to Frank the other day. It's like a global peace indicator that I was listening to something about, where it was saying that it had hit, like a decade length high in terms of war and violence in the world, which is really sad. I hope that turns around and trends back towards peace. That would be nice. But in the meantime, war is very much a market mover for, there's this force here that's kind of interesting with it, Frank, is if there is escalation in terms of like violence and war and stuff, it typically causes yields to actually go down. So that is in kind of an opposite force to what's going on, but we'll see what happens there. If you get a big reversal in yields right now, it's probably not on economic data. It's probably on war concerns, because suddenly people are like, oh, let me just go into bonds because that's a safer spot. So the demand for bonds increases, hence the yield drops. I'm also wondering, we missed this today, but in terms of the bond auction, did anything exciting come out of that? So forecasts, we got 4.56 on the 10-year yield. And that must have been the spike that occurred around that time. Yeah. 4.56 up to here.
Yeah, it was like right at 1.
Yeah.
Right at 1, the S&P, all the indices just started kind of moving lower.
Yeah, very, very interesting. We'll see where that goes. The euro down 1%. Pound has caught up in terms of its sell-off, down 1.03%. Dollar yen, Frank, you might have been right about this level. Actually, I can't remember if it might have been Chris.
Oh, no, I was wrong.
Chris was thinking, yeah, that's right.
I was looking at it to the short side, thinking whether or not I should get in, and I never made the decision to short this. And I'm glad I didn't, because it just ripped way higher.
Yeah. Dollar yen's kind of going crazy. Again, key level of resistance here. And with this candle closing outside of it, dollar yen might be looking to go higher from here. Yes, the Bank of Japan is not going to be happy with that, but the strength of hot economic data out of the US could just be a continued driver here. I don't know, kind of crazy on the currency front. Stocks down towards session lows. Just a wild day. Look at that. The Dow so far has been the biggest loser, besides the Russell, of course, on the day. And the NASDAQ is eking out just slightly the best performance on the day. Really, really interesting. Could that also be, though, that the S&P has outperformed, and that's why it's pulling back a little bit more? I don't know.
I'm not really sure. I think so. Despite these wild moves, you look at if you go on the daily time frame, stocks or indices just have not really moved that much.
Yeah,
like these are big candles, but then it was followed by 3 days of recovery. Today it's back down to where it was on Thursday. So not like huge moves or directional moves. These are just very choppy markets right now. And I think, I don't think it's going to necessarily be a terrible sell-off or a terrible rip to the upside. I think it's just going to be, you're going to see a lot of harsh green and reds, but overall we're going to maintain this sort of range. And I don't know. I'm not really thinking that we're going to see a huge sell-off just based on this news, but you know, I could be wrong.
Well, we're just a few minutes out here from meeting minutes. We got about 3 minutes to go here, and we will see where it takes us. I'm going to just quickly switch over to our all markets view just so we can see everything. We got S&P 500 over here. You got the NASDAQ over here, US 30 over here, dollar index here, euro, pound, gold, and oil. And we're keeping an eye on everything here as we get closer to the event. Something just happened. The stock market just whipped back the other direction. And again, with meeting minutes just around the corner, volatility is expected. We'll see if it gets anything. Just a reminder to people who are in the audience who are just tuning in, meeting minutes is it's basically like scribe notes from their meeting. It is not Jerome Powell speaking. He's not speaking today, but the market is still expected to potentially move if there's anything surprising that comes out of the meeting minutes here today. So I guess we'll just see. We'll see if there's anything that comes out of this that spooks the markets or causes excitement. Anything about rate cuts still being on the table would certainly help the story here today. But we'll have to see what happens. We're just about a minute and a half away.
Yeah. That's another thing too, though, back to that daily chart on the S&P, is that it just keeps, it kept chugging higher on this trend line. And now that it's broken, it kind of looks like things are rounding out. It looks like the bullish steam has worn off. So even if today is a good day, I still think we're kind of done with this bullish rally that we had from back in October. I think now it's going to be choppiness, and maybe it'll be a volatile way up and down all the way to the next level of support. But yeah, I think the thesis that we had going in for the last several months of buying these dips it might be over.
Yep, exactly. And also somebody just asked, where can I watch FOMC live? Just again, this is not a speech. This is not a press conference. This is the meeting minutes, which are notes that come out from the Fed. You're in the right place. We are going to be giving you guys the best coverage we can with this number, or not this number, this report that comes out here in the next minute. So real quick, we'll go ahead and roll our breaking news, and then we'll get into it. And I got my Twitter feed up. Frank, if you see anything, I'm just browsing Twitter to see what the markets get out of this, if anything, right? Could go really either ways. And this is not usually a spike reaction. It's usually kind of a market processes this data for the next few minutes. So not this data, this report. So I'm looking for any updates.
Yeah, I am too.
And people in the audience as well, if you guys find anything, if you find any summarizing notes, please share it with the audience. I'll pull it up on the screen for everybody.
I'm really bad at finding news.
Yeah, me too. It's kind of tricky for these because you're looking for like some news outlet to put out some of the findings, and that can take a minute or 2 minutes, couple minutes.
Yeah, there's nothing I see yet.
Yeah, I'm just waiting as well.
And the market is too.
Yep, nothing super intense here yet. I've pulled up hashtag FOMC here on Twitter.
Okay, it's out now.
Almost all participants at Fed's March 19th through 20th meeting judged it would be appropriate to pivot to less restrictive policy stance at some point this year. Thank you, Alexis, by the way. Fed Minutes participants generally noted recent data had not increased confidence that inflation was moving sustainably down to 2%. There's not a speech, Rob. This is not a speech event. This is just a a document that gets released. We are digging through it right now. Fed minutes. Participants generally noted uncertainty about persistence of high inflation.
So
CPI data came out this morning.
So has anything changed? They still have their path of loosening monetary policy at some point this year. However, this is related to their March meeting.
Yep.
This was before CPI came out, correct?
Yes, you're right about that. Still just looking for any updates we can. Keep sharing them if you guys find something that we don't see. Meeting minutes are out now.
Yeah, and that's all that was shown.
Okay, I got them pulled up. Recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained strong. Unemployment rate has remained low. Inflation has eased over the past year, but remains elevated. Committee seeks to achieve maximum employment and inflation at the rate of 2% over the long term, ... In support of its goals, the committee decided to maintain the target range for the Fed funds, ... at the same rate. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. Committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. Committee's assessment will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. That's interesting. Voting for monetary policy actions were, of course, all the members, and decisions regarding monetary policy. Board of Governors of the Fed voted unanimously to maintain the interest rate paid ... As part of its policy decision, the FOMC voted to direct the open market desk at the Federal Reserve Bank. I'm trying to find anything that is being picked out. Almost all members agreed it would be appropriate to pivot dovishly in 2024. Some participants noted concern that financial conditions might not be as restrictive as desired, which could put upward pressure on inflation. Very, very interesting. So far, market reaction has not been very much. What that would tell you is nothing too surprising to the current expected narrative.
Yep, I agree. But I still think this is still leaning bearish, in my opinion, for the indices.
Yeah, it seems like just a slight more mention of, I mean, that thing about policy may not be restrictive enough. If that becomes a theme, that would be big.
Yeah, and then once they switch narratives, or if they switch narratives, which I don't think they will, in terms of tightening,
yeah,
I think they'll either hold off or just reduce the amount of cuts they want to do. But yeah, if we do see that flip of, okay, maybe we need to be tighter in the future instead of focusing on cuts, that would probably destroy the markets.
Yeah, that would definitely be concerning on that front. So far, it doesn't seem like it's a huge event, as if we needed one. Today's been very volatile overall. Meeting minutes doesn't seem to have really changed the story too much. We got 1,550 people here. Thank you, everybody, for hanging out with us. We are continuing to monitor anything that comes out that is market moving. For now, going to kind of just default on what we've got from the Edgefinder. Just a reminder for those of you guys who are hanging with us live, Currently, the Edgefinder is 45% off. It is our biggest discount of the entire year. If you have not already taken advantage of the discount while it's there, you can get our software tools that we build here at A1 Trading, get our commitment of traders data, retail positioning, fundamental and macro data, as well as our top setups algorithm. All of this is available within the Edgefinder. If you don't have a copy, we're going to drop a link here right now where you can speak to someone on our staff about getting yourself one and take advantage of the discount just by shooting us a DM right here. Frank, I think that's probably it. We probably covered everything. Today was a wild day. We saw Fed expectations kind of switch towards a September rate cut being the first one now. I mean, this is a different narrative. And Frank, I think, you even more so than me have been calling for rate cuts, but like way out. And we've kind of been right about that. I was thinking that when people were saying March, I was like, no way it's going to be March. And we were right about that. But now it seems like we might not even get rate cuts till September, which is a big change. But maybe you're less surprised than I was, even because you pointed out, inflation's just how can you be talking about rate cuts when inflation is staying flat? And today we got more confirmation that it is, in fact, not only staying flat, but actually rising even. So I don't know. We'll have to see where it goes next. But Frank, thanks for joining on the stream with me, helping out here to run it into the end. I guess we'll let you go, and we'll see you back tomorrow for PPI.
Okay, sounds good. Thanks.
All right. See you, Frank. All right, guys. Again, that's going to wrap up the stream here. That puts us at 5 hours, 55 minutes since we started this stream. That is just a crazy long stream. I just want to shout out and thank all of our guest hosts that came on throughout this 6-hour stream. Everybody from Frank, Chris, Marco, Miko, Ivan, Kenzo. Do we have anybody else? James, Chandler, everybody pitched in to make this stream possible today. What a fun stream. I don't know if you guys enjoyed it as much as we did. Can I ask everybody in the audience, how long did you watch today? Let me know if you're somebody who watched, did you watch for an hour? Did you watch for 20 minutes, 30 minutes, 45 minutes, 6 hours? Let me know, how long did you guys watch the stream for? We appreciate you guys as an audience tremendously. And we're just proud to be able to do this every day. We have so much fun doing it. So 4 hours, that's awesome. Did anybody just leave the stream up all day long and listen to everybody's thoughts? I think that's so cool that we just had so many different people rotate in and out. It was awesome. Since Miko was on. Okay. So that's basically like 5 hours ago. That's awesome. Anyways, guys, remember, last call. This is truly your last call for 50% off the Edgefinder while we are doing it only on this stream. We are usually doing 45% off for the discount, but today only, just for this stream, for CPI and FOMC, we are doing 50% off of our software. I'm telling you, if you've been thinking about getting a copy, do not hesitate. That is the best price you'll ever get on the Edgefinder. Take advantage. Click the link being dropped in the chat. You can send a direct message to our team and get yourself half off the Edgefinder before that discount ends. You guys rock. Thank you. Thank you, guys. Appreciate you guys. Shout out to everybody in the audience with us. We had a lot of fun. I hope you guys did too. Have a wonderful rest of your day. Trade safe. And we will be kicking it back off tomorrow for producer price index as we get into wholesale numbers. Tomorrow's inflation numbers will also be very important. We will see you back then. Thank you guys very much. Have a great rest of your day.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the Edgefinder for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.